for it. Wait for it. Up, where is it? How come it's not loading? Up, wait for it. Oh, there it is. Good morning, ladies and gentlemen. I hope you're having a wonderful day if you're watching this and it is not say live at the bottom of the screen. Unfortunately, you're watching the recap. The good news is we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. Make sure you're subscribed. You're on mobile. Press hot chat. X out the chat. Hit the thumbs up button. Second link for the nightly Watchlist and main channel. First link for the Scream Alerts Bootcamp and real estate course. But, ladies and gentlemen, it's going to be a weird one today. We have Jerome Powell, 30 minutes after the bell. Once again, the Fed has already confirmed his speech that he's going to give in the beginning. It's going to be identical to what we had yesterday. There is like 2 or 3 other Fed speakers, but now there's not much other data, and then we are waiting until the big data comes out tomorrow, and then Friday, and then it's earnings, and then the market could get into its 1.3% that it's priced in. But all in all, it should be a simple day. You got people responding to bonds and equities and a few other things. China inflation wasn't that big of a deal, but some of them China names did keep going up, so we'll see how that plays. But other than that, it's a little bit of what we dealt with the last couple of days. Chip and earnings are probably going to be the leader, and then we meander until we get the data. So, Chatadonia, I hope you're ready for it. I hope you're locked in, but tell me, my friends, how is your morning doing? Good morning, baby. What's going on? Oh, yes, it's Wednesday, baby. What up, Ken? Cyclops winning, baby. Yay, yay. Ansel, Carissa, Zoraz, Mark, Humble Business, Candy, Upton, Caballero, El Trapato, baby. Good morning. Good morning, Mopar. Good morning, Tom, Laker, Jay. Good morning, Monica, Troy, Tim, Ken, Kenny, G33, baby. What's going on? What up, Trav Life? Jared, will ya? Oh, my goodness. Good morning. Top of the morning. Top of the morning. Stop it. Silazi, Dan Kingsley, Kenny Miranda, baby, Mark J, Keep It Real, Chatadonia, Ken Taylor. What's going on, baby? What up, Pepe? What up, Mark J? What up, Kurt McGirt, Tony Garlinger, Awaz, Jamal, Hypno, James Cash, baby. Oh, my goodness. Good morning, baby. Happy Wednesday. What up, NRG? How you living, Osha? What up, CJ, Nichols, baby, Apple ATM, Lucky J, Carlos, Big Dizzle, Cody Phillips, Me Not You, Oprah? We got Oprah Wind Fury. Oh, man, sound like a boxer mixed with Oprah. What a Trapper Wolf. Gunner, Buffalo, Big Carly, baby. Joe, what's going on? What about the Twitch? What about Yuto Swami, Liberace, Glenn Cocas, El Coyote, Lemur, Mr. KJ, Damn Royalty, Z Destroyer, Citrix, Blowing Doll, Sneaky CDN, Mother Liquor, Sardonian, Robo Handtech, Blazing Bob, and Robo Handtech, baby. Oh, my goodness. So good morning, Chatadonia. I hope you're ready for a glorious Wednesday. I do have some headlines for you, I believe. All the headlines, all the good stuff, you know. You'll be good to go. You'll be good to go. Where is it? Yeah, and like the video. Oh, wait. Yeah, like the video. We got the wire up. Oh, no. We need likes for that shit. You know what I'm saying? You got to like the video. Yeah, liking the video is great for you, bro. It gets you play. Get everything you need, bro. Everything you need is unlocked with the like, baby. So good morning. But yeah, here it is. S&P futures signal endurance to rate-fueled rally. Stock futures pointed to a longer advance for the S&P 500 as investors sought vindication from Federal Reserve Chair Jerome Powell for bets on monetary easing. Contracts on the S&P 500 futures rose 0.3%, while those on the NASDAQ 100 added 0.4%. Treasuries advanced with yields on 2-year Treasuries near a 3-month low. Tesla Inc. was set to extend gains for an 11th consecutive session as Goldman Sachs Group Inc. analysts raised their price target following better than expected deliveries. In his address yesterday, Powell emphasized mounting signs of a cooling job market, but was careful not to offer a timeline for easing. Swap traders continue to project 2 interest rate cuts in 2024, the first in September. Further congressional testimony by Powell on Wednesday and key U.S. inflation and jobs data tomorrow may provide further clues on the policy path. The S&P 500 has already clocked up its longest winning streak since January. Ahead of the latest print of the Consumer Price Index, bets on a steeper U.S. yield curve are gaining attention. The idea behind the trade is the belief that rate cuts fan economic growth and inflation, which push down short-term yields and drive up longer-dated ones. Expectations for loose fiscal policy also bolster the view. We're in position for curve steepeners, Nicola Mai, sovereign credit analyst at PIMCO, said in an interview with Bloomberg TV. This year or early next year, we should be getting to that disinversion of the curve for a couple of reasons. First of all, rates should start to fall. Also, I think the long end of the curve is going to remain high on fiscal concerns. In the pre-market, NVIDIA Corp rose on evidence. The AI boom continues to gain momentum, with its chip supplier, Taiwan Semiconductor Manufacturing Company, reporting surging sales. 3M company slipped after saying its CFO resigned. Air Products climbed after Honeywell agreed to buy the company's LNG unit. Powell trade and markets were calm on Wednesday after Powell said the Fed is wary of potential risks to the labor market, even though it is seeking more evidence of slowing inflation. Treasury yields were little changed, with traders building bullish wagers on a bond rally every single day so far in July. Powell will speak to the House Financial Services Committee later on Wednesday. Meanwhile, U.S. equity futures and European stocks extended gains after the S&P 500 hit its 36th record high this year. By OpenAI, Microsoft and Apple have relinquished the chance to be observers on OpenAI's board in a surprise decision. Microsoft, which has invested $13 billion in the creator of ChatGPT, sent a letter to the startup to announce its withdrawal from the board. According to a person familiar with the matter, Apple had been expected to take up a similar role, but an OpenAI spokesperson said the company will have no observers after Microsoft's departure. The decision comes amid growing scrutiny from antitrust regulators on big tech's influence over artificial intelligence. Chip boom. Demand for AI has boomed so much that it spurred $3.5 billion of exports of chips and related equipment from Taiwan last month, a 422% surge from a year ago. The U.S. was the biggest customer for chips, with total shipments in June up more than 74%. Taiwan is home to TSMC, the world's most advanced chip maker that is the main supplier to the likes of NVIDIA and Apple. Taiwan continues to ride the coattails of the artificial intelligence boom and cyclical tech cycle rebound, which will likely support exports in the coming months, said Gary Ng, a senior economist from Natixis. Divided Democrats. The picture remains unclear for investors trying to trade the U.S. election, while congressional Democrats continue to weigh whether to stand behind Joe Biden's candidacy. The White House is trying to shift the focus from the president's mental acuity to Donald Trump's policy goals. Many Democrats parried questions about Biden by invoking Project 2025, a suite of policy proposals drafted by the Conservative Heritage Foundation for Trump to pursue if he is elected in November. The proposals range from gutting the federal civil service to blocking efforts to fight climate change, which Democratic Party members say are likely to alarm undecided voters and push them into Biden's camp. China boost. China's top leaders will convene at a high-profile gathering next week, which some analysts say holds the potential to boost a languishing stock market. The MSCI China Index has entered a technical correction, while a gauge of Chinese equities listed in Hong Kong is flirting with the same milestone, yet the third plenum, along with earnings progress, should help catalyze an expansion in valuations, according to UBS's Yifan Hu. That said, history shows the performance of the Shanghai Composite Index 1 week and 1 month after previous meetings have often been lackluster. Top overnight news: China's CPI cools by more than anticipated in June, coming in at plus 0.2% versus the street plus 4%, and down from plus 3% in May, while the PPI was in line at minus 0.8%, up modestly from minus 1.4% in May. RTRST. The Reserve Bank of New Zealand held its official cash rate steady at 5.50% on Wednesday, staying in what central bank governor Adrian Orr likes to call watch, worry, and wait mode. Still, the RBNZ's cautious narrative softened somewhat amid an admission that inflation pressures are starting to ease. WSJ: Russia is unlikely to make significant territorial gains in Ukraine in the coming months as its poorly trained forces struggle to break through Ukrainian defenses that are now reinforced with Western munitions, U.S. officials say. NYT: Saudi Arabia privately hinted earlier this year it might sell some European debt holdings if the Group of Seven decided to seize almost $300 billion of Russia's frozen assets. People familiar with the matter said. CNN: George Stephanopoulos, the ABC News anchor who recently interviewed President Biden about his fitness for the presidential race, was caught on camera Tuesday indicating that he doesn't think Biden can serve another 4 years. Biden delivered one of his strongest recent public appearances on 2SC during remarks at the NATO summit. Although the world will be watching the press conf he plans to hold on Thursday, CNN: Having spent the last week and a half in various stages of private panic and public skepticism about Mr. Biden's viability as a candidate and whispering among themselves about what the best way to push him aside might be, a strongly worded letter, a White House meeting, a high-level intervention, top Democrats on Tuesday settled on a strategy many of them conceded could be disastrous. They would do nothing, at least for now. NYT: Microsoft and Apple relinquished the chance to be observers on OpenAI's board in a surprise decision that underscores growing scrutiny from antitrust regulators over the relationship between big tech and AI. BBG: Apple saw big PC unit growth in Q2, plus 28%, while HP Inc. rose 1.8%, and Dell dipped 2.4%. IDC. He's been tweaking out a little bit. Every now and then he been kind of going a little cuckoo. I don't know. It's the AI baby. Like the video. Good morning. Good morning. We have more. S&P futures, they are up by 0.2. Wednesday morning trading comes after U.S. equities put in a mixed performance on Tuesday, though S&P, is that? Oh, I saw it in the corner of my screen. Oh, ladies and gentlemen, boys and girls, Bradley Frizzle in the peach pre-market. Oh, no, oh my goodness. Oh, man. If that don't get you liking the video, if that don't get you standing up, bro, I don't know what will. Oh, my goodness. Oh, my goodness. Peach Nation. Bradley Frizzle, God bless you, my man. Good morning. Good morning. Mixed session on Tuesday, though S&P and NASDAQ are both up for a 6th straight session. S&P recorded 36 all-time high of the year. Banks Capital Relief Report among the best performers, while NVIDIA and Tesla, the big tech standouts. Treasuries firmer with a bit of curve steepening. Dollar down by 0.1. Gold is up by 0.7. Bitcoin up by 1.3. And WTI is down by 0.1. Markets still waiting for CPI on Thursday and bank earnings on Friday. Path of least resistance has been higher, with combination of economic soft landing and near-term Fed easing expectations as a key driver. Strong inflow trends, favorable seasonality, depressed volatility, AI secular growth themes, select big tech strength, and expectations for some broadening of earnings growth in Q2. Some of the other recent tailwinds, however, macro narrative still volatile, positioning sentiment stretched, flow and seasonal trends start to shift later this month. High bar for Q2 earnings and continued scrutiny on gap between cap-weighted and equal-weighted S&P. Fed Chair Powell testifying on monetary policy again today. Nothing particularly incremental in yesterday's remarks, though takeaways leaned a little bit dovish with reiteration of disinflation traction. Also noted inflation, not the only risk, and said labor market appears to be fully back in balance. Fed Goolsbee and Bowman scheduled to speak this afternoon. Former recently noted that inflation is on path to 2%. Economic calendar quiet ahead of CPI tomorrow. Street expecting core CPI to go up by 0.2 month over month in June, which would leave the year-over-year rate at 3.4. Treasury selling another $39 billion of 10-year notes today. Microsoft has given up its observer seat on OpenAI board. Apple saw a 21% increase in PC shipments in Q2, the biggest gain among global PC makers. TSM Q2 sales beat expectations on AI tailwind. UPS names new CFO. 3M had their CFO leave. CMG announced CFO transition from March 31st. APD boosted by sale of LNG unit. 3M CFO resign. LZ under pressure after CEO resign and company lowered 24 revenue guidance. GT reportedly in talks to sell the off-road business to Yokohama Rubber for $1 billion. SGH earnings beat with IPS a bright spot. Island Capital offered to acquire YMRS business from HZO. And I think there's more. That's crazy though. 3 or 4 different CFO, CEO, leaving today. That's kind of wild. Fed Chair Powell warns on two-sided risk, including considerable cooling of labor market. Sources say Bank of Japan will likely trim 24 growth forecast, but project inflation will stay around its 2% target for coming years. Japan Bank brokerage view of BofJ JGB purchase reductions vary widely. RB&Z on hold opens door to rate cuts. Storm Beryl causes power outages and flooding in Metro Houston. Biden raises FEMA flood resilience. China CPI unexpectedly weakens as deflation risk persists. Japan wholesale inflation rises in line with forecasts as weak yen lifts import costs. Traders accumulating bullish positions in treasuries ahead of Powell, U.S. CPI. Prospect of near-term Fed cuts bolstering case for further bullishness over U.S. stocks. Short sellers made $10 billion in paper profits in Q2, underlying breadth concerns with biggest gains made outside of tech. Hedge funds have averaged just 5% return so far this year compared to the S&P's 15. Goldman Asset Management expects U.S. economy to grow at 2% in second half of 24 with equities flat. JP Morgan says Thursday CPI could add volatility to recently subdued market. China bond traders ready for PBOC to start pushing back on record low yields. Apple records 21% increase in Q2 PC shipment. Microsoft and Apple relinquish chance to be observers on OpenAI board. TSMC's sales grew at the fastest pace. Oracle reportedly ends a $10 billion server deal talk with Musk. Goodyear in talks to sell off-road business to Yokohama for $1 billion. Moody's may cut Paramount credit rating after Skydance. Volkswagen issues profit warning, triggered in part by possible closure of Audi plant. Top Democrats signal unwillingness to abandon Biden. Progressives and Congressional Black Caucus members among the loudest backers of Biden. Democrats try to change subject from Biden's mental acuity to Trump's policy goals. Biden says Ukraine will stop Putin in forceful NATO speech. China starts retaliatory investigations into EU trade barriers. And France Macron faces divisions in bloc over election. Former PM Philippe seeks center-right accord for government. Wow. And Gasman, what's up, baby? Oh, a $20 peach? Yo, it's not Bradley Frizzle, but I love you, baby. Good morning. Good morning, Jadadonia. Wow, that's a lot. That is a lot. So, we have a little bit of time here. I do have some pre-market movers. I might use this, though, as an S&P, 7th day of gains. You guys know 36 record high. Apparently, we're back to the same daily streak as the beginning of the year. That's the word on the street, man. Yeah, like the video. I don't know if we have enough time, bro. Oh, the likes, man. I know, the wire, it's okay. He'll get a rest today. You know, let him relax. But I'm going to be right back. Like the video, unlock everything, and I will BRB. Follow me on Instagram at The Trading Fraternity. And good morning.
And do you think that repositioning may perhaps be already priced in?
So we think there's a slow repositioning already happening, and we are seeing more demand for longer durated fixed income, particularly some of the sectors like investment grade credit, where there's incremental yield beyond just treasury rates. And we don't think this is going to be a tsunami, because even if the Fed does cut by 50 basis points, you're still going to see money rates that are, 4 handle, maybe even a low 5 handle. So it's not going to be, a quick change. But we do think that there is valuation in rates right now. We do see that there's volatility there, so it may take a little while to realize that duration bet, but that would be one of our favorite trades for the back half of the year.
And if you don't get that September cut, you kind of made this warning call here that every day that goes by without a cut and that rates stay high, it creates a greater risk of a greater downturn. How much room does the Fed really have, in your view, before causing something greater in terms of a downturn?
Well, they have some wiggle room here, but the big thing would be that they'd have to respond more rapidly and more intensely if they keep delaying. So there also is this trade-off where if they don't move in September and then you start to get into, closer to the election period, and again, the Fed's not a political animal, but by the same token, they're going to be watching what they do very carefully, then all of a sudden you might have a very sharp fall off in economic activity or a sharp increase in unemployment rates. And then they've got to act a lot more responsibly. And will they be willing to do that?
Lori, it is so great to speak to you. Really appreciate you joining us on our launch week. That, of course, is Lori Heinl of State Street Global Advisors. It's so interesting to speak to Lori. Of course, we spoke to Torsten Slok yesterday.
Lori.
His big call is that the Fed doesn't cut rates.
Cheridonia. Good morning. Like the video, baby. Like the video. Oh, yeah, we got to made some progress there. But we got a couple of pre-market movers. So let's start it off with Carvana. They're up by 3.8. Needham upgrades to buy. Illumina is up by 3.6. Citi upgrades to buy. Acquires Fluent Bio. No terms. Baidu is up 3.3 off nothing. APD is up 3.3. Honeywell confirms agreement to acquire Air Products LNG business for $1.81 billion in cash. Tiva is up by 2.8. Argus upgrades to buy. TSM is up 2.4 on June revenue. Literally up 32% year over year. Agilent is up 2.2. Citi upgrades to buy. ANET up 2. NVIDIA up 1.8. NEM up 1.5. CCJ up 1.5. Micron is up by 1.3. Samsung Union Strike. SGH up by 7.6 off earnings. GRFS up 7.1. Grifols family and Brookfield reportedly differ on terms of joint takeover bid. FLNC is up by 3.7. Truist initiates buy. ARQT is up 3.3. FDA approves Zorvay roflumilast cream of 0.15 for the treatment of atopic dermatitis. NAAS is up by 59.7. Longeveron up 22.6. FDA grants Lomacel B RMAT designation for treatment of mild Alzheimer's disease. CGBS is up 22.5. Crown LNG AS completes business combination with Katcha Investment. AEHR is up 17. Preliminary Q4 results. MNOV up 11.7. FNGR is up by 10.8. AFCG is up by 9.8. SERV is up by 9.2. ASRT is up by 8.7. AMLX is up by 7.3 off of earnings. Bitcoin is up by 1.07 off of IREN and Mara. Or literally all the other Bitcoin names. Select European ADRs trading up by 0.5%. AVTR trading lower by 2.6. Citi downgrades to neutral. Spotify down by 1.3. Redburn downgrades to sell. Visa down 1.3. Bank of America downgrades to neutral. MasterCard down 1.3. Bank of America downgrades to neutral. LZ LegalZoom down 28. CO departs immediately. Guidance and downgrades. TXG down 10.9 in reaction to Illumina acquiring Fluent Bioscience. Deutsche Bank downgrades to hold. RSKD down 5.7. Goldman downgrades to sell. INDV down 4.6. Follow through business updates. IDYA down 4.2. $200 million priced at $35 a share. Preliminary Q2 cash and equivalents. Helen of Troy down 1.7. Follow through on yesterday. DA Davidson downgrade to neutral. ZAP down 21 off nothing. SDST down 17. SD down 5. SUGP down 15.7. And HPP down 4.3. Morgan Stanley downgrades to underweight. Wow. It's a lot of plays. But I feel like not that many headlines in a weird way. So good morning. But Chatadonia, we've already got our bathroom break. We actually got a little bit of time. You still have about like 7 minutes to get under 300 likes. Wow. Wow, it's tough, baby. It's tough. But Chatadonia, you're here right now. I don't know what the lady said on the TV, but without the TV or not, do you have a play? Because it's time to post your first play in the chat. What do you got for me, baby? ARM and AMD. Teladoc $9 calls. Long-term hitting all-time high. NVIDIA, SPY calls. TSAM, SPY call. Tesla call. NVIDIA call. AMD, Apple call. Pinduoduo, TSM, AMD, NVIDIA, Tesla call. NVIDIA calls. Pepsi puts. Billy, SoFi, SQQ, Apple call. More TLT, NVIDIA, Intel put. Tesla call. Airbnb call. Holding on to GLD. NVIDIA call. Apple put. Longeveron shares. Intel long. Microsoft call. 100 or 10-day expiration. NVIDIA. Like button calls on Jack in the Box. SMCI, Longeveron, Microsoft, Intel Tap, Spy Call, Arm Put, SQQ, Longeveron, TSM, Baba, GME, Nike calls, 100 shares of Hell in Detroit at Flip, watching on Facebook, Eli Lilly calls, Let's Go, NVIDIA, Uranium, DJT, MPW for the long term, CRSP, AHR, Costco 900, Meta, long term, AMD calls, Meta call, and the final plays. Bruh. Double dip Intel, shorting QQQ, FSLR, gold, Amazon calls, and DraftKings, baby. Wow. I feel like a lot of calls, but then I saw some arm puts. A lot of, I feel like chip puts and then calls on everything else is what I don't know. Maybe ask the AI chat. Give me the recap, AI YouTube. Tell me what they said. But chat, Adonia, it's game time. And here at the Cult, before we do anything, before we try to chase a dollar, before we try to enrich ourselves, before we even like the video, or maybe you like the video already, we must pay homage to a very special group of people that has made a sacrifice that most of us never have and ever will, and I am talking about the veterans of the United States of America. So on behalf of the Cult, the people here, the people not here, I want to give a huge special shout out all the active servicemen, past servicemen, anybody who has served this country, even the families. For real, thank you for your sacrifice. Thank you for your commitment to this country, for all the things that we've taken for granted and we enjoy because people made a sacrifice before us. I hope I can say thank you. I love and appreciate all of you, and I hope every single one of you brings this into real life, baby. Show that love and appreciation to the veterans and those who deserve it. So veterans, thank you, and big shout out to anybody else out there giving back to their local communities, all the doctors, nurses, teachers, firefighters, police officers, the janitors, the garbage men, the coaches, anybody making their community run, baby. God bless you and thank you. But Chatadonia, ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Send the digits! Oh, it's game time, baby. Oh, no, let's go. Oh, Chatadonia. F-16s are en route from Denmark to Ukraine right now. That sounds aggressive. Is that like a new war headline, or is that like they're just like transporting them? Or are they like intercepting something? Oh, man. But Chatadonia, yeah, we got 2 minutes now until the bell. The Jets have been sent. I actually got a couple of pre-market plays. So where are we? Oh, the likes, baby. You got 1 minute to get 100 likes. Less than that, not even. I think it's like 50 likes. Oh, my goodness. This one's close, but I'm going to be watching ES and NQ first hour, then Baidu, Dell, Intel, Meta, Chipotle, 3M, and then TSM. But like we talked about yesterday, maybe a lot of the moves might happen in the pre-market. I sold out of that ES2. I made a trade at the end of the day yesterday. I got out of that with a very good profit this morning. So I'm still holding my gold in my bonds, my gold bond plays, and that is about it. And then we'll see. And then after today, today's the last day of boring. And then it gets crazy. You know what I'm saying? And then we get to the data, baby. And then it starts to get fun. But we have 1 minute until the bell. Oh, my God. You need 10 likes. I think you guys got it. I think you're going to do it. It started off right. I didn't think you guys were going to get it. I felt kind of bad. I was like, that's going to suck. I felt bad for those. But no, you guys are going to do it. They're at 999. You're literally at 999, baby. You said you'll be making NQ plays. Yeah, I'm going to be watching ES and NQ at the first 30 minutes. Otherwise, the end of the day. So that's what I did yesterday. I don't know if you heard it. It went bling in the last like 5 minutes, and I made some good money just by buying at the end of the day and then selling pre-market. So we'll see where we open up at, but I'm open to some EQ, ES, and NQ. Am I going to pair trade them? No. I'm just going to go after one or the other, depending on which one is up a lot or kind of the theme. And like the theme this morning seems to be chips again. So I'm sure the NASDAQ will outperform. And then I don't know where oil is, but 5 seconds, Chattadonia. 4, 3, 2, 1. Round 1. Fight. All right. So let's see where we're at. Gold is doing very good. Yeah, the NASDAQ's up by 0.4, bro. Small Intel pop, Nike flush. Intel's still red on the day. Again, Meta got a bunch of upgrades there. And then that news out of TSM and Apple is big. So literally Apple PC shipments have came up out of nowhere. And then now TSM is like, yeah, we're making 30% more than last year. That's a lot. But all these TSMs are mad expensive, homie. Yeah, you gotta watch out. GME, Starbucks back at 72. No way. MO is on the high in the early again. Apple, TSM. Yeah, I mean Longeveron has good. What's the news? Alzheimer's. So I don't know. That was kind of decent there. Visa dumping. I'm trying to see here. Oh, did I not send those out? I thought I did. Nike dumping, no position. And then SPY. I think I'm probably going to go for the NASDAQ. It's weird. SPY's like red, but I sold out of the SPY this morning. Or I guess futures are up a quarter. This SPY may not be updated. Or the Dow's the one at break even right now. Starbucks is dancing around. Again, it was at 72 like flat. I'd wait for that, but it is already lower there. Yeah, Baidu is just unreal. I wish there was a headline. There were some people talking AI on it the other day, but I really don't think that's it. I think it was just the China data and some of that momentum. There is that China meeting, but usually the China stocks don't do good after it. But yeah, Baidu is back up to 100 here. So again, it was just at 80 2 days ago. I think you do have oil numbers, yeah, a little bit later. And again, Powell's going to be up in 30 minutes. But remember, Powell, the speech is exactly the same as yesterday. There's Intel starting to take off a little bit. Microsoft and SPY coming down. NASDAQ already dropped a little. Again, that's the one leading. Let's see. Those Intel plays are doing good, but I think we're all Intel'd out. Apple is going nuts. New record high on them. Well, that's going up. I think 5,600 we pump it up. Disney on the high. Nike found a way to come back up. Literally hit 72. Now it's up 50 cents. Yeah, CMG was one of those CFO leaving. Again, a lot of companies. JP Morgan and banks on the high. They're actually, some of them are red. JPM's still in the red. Citi's going up there. Tesla. I forgot. Tesla's still holding up. This is like 11 days in a row of Tesla. ARM on the low. Yeah, they're down by 2.8. Meta's still holding. I don't know. Let me check ARM again. But ARM, if the premiums weren't so jacked, I would play it. But very, very hard. Then Intel dancing around. SPY here at the low. Jerome, where is it? TSM. They're up by 1.8. Nvidia's up by 1.5. Honestly, these are all looking pretty good. I think, where's Google and Microsoft? No, they're all up. I'm surprised the NASDAQ's not up more. Micron's starting to break out here. Yeah, bank earnings are on Friday, and you're already getting movement. And, I mean, Delta and Pepsi, those are literally going to be tomorrow morning. TTD at the highs. That got the Josh Brown pump yesterday. Yeah, TTD 102. There's Micron again breaking out. I'm surprised Dell's not higher. AMD, they're still holding up. Pfizer is running up here. Pfizer at 28. Airbnb. Oh, yeah, how is the random play? It was down yesterday, but I think after today. That was really good Apple news. This whole, it's kind of weird. Again, them selling that many more PCs, and then even TSM going up like that, kind of wild. I need to open up my other portfolio. It's no loading. It install an update. Why you install a Grand Theft Auto? Why take so long, Habibi? Apple, another 52-week high. MLGO. That one's on the high. Longeveron, are they still up? They were only up 20 in the morning, and then they shot up to 100. Again, that has I keep forgetting, ironically enough, it's Alzheimer's. So remember, it's a big deal. Tesla on the low now. SPY coming down. Visa trying to get back. ARM, I need to look at those. It just sucks. Anything that goes past ARM earnings is just unaffordable. So you got to watch out on ARM because there's cheap options, but they don't cover earnings. So if you want to go the week before earnings, ARM plays are cheap as hell. But anything after that, there's no such thing as a cheap contract. Best you could do is a spread. Nah, Jeveron Games. Airbnb. Nike, I don't know, man. Nike did this exact same thing yesterday, but at 74. So it hit a new high for the first hour and then just sold off, you know? MPW, nice greens. And then watch Tesla. That one just went negative. Let's see. All of these all-time highs, Habibi. Yes. Traders trim Bank of England bets. See less than 50% chance of cut in August. Oh, there it is. Man, 55.9, no way. We did it again? So you gapped up into a new all-time high. Literally every other day you've been doing this. All right, I'm still waiting. Again, if I don't get an ES or NQ play, I'm just going to do it at the end of the day, unfortunately. And then Tesla's starting to pop. First solar on the high. And then there's a Nike still. Very, very weird mix today. We'll see here in a little bit. It's only been 8 minutes, but the breakdown of the day is quite odd. Chewy pop. But you can't stop. Yeah, Chewy is waking up there. 1.8. Thank you for posting if you have a position or not. So I see y'all, baby. Bank of America is still going up. There's just a couple of biotechs doing Alzheimer's. Biogen, that's one of them. And there's a smaller name I'm blanking on, but I know Biogen, or Regen, I think, too. Biogen and Regen, and they're huge. Again, Alzheimer's is a very difficult drug, and there's nothing really approved for it. So that's why it's like, if you actually get anything in that space and it's actually good, then I think Sava, it wasn't even Sava trying to do it. The bond auction, 10-year, I believe it's same time, 1 p.m. It's another $39 billion. Again, double the size of Kellogg's. All right, there's your little bounce there. A couple of names, Tesla. I mean, the chip makers, they're already up there. Again, that TSM news and Apple, that was your big driver here in the morning. But NASDAQ's up 0.4, SPY up by 2.2, and then Dow barely green, and then Russell, believe it or not, leading, but NASDAQ is about to overtake it. Crowd. Was the other one TTD? Chewy still going up there. Again, it had that pop yesterday, and then nothing. And then bonds, that's crazy. I was up a lot more on the bonds in the morning. So the bonds are still meandering around. Broadcom pre-split. I think it kind of had an opportunity unless it's cheaper than a couple days ago. I wouldn't really touch it. But low-key, I think after that earnings and run-up, yeah, it hasn't really came down. Maybe if it gets back here to like 1640. But I don't know if you'll get that lucky. Otherwise, it's just a game of musical chairs on the split. Did Intel come down? The bonds aren't crashing, no. They've been actually going up every day of July. But just from pre-market till now, it was a big difference. Like, I think I was up like 1,500 pre-market, and then now I'm back down to 250. Like, down 250. Bro, Tesla just keeps running. I keep putting up 2 of those. Intel calls are doing good. I think the first set of them, I don't know where the second set went. But Intel is actually like, it's kind of going slow. And then Nike coming back down to red. Pfizer breaking out. Where's MO? That was on fire. Still up 0.4, but he's chilling out. Pinduoduo trying to die a little bit. I see what you're saying. Kind of weird with all the other names. And then Baidu's going nuts. And then Marvel now, another chip name. Yeah, bro. Baidu, another 6%. So literally yesterday was like, what, 6 or 8%. And you just did that there on the gap up. I'd watch out Euro close. It's either going to go up 10% or it's going to die and go back to break even. Absolutely wild. And then bonds are getting a bid right now. NASDAQ's working its way up. MU good. Depends when your or what your brokerage is, but you should have already got your MPW. So some brokers take some time. I actually don't know. I don't know if my MPW came through on Schwab, but my dividend already paid out on what's it called? It came out after the other. It came out on Fidelity. Let's see. Yeah, I already got mine yesterday. The Powell testimony is the same time. That's going to begin in 17 minutes, but unfortunately, it's not that. It's going to be the same exact statement that we had from yesterday, and then that's it. It won't. It's going to be very boring again, and even his pre-written statement now is going to have less of an effect. It's in room 2128 for those of you who are interested. All right, NASDAQ coming. NQ is about to go back to the high. That's the one I've been eyeing here. Big pop on Chewy. Chewy. Which is the big pop in the room with us? Because this one happened when everybody spammed it, but is this other one, do you see him? Is he available? Does he talk back to you when you see it? Mm-hmm. Are you clapped from yesterday? No, I still see you. But I think you did get clapped yesterday. It's probably joking during PHILO. So that shouldn't surprise you too much. All right, there he is. There's your pop. We found him. I think he was in the room with us. There you go. I'm proud. Good to see. Good to see, baby. Good to see. I need $4 more a share to go break even on this piece of shit. And then NASDAQ rocketing up here. NATO leaders expected to call on China to cease all material and political support for Russia's war effort. Oracle green. Bonds going red. I think that's the interesting part about this one, too. Kitty back on GME rumors. That was the rumor from, again, I think options. So remember yesterday you guys pointed out the Chewy options. The same type of option trade was on GME, too. So people have noticed in the last 24 hours very weird ones. You only said your name was Chad, so my bad then, if you weren't joking. So you know in your heart then you weren't making any mockery or joke. You were just saying that for no reason. If so, my fault. But if not, shame on you. Nvidia.com. So that's about to break out too. Again, NASDAQ literally near the high. I'm going to wait till we get around 10. I don't know. I might not touch it. It's already been 15 minutes. No news on Meta except for Meta had an upgrade. But then AMD, I think everything was just had to do with the recent underperformance. And then everyone kind of got excited with young Intel. CPI comes in good. Do you think bonds will rocket? TLT, it will, but I will tell you this, the short term as well. So ironically enough, people are talking about the yield steepener, but they're trying to say that higher long-term rates like TLT aren't going to get as much juice. So I think the better the data, the short end of the curve will do better, but I can get behind. I mean, I'm still in a pretty decent-sized bond trade. I do think there's way more upside on the bonds here if there is some good data. And then Meta on the low again. Yeah, gold is $23.90. Oh, that's bro. It hit $23.99 the other day. You're not near the high, but it's been going one way. Still in that gold play too. That's doing very well now. And Chewy right back down. Mm-hmm. Bro, Apple again. Oh, I didn't even check the random play. Yeah, you got that Powell Q&A again. Honestly, it's not going to get active until, you have to, even the first 10 minutes are going to be boring as hell. Because even now, this time, his pre-written statement is exactly the same as yesterday. Apple plays up 47% on the random. We have what, till July 19th? To still out the money? Not bad. On Chevron up only 80. It was up only 20 in the morning. That's what kind of sucks. It really went crazy in the last couple minutes before the bell. AMD nonstop. There's Apple. There's SPY now, too. That's it. Even gold breaking out. I think everything breaking out? Even SPY or NASDAQ 27777. That's literally a new high now. On the random play this morning for gains. You can't focus on it all day, I feel. GG's. Hopefully it worked out. You just fell 10 points off the high on the NASDAQ, and then bonds moving. Everything went up, yeah. NQ, ES, even gold. They all kind of just look like they're straight melting. Oh, shit, we did get an MO dividend, yeah. So that didn't show up on TD Ameritrade or Schwab, but on what's it called? On Fidelity it did. MO. How much has that increased? Where's the last MO? AHR rocketing up. Microsoft starting to work his way up now. The one from yesterday I sold out in the morning. I made like $500 off of it. So I have no other. All I have is gold and bond play. Those are the only futures I'm holding right now. I'm trying to. Not bad. Our Altria dividend grew by $8 from last quarter. I'll take it from $392 to $400. That's a shit ton of shares, man. So literally the Altria drip, we got 8.58 shares. CCJ up. Yeah, remember all of that uranium stuff yesterday. And then Biden was talking about it a little too. That benefited it. I mean, gold, I'm down if it holds up. Let's just see if it gets above 2,400 now. Because remember, it's been doing this. Up 1%, then down 1%. Other day it was down 1.5, and then that was 2 days ago, and then it's up there. What bond play I'm in? Watch the Watchlist. But it's a /ZB. Longer term. It's like TLT, but futures. I honestly did it for a flip, and then I was like, and then it went down really bad. I was like, there's no way. Off of the little Trump shit, I didn't believe it, so I quadrupled down and said I'm gonna hold it, and then it keeps going between green and red. German Interior Ministry, there's a decision on the next course of action. Review of critical components on mobile network. If I had a deposit, I would consider Starbucks, but I don't anymore. So that's it. Someone was asking me if I'd buy it at 72. And I was like, if I had the deposit and then literally in the last 2 days, you've dropped like 10%. So I don't know. If I had money, it would be on my list. Otherwise, just got to wait now. Speaking of which, where's Nike? Bro, gold is running 23.91. And where is it? The watch list, you go youtube.com/the trading fraternity. Fraternity. How you say? Second link in description of this one. Make me very easy much. Delta. We talked about Delta a little bit yesterday. Intel flushing. AMD running up now. I know a lot of you guys got eyes on that. 3.3. Hey, what's up, man? Good morning, Peter. Peter Piper picked a peck of pickled peppers. Yeah, fuck you. I'm mental acuity's fine. I could do that. How much wood can a woodchuck chuck if a woodchuck could chuck wood? Red leather, yellow leather, red leather. Unique New York. Boy, I love to see unique New York. Look, I'm fucking on top of my game. Yeah, you want to fuck you, Republican, Democrats. I can put me in right now. Look at what I can do. You want me to juggle? Fuck, I can fucking juggle too. Yeah, fucking neurologist. Fucking, we should go get a gynecologist for some of you guys. I'm fucking fun loaded. I'm fine. Fuck yeah. Like the video. Like it. Make sure you hit the like button. All right, bonds came back up a little bit. You can't say unique New York. I liked tongue twisters. I don't know. I was a big fan of those growing up. There's one that gets me. I forgot. TSM, yalla. Man, why does it keep doing this? I want it to like break out of this level before making a play on there, but it just won't go. ADI. Bro, AMD's killing it. And TSM, that woke up there. Kava on the low. Rural juror. Rural. Rural's a hard word to say. Rural. 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 Raul. Toy boat, toy boat, toy boat, toy boat, toy boat, toy boat, toy boat. Yeah, that one's pretty hard. Toy boat, toy boat, toy boat, toy boat. Hi, I'm Josh AI. I can say any of that shit. Toy boat, toy boat, toy boat, toy boat, toy boat, toy boat, toy boat. Brought to you by Toyota. Toy boat, toy boat. See, it's good. It's funny, NASDAQ keeps wicking up here, or excuse me, ES, but the NASDAQ won't go with it. And then another high on gold. Bonds came back up a little bit, and back to green on that one. But my goodness. A lot of tension up here for the Joe Byron impersonation. Law term, baby. Amen, bro. Shout out to long term. Shout out to Drip, too, man. That's crazy. Remember, we were doing the drip calculation yesterday, but we've gotten some good money added to the account by them dividends. Amen, baby. AMRK. I'm waiting. AA on the high, on the low. And then Intel on the low as well. So Intel is starting to break. You got your first MO drip? Hell yeah. It's nice, man. It's a good yield. I can't believe it, man. I'm excited for the shares. And then hopefully you reinvested it. And then OpenAI and Los Alamos National Laboratory announced research partnership. Bank of England pill, open question whether time for cutting interest rates is now upon us. Oh shit, Powell's about to start here, huh? So get ready for that. AMD and TSM just went crazy, so see, and then again, I'm waiting on a NASDAQ or ES, but I don't know, I don't want to force it. We might have to wait till end of the day. But then bonds and gold are killing it. Both of those plays are doing very well now. I mean, the bonds are more finicky, but the gold play, very good, but it won't get above 2,400. Yeah, MO dividend should have hit by now. VVPR just going crazy. Oh, yeah, where is Baidu? Did it come down? Is that MO on the low? Yeah, Baidu's still up 3. I can't believe Baidu was literally up another 6% earlier. Yeah, even MO flipped a lot. Yo, bonds kind of just got clapped there out of nowhere. High and gold. NASDAQ still dancing around. Powell comes on in like 30 seconds. We can even take our time because he's not going to, even his pre-written statement is going to be exactly the same as yesterday. So you're going to get less knee-jerk reaction. And then probably it'll take like 8 minutes, maybe 10 minutes until like the first real question is asked. So all that, the Q&A is not pre-written, but, and then again, even yesterday, non-Q&A, it's not like it didn't. Yo, you guys see this bond move? That's real. So even futures took a fat candle on that. Hi. No Elizabeth Warren in this one. Wholesale inventories or trade sales came in at 0.4 versus 0.1 previous. I didn't think that even move us. Yeah, inventories 0.6 versus estimate of 0.6. So technically you did get data, but a very weird reaction. So SPY had that weekend drop, but NASDAQ started going down earlier. And then bonds and gold are giving up from that high. So honestly, the SPY just looks the best. Tesla on the low now. And then AMD and some of those chip makers still holding. So pick and choose your battles, my brother. Let me get you a checkup real quick. So SPY has 312 names in the green, 188 in the red. Dow Jones, 20 green, 10 in the red. And then NASDAQ 100, 63 in the green, 38 in the red. So more names are green than not today. The market breadth isn't even that bad. So see bonds and gold trying to bounce, but SPY already going into a new high off this. Waiting on the NASDAQ or Oracle pop. Dividends on TOS. Just go, if you're on Thinkorswim, just go to your account and then go down to the bottom where it says your P&L and just click on it. And then it should show you all of your trades and then organize it by when. So like I got my MPW dividend, but they haven't paid out my Schwab dividend yet. And then I got 2 AMDs, SPY going up. Let's see if the NASDAQ goes. Marvel moving, no position. Yeah, good call out, honestly. It's weird because like them and Qualcomm and Intel kind of move, but it looks like Marvel kind of doing its own thing. The title of the video is the same as yesterday, yeah. Simply because, I mean, it is the same thing as yesterday. Powell at 10 a.m. Apple's still going. Again, AMD, that one's kind of standing out there for the 4th time. I will put Powell on. I don't know is he on yet? For some reason, my House Financial Services Committee is not showing me anything. Yeah, they're lagging for some reason. Very weird. But yeah, I have it. But they should be starting by now, but they're 3 minutes late. Watch your speakers because I have the audio. It's already it's on, so I'll turn the volume down, but when it comes on, it'll scare you. And then there's bonds now. That was a very wild move. There's a fat drop and pop literally just off of that data. So weird ass volatility. Snap is above 17, bro. That's actually kind of a big deal. What's going on with this? Apple and AMD. They asked Janet Yellen some of the Biden questions. I don't know if they're going to ask Mr. Powell, but literally they were asking Janet Yellen when was the last time she talked to Joe Biden. And she was talking about how they did certain big meetings together, but she wouldn't really answer when they were in the same room as each other. No Powell. No, I'm waiting for him. It hasn't started yet. Oh, wait. Are they just not putting it out? No, is it weird? So the government stream is not going live yet for some reason. CNBC had a camera on Powell, but they're not starting. Is it really weird? They usually are very prompt with this. TSM moving. All right, new high on the day. NASDAQ just hit a new high. We'll see what the bonds do too. You like the background noises? He's not out. No, it's very weird. So he should be right. This should be the moment.
Yeah, I know. I'm gonna head out at like 11 or so. I can't be here forever to listen to like. I don't even know what questions they'd ask. I'm curious if
Committee will come to order. Without objection, the chair is authorized to declare a recess.
I took a
of the committee at any
NASDAQ
time.
short.
The hearing is titled "The Federal Reserve's
We'll
Semi-Annual
look to flip it
Monetary
in the next,
Policy
like, 30
Report."
minutes
We
to
like
an
creative
hour.
Titles here, and that is our traditional title for Humphrey Hawkins. Without objection, all members will have 5 legislative days within which to submit extraneous material to the chair for inclusion in the record. I'll note at the outset this hearing has a hard stop at 1.
Let me see which one's faster.
4 minutes for an opening statement. Thank you, Chair Powell, for being back with us today. For 4 minutes with prices increasing more than 20% since President Biden took office, inflation remains top of mind for American families. In fact, only a quarter of Americans describe current economic conditions as good or excellent, according to the most recent data from Gallup's Economic Confidence Index. Despite President Biden's gaslighting, inflation was not 9% when he took office. It was out of control. The out of control inflation we're experiencing now is something that this administration did not inherit, but is a product of their policies and their overspending. The nearly $2 trillion partisan and fiscally reckless spending as a part of the American Rescue Plan poured fuel on a smoldering inflationary fire. After a delayed response to runaway inflation, the FOMC has acted with a historic pace of interest rate hikes to ease the pain caused by Democrats' failed economic policies. It is a response,
AMD rocketing.
not the actual disease, but the response the Fed is trying to tame these flames, but it's a response to Democrat policies here on Capitol Hill in the administration. So far this year, inflation has been more persistent than many, including the Fed, previously expected. There's still work to be done to reach the Fed's 2% target. As I've repeatedly said, the Fed's, as I repeatedly said, the commitment to independence of the Federal Reserve is of utmost importance, and it is critical, especially in a political year like this. Just as, Chair Powell, just as you did in previous administrations, you must not allow politics to cloud the Fed's monetary policy. However, despite your best efforts,
New high again.
Fed independence remains at risk. And unfortunately, calls are coming from inside the building.
And then bonds coming
Under
down.
Vice
but
Chair
SPY and
Barr,
NASDAQ both going.
the Fed's regulatory and supervisory agenda has become politicized. Most notably, the development of the Basel III endgame proposal has been a mess. This process has been cloaked in opaque standards and timelines set at meetings
Dollar's actually negative
of
on the day.
unaccountable global governance bodies. The Fed has promised to process 410 almost universally negative comments, public comments, regarding the unjustified and underutilized initial proposal.
Oh, AMD is like kind of wicked.
Underanalyzed initial proposal. Recent press reports, which seem to be
Baba is waking up
Congress
again,
gets
and
details on
Baidu,
the Basel III endgame
and Bond just keep doing that
progress.
little back and forth.
And your comments yesterday indicate the Fed
No news
will
on
finally
AMD, but I just
conduct a
think
long-overdue
shit momentum and
quantitative
pre-earnings.
impact study. That is welcome. And if true, this is a promising development. Chair Powell, the last time you testified before this committee, you stated that the initial Basel III endgame proposal will undergo, quote, broad and material changes, end quote. Yesterday in the Senate, you said the board supports reissuing the updated proposal for public comment. I'm concerned that press reports also claim the Fed will tuck any changes to the proposal into this quantitative impact study. That study, including the substantial changes to the proposal, would then be issued for public feedback with relatively paltry comment period. I'll reiterate to you here what I've said to you in private. Broad and material changes to the Basel III endgame necessitate a full reproposal, full stop, full stop. Failure to do so will result in an immediate Congressional Review Act vote out of this House of Representatives as quickly as we can possibly process it. Now, it doesn't have to be this way, and I think the Fed adhering to its longstanding principles here is highly important, especially with this interagency process. I'll close with this. Your steady and capable apolitical leadership of the Federal Reserve has shepherded our economy through extreme uncertainty. We now find ourselves in the midst of a new type of uncertainty surrounding the leadership of our nation. Doubts, fears, and panic often lead to bad decision-making and even worse policy. I urge you to reject outside political pressure in this volatile time and stay the course for the good of the American people and our economy as a whole. Thank you for your service, and I yield back. I'll now recognize the ranking member of the full committee, Ms. Waters.
Thank you very much, Mr. Chairman. Welcome back to the Honorable Jerome H. Powell, Chairman, Board of Governors of the Federal Reserve System. Chair Powell, as we saw with the latest jobs report, the labor market remains strong and the economy is surging. Despite inheriting an economy from the prior administration that had the worst jobs record since the Great Depression, President Biden has now overseen a record 15.7 million jobs created since he took office, with 206,000 new jobs created just last month. Not only that, but under the Biden administration, we're witnessing low unemployment rates, rising wages, and stabilizing prices for goods and services. This is not only because of President Biden's strong leadership, but also because of the historic legislation signed into law by President Biden, which has resulted in lower costs, created more jobs, rebuilt our infrastructure, supported small businesses, eliminated mostly junk fees.
And then Meta's waking up now. A lot of names went from red to green right there.
Federal student loan debt for 14 million borrowers.
AMD, Meta both breaking out.
Poverty in half. President Biden is and will continue to advance policies that are providing good-paying jobs and an economy that works for everyone. Now, while I'm pleased to see that inflation is declining, the latest data makes clear that housing remains the #1 driver of core inflation. Since 2020, house prices have increased by nearly 50%, with Americans now spending on average over 30% of their income on housing. This is a top priority for Democrats, but remains an afterthought for Republicans. Earlier this Congress, I reintroduced my comprehensive legislation housing package, including the Housing Crisis Response Act. This bill provides more than $150 billion in fair and affordable housing investments, representing the single largest investment in affordable housing in our nation's history. These funds would create nearly 1.4 million affordable and accessible homes, bring down housing costs for all, and revive the American dream of home ownership. Committee Democrats are committed to getting this bill across the finish line and continue to hold out hope that our Republican colleagues will finally join us in this effort.
Man, you're about to pump it up,
Extreme
55.96.
MAGA Republicans are not just
Holy.
ignoring housing inflation.
It's
They're
here.
advancing their Project 2025 manifesto that would dismantle U.S. democracy and the economy as we know it
Yeah, that
today.
2025
Project
thing,
2025
that's the new push
is
that we've been
authored by
hearing.
almost 24
That's the way you
former Trump White House staffers
defend the
and Trump
brainlessness.
administration officials. It was compiled and published by the ultra-far-right
I did a new high on the NASDAQ and SPY,
so
still holding up here. Again,
that they are, quote,
no
in
real
the process
action from any of this.
Second American Revolution, which will be bloodless if the left allows it to be, quote, unquote. And if that kind of talk reminds anyone of the rhetoric we heard in the lead up to and on January 6, 2020, it should.
State bar, baby.
Promotes radical ideas to materially
Bought it.
undermine the Federal Reserve, if not effectively abolished. MAGA wants to put you out of a job, Chairman Powell. So I look forward to your testimony and hearing from you, a Republican who was first nominated by President Trump, about your thoughts on the importance of the Federal Reserve and the work you have done to help our economy. And I yield back.
Yield back.
Gentleman yields back. I note for the records, Jerome Powell was initially nominated by President Obama to the Board of Governors of the Federal Reserve before being nominated by President Trump to chair.
He loves it. He loves that.
So here we are. We'll recognize the chair of the Financial
Just letting y'all know.
Institutions
Just letting y'all
Mr. Barr, the Andy Barr variety, for 1 minute.
Thank you, Mr. Chairman. Welcome, Chairman Powell. Runaway inflation and increased interest rates necessary to confront it continue to hammer Americans, and especially those living paycheck to paycheck. Workers and families feel the pain, making everyday purchases at high prices in the grocery aisles and at the pump. They have suffered years of eroding purchasing power in their paychecks under the Biden administration's economic mismanagement. Heightened mortgage rates make it prohibitive for new home buyers to reach the American dream of a starter home for their family. I am pleased that the Fed is resolute in getting inflation under control. I am pleased that you have committed to an apolitical approach to this. I am not pleased by the Fed's opaque, unjustified, politicized, and underanalyzed regulatory proposals, which will ultimately hurt all Americans. We need to know where the Fed is going on its fundamentally flawed Basel III endgame
looking at something else.
and its opaque regulatory approach. I yield.
But I
Well,
guess
Chair now recognizes the ranking member of the Financial Institutions and Monetary Policy Subcommittee, Mr. Foster, for 1 minute.
Thank you, Chair McHenry and Ranking Member Waters. I'd like to also thank you, Chair Powell,
Wow.
for joining us today and
Your
for the role
ranking
you have
member
played in
sounding
combating
beautiful.
inflation and supporting a stable economic recovery. While the presidency is often the focus of political pronouncements about macroeconomic conditions, there's no question that that undersells the importance and the independence of the work of the Federal Reserve Board. While actions taken by the President and Congress certainly play a significant role, monetary policy decisions made by an independent Federal Reserve are the big dog in shaping macroeconomic conditions that shape economic outcomes for millions of Americans. And work continues on inflation, but significant progress has been made to bring the country in line with the Fed's 2% target. The good news is that macroeconomic policy is working as designed.
NATO to support
monetary
Ukraine on
policy with fiscal
irreversible
support
path
from
of
the American
fuel
Rescue
full
Plan, the Infrastructure and
Euro-Atlantic
Jobs Act, and the
integration.
CHIPS and Science Act has powered strong job creation and low unemployment while staving off a recession that many thought inevitable, and far better, I should point out, than our peer countries. While Democrats are committed to supporting your efforts to cut costs for American families, I yield back.
We'll now welcome the testimony of Jerome Powell, the 16th chair of the Federal Reserve Board of Governors. Chair Powell, you'll be recognized for 5 minutes to give an oral presentation or testimony. Without objection, a written statement will be made a part of the record. You're now recognized for 5 minutes.
Chairman McHenry, Ranking Member Waters, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report. The Federal Reserve remains squarely focused on our dual mandate to promote maximum employment and stable prices for the benefit of the American people. Over the past 2 years, the economy has made considerable progress toward the Federal Reserve's 2% inflation goal, and labor market conditions have cooled while remaining strong. Reflecting these developments, the risks to achieving our employment and inflation goals are coming into better balance. I will review the current economic situation before turning to monetary policy. Recent indicators suggest that the U.S. economy continues to expand at a solid pace. Gross domestic product growth appears to have moderated in the first half of this year, following impressive strength in the second half of last year. Private domestic demand remains robust, however, with slower but still solid increases in consumer spending. We've also seen moderate growth in capital spending and a pickup in residential investment so far this year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In the labor market, a broad set of indicators suggests that conditions have returned to about where they stood on the eve of the pandemic, strong but not overheated. The unemployment rate has moved higher, but was still at a low level of 4.1% in June. Payroll job gains averaged 222,000 jobs per month in the first half of the year. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in labor force participation among individuals aged 25 to 54 and a strong pace of immigration. As a result, the jobs-to-workers gap is well down from its peak and now stands just a bit above its 2019 level. Nominal wage growth has eased over the past year. The strong labor market has helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased notably over the past couple of years, but remains above the committee's longer-run goal of 2%. Total PCE prices rose 2.6% over the 12 months ending in May. Core PCE prices, which exclude the volatile
I covered my
food energy
NASDAQ. I
categories,
made like 480
also
off of it.
increased 2.6%.
So that's good. And then now I'm not going to trade till end of the day.
Our 2%
Telling you, first
inflation
30 minutes,
objective in the early part of
first
this
hour,
year.
and then now
The
we'll
most recent
trade in the
monthly
last 10
readings
minutes.
have shown modest further progress.
But that is it. I have no
Longer-term
more
inflation
now.
expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses,
And then bonds are waking
forecasters,
up.
as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote.
I shorted the
maximum
NQ at the
stable
top,
prices for the
or
American
like a
people.
little bit lower, then it
In
ran up,
support
and
of these
then
goals,
then
the
it
committee
came
has
back down.
maintained the target
I don't know
range
how
for the
long it
federal
took.
funds rate at 5.25% to 5.5% since
Took
last
about
July.
20 minutes.
After having
I
tightened the
shorted at
stance of monetary
7:06,
policy
covered at
significantly
7:21.
over the previous year and a half.
Now it's going up more. It would have made
We've
a little
also
bit more, but I'm
continued to
cool with
reduce
it.
our
We took
securities
500 off the
holdings. At our May
ES,
meeting, we
just
decided
under
to slow
500 on the
pace of balance
NASDAQ.
sheet
Got to
runoff starting in
realize
June,
$1,000 bucks
plans
just off of
released
the
previously.
end of the day, beginning of the day,
Our
and then
restrictive
go home.
monetary policy stance is helping to bring demand and supply into better balance and to put downward pressure on inflation. The committee has stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%.
I'm kind of down for a 2K while
Incoming
Powell's
data
playing.
for the first quarter of this year did not support such greater confidence.
It's good. It's good. We got
Most
the
recent
ES and we
inflation
got
readings,
the.
however, have shown some
We have
modest
both of
further
those plays
progress.
closed, and now I
And
still
more
got the
good
gold
data would
too.
strengthen our confidence that inflation
I
is
would like
moving
my bond
sustainably
play to go
toward
up a little
2%.
more.
We continue to make decisions meeting by meeting. We know that reducing policy restraint too soon,
But we're
or
gonna
too
do the
much
same
could
thing at the
stall
end of the
or
day.
even reverse the progress that we've seen on inflation.
So like literally, that's
same
going to be
time,
like
light
in
of
the last
progress
10 minutes
made
of the
both
day,
in
we'll have
lowering
another
inflation and cooling the
trade.
labor market over the past 2 years. Elevated inflation is not the only risk we face. Reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering adjustments to the target range for the federal funds rate, the committee will continue its practice of carefully assessing incoming data and their implications for the evolving outlook, the balance of risks, and the appropriate path of monetary policy. Congress has entrusted the Fed with the operational independence that is needed to take a longer-term perspective in the pursuit of our dual mandate of maximum employment and price stability. We remain committed to bringing inflation back down to our 2% goal
It's the
to
same
keeping
exact
longer-term
speech as
inflation
yesterday.
expectations
So
well
none of
anchored.
this is new. That's why
Restoring
it's not even
price
hitting
stability
headlines.
is essential to achieving
So this
maximum
is the
employment
exact same
and stable
pre-written
prices
statement
over
as
the long run.
the day prior.
Our success in delivering on those goals matters to all Americans. I'll conclude by emphasizing that we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you. I look forward to your questions.
Well, thank you, Chair Powell.
This is where it gets good.
I'll now recognize myself for 5 minutes. Chair Powell, let's begin with this question of the Basel III endgame. I know you got questions about it yesterday, but I think we need further clarity. Your testimony about Vice Chair Barr's discussions with the FDIC and with the OCC.
Bro, AMD, I'm
on the
going to keep
next
that one up
steps,
here.
for the
That thing's
Basel III
absolutely
endgame.
wild.
You mentioned potential changes have been made to the original Basel III endgame, that a lot of progress has been made, and that the board is very close to agreeing on the substance of those changes. But the next steps, that's really what I want to get into. Let's get through the mechanics of what happens next. If the Fed, the OCC, and the FDIC agree on the substance of whatever changes you're going to make,
Bonds new high.
what happens then? Like, walk through the mechanics as you anticipated.
And then gold
Okay,
came down $10 from the high.
We're very close to having exactly that agreement on the
But now
substance of the
long-term bonds are
proposed
starting to
changes
come up.
pursuant to those talks. The next question then is how to proceed. And, it is my view and the strong view of a number of board members that the appropriate thing to do is to take that new proposal and publish it along with the effects of the quantitative impact survey and put that out for comment again and receive comment on that and then take some time to review those comments before
This again?
finalizing the regulation. And that's a discussion we're having with the other two agencies now. We have not been able to reach agreement on a path.
So
to do
commodities
that.
did good today.
But
Silver
that's something that we're
rocketing
we think is the
already
right
and
way to do.
gold,
That's,
but
that's what we've done in
it calmed down from the highs while
similar
the SPY went up,
situations. There
and
aren't
then
that many
now
similar
I guess
situations,
everything
but
kind of took
when
a
we see
breather
broad and
except
material
bonds.
changes to an important regulation,
But they have their breather
we
from
think let's go
pre-market.
out again and give
And then
all the commenters
AMD,
another chance
Micron,
to-
they're still killing it.
Yeah, and that also avoids serious lawsuit risk and the risk that Congress step in
Chewy's trying to come back.
and overturn this rulemaking using the Congressional Review Act. I think the other agencies here, if they're not agreeing with the Fed, they're running against the independence of the Federal Reserve here. This is not a trifling
Oil
matter of
numbers in 4
policy.
minutes.
This is a matter of real substance for the independence of the Fed and rulemaking at the Federal Reserve, which I think we should be able to keep keep the independence of the Fed separate, especially in this political environment. But opening up to a new comment period.
Equal wage doing nothing.
So that means you have to get consensus
T-Mobile on the high,
for
too.
the Board of Governors on the policy. You have to get the agreement of the scandal-plagued chair of the FDIC or the 5-member board of the FDIC. You have to get agreement by the acting comptroller of the currency. These people should not have real standing with the Fed on a matter of serious policy, especially with a chair of the FDIC that is being ousted by his
Gave
own
up
party.
trading 3
as soon as
months
they can
ago. Did you get a
replacement
long-term?
confirmed. It's an absurd thing that the Fed has to go to
not
an
really. We
acting
made a
comptroller
trade
of
today,
the
but I'm not
currency
really trying
and
to
a
trade
guy
as
who's gonna
much
be
as
out
I'm
of a
trying to
job
long-term.
very soon
So I feel you,
at
but
the
get a
FDIC
long-term.
and get agreement. But thank you for listening. That was more of to convey this. So the quantitative impact analysis, is this going to include the interplay with the stress tests, GSIB surcharge, all the other capital charges here? Will that be a part of the quantitative impact analysis?
Microsoft on the high now.
Will be this proposal, which does include changes to the GSIB surcharge, but does not include the stress tests.
Okay. But
Amazon on the low,
goal here
Microsoft on
with
the high.
quantitative
Amazon kind of
impact is
flushing.
to actually measure the impact of these rules as enacted, right? Based upon what is existing regulatory
And then bonds
structures.
starting to chill out.
That's right.
All right, so let's get into the question.
Long
of
terms are
balance
posted
sheet,
on this channel.
as quickly as
If
we
you go to
can.
the community
You-
tab.
2.5 years ago,
We'll go over it in a little bit.
you stated, quote, the committee intends to slow and then stop the decline in the size of the balance sheet when reserve balances are somewhat above the level it judges to be consistent with ample
Oh, Intel did
reserves.
climb back up. Good call.
That's 2.5 years ago. Where are we in this question of
Pinduo Duo,
what are
Baba
ample
Pop.
reserves?
Well, so the balance sheet, the runoff in the portfolio is now, I think, $1.7 trillion so far So we've made quite a lot
grab
of
more
progress.
NVIDIA. I mean, if I bought
We think we
NVIDIA
have a
for the
good
long
ways to
term,
go,
no.
And as I mentioned,
But
as you just
I would
mentioned, we've now
allocate new
slowed
money
the
into
pace, really with a
dividends
view
while
to,
not adding to NVIDIA. I think
getting
that's
as
a
far
better
as
way
we
to go
can
about
without
it.
creating frictions and disruption that might cause us to prematurely stop shrinking. Going a little bit slower might actually enable us to go further. We think we have quite a ways to go. It's very hard to be precise about it. It's really a question of supply and demand, and we'll find that level with a little bit of a buffer on top of it, and that's where we'll stop.
All right, thank you for your testimony. The ranking member, Ms.
you for your
Waters, recognized for 5 minutes.
Thank you very much.
Maxine.
Chairman Powell, are you familiar with Project 2025?
Not really, no.
Bro, this is the
heard
new
about
anti Trump thing they're trying to
I
get
really
home
don't
here.
focus on these things at all. I mean,
You don't focus, but you know there's something known as a Project 2025? The reason I'm asking you is because one proposal is to get rid of the Fed's dual mandate to promote only
Cushing
stable
oil
prices,
inventories
but also
minus
maximum
702
employment.
versus
This
345
is
prior.
your mandate. This is-
Crude
these
oil
are mandates,
inventories
right?
minus
This is
3.4
what
million
you do.
barrels. Estimate
Is that
was
right?
1
we
million.
do serve a dual mandate, that's right.
And so if there was anything that would get rid of the mandate, what would it do to our economy? What would it do to our country?
It's kind of an interesting
The
question.
question of which mandate we serve is very much a question for Congress.
Like, if we got rid of the
Our
Fed,
own-
what would
my own
happen to the
view has been
Fed?
that the dual mandate has served us well. This is something Congress can change and change back to a single mandate. There are
What do
other-
you do to get maximum employment? What do you do?
Well, we have one tool on the economy, and that is we raise and lower interest rates.
distillates
You'll find, though, that-
4.88 million
anyway,
versus
we
153.
certainly at the Fed
Jeez.
do believe that the dual mandate has been a
No,
good
that
thing.
dime,
And
baby.
It's enabled us
What's
to.
up,
It
man?
has not stopped us from
Thank you for the
controlling
peach.
inflation when that was the thing that needed to be done.
And so while, of course, I understand you
The
may
Moon
not have
House,
seen,
what up?
heard, or read Project 2025. Are you familiar with a
I know the
effort
horns are
in
weird
the
when we got
country
this thing
to
playing.
get rid of diversity and
It
inclusion?
was like that yesterday.
I see these things mentioned, but honestly, we're pretty focused on our task, which is maximum employment, price stability. We're strong supporters of diversity at the Fed, as you know.
Are you aware that I created a subcommittee on diversity and employment in this committee?
Yes, I remember that.
And do you think that getting rid of diversity and inclusion interferes with your ability to really realize the mandate of maximum employment?
I spent most of my career in the private sector, and what I observed was really successful institutions in the United States, companies, organizations generally, are those that do a really good job on diversity and get the best out of people.
Powell, he's good at giving
and
the
attract
answer.
a broad,
He
diverse
says,
range of
they're
talents to the
focused on
table,
other
and
things without saying.
people feel comfortable speaking.
like,
So that's
his
the
main
way
thing.
we feel about it at the Fed, and that's what we've been doing and will continue to do.
And do you think it's important not only to have diversity and inclusion in the public sector, but in the private sector also?
Yes, and as I mentioned, if you look at very successful American companies, you will very often see that they're good at that. They're good at hiring, attracting, investing in, and keeping diverse talent. That's one of the things that are really good U.S. public companies
Yeah,
do.
Amazon is dying a little bit
Have
more.
you seen improvement during your tenure?
I don't think there's any
where
headline.
diversity and
I see NATO
inclusion
stuff, but
has
what was happening
created
earlier is Microsoft was
opportunities
going
for
up.
more jobs and
Keep an
helped
eye on
to
that. SPY going
reduce the
below VWAP
unemployment
now.
rate?
Certainly seen, I think you see over the course of my long career.
And
a
SPY
big
going
change
lower.
in diversity and inclusion.
Bank of England pill. I'm not sure if we're in a
And
world.
You see that in the private sector and the
persistent
public sector, and I
inflation
think
pressures
that's
or not.
generally progress. I do.
Bezos did. I think he
Under
sold
the work of this
800
committee, and
million
the
yesterday.
subcommittee is chaired by Ms. Beatty.
In Amazon
she was
stock.
able to
Or 800
gather
billion.
important
Something
data
stupid.
about what
Maybe
was
it
going
was
on
800 million.
In the private sector.
800
And
billion sounds
what
like,
she discovered
Austin
was
Powers.
that many of the CEOs and others welcomed the opportunity to learn more and to do better and to get assistance, and we saw improvement with diversity and inclusion. Have you seen that?
There's no question, if you talk to CEOs, they get this. If you want to attract the best talent in our country now, you need to be committed to these things.
And you just went
And
below
so,
VWAP. I closed out the
I
NQ
would
short.
like to
Got under 500
compliment
bucks.
you on the job that you have been doing.
Isaiah, I'm gonna be done
I'd
until
like
the
to
end of the day.
compliment you on keeping us informed about inflation. Not only do I welcome you here today, I look forward to working with you for years to come. I yield back. Thank you.
Thank you.
The gentleman from Arkansas, the vice chair of the full committee, Mr. Hill, is now recognized for 5 minutes.
Thank the chair. Chair Powell, thanks so much and welcome back to the committee. I want to pick up where Senator Tim Scott and Chair McHenry left off and reiterate my strong support for your comment yesterday in the Senate about the need to repropose the Basel III endgame. The Supreme Court's precedent, I think, makes clear that if a rule undergoes broad and material changes from the proposal to final rule, the public must be given a meaningful opportunity to review and comment on those changes. You generally share that view, I think. Is that right?
Yes.
And I'm looking forward to seeing the results of the quantitative
Biden could
impact
try to
study
deliver
and the
sweeping
separate
student loan
comment
forgiveness
period,
weeks
as well
before
as
the
an
election.
interagency agreement you referenced yesterday. Because
My
of
guy.
Dodd-Frank's role and the vice chair for supervision,
APP on the
Vice Chairman
low,
Barr's role
and
the
DoorDash.
Fed's role, would it be fair to say the Fed is a first among equals on proposing a rule like this? In other words, does the Fed have a supremacy position on determining whether it should be fully reproposed or not, or do you view it strictly as a
55.90? Again, I think we might
collaborative
chill. You might
basis?
go a
Just
little
curious on your
lower,
view
but
on that.
I would say
That's
it's
it,
strictly
especially as
collaborative,
these
and I would say
questions
that our
start to
discussions
dull
with the
down.
FDIC, which
I mean, we
Vice
might
Chair
just
Barr
play
has
our
actually
go a
been
little lower,
conducting,
go a little higher,
and
and then
the
that's
OCC,
it.
they've been very productive so far. So I want to make sure to say that we've continued to work our way through this, and I believe we will get fairly soon to a resolution of the remaining process.
This is
well,
they use this to
turn from that
push their own
subject to
agenda.
the
This is like your
Court's
marketing.
recent decision to overturn
So think about
the
it. If
so-called
you have like a
Chevron,
bill or anything,
doctrine.
everybody
Many of us
watching, you
believe
got
this was the
Powell.
first step
Like some
to
people
reining
ask
in
general
decades,
questions,
literally,
but
of an
a lot of people are
unprecedented,
just what's it called?
Controlled
You know,
growth
they're just
in
trying
the
to get together their
administrative
main points.
state, and so I think all of us on at least this side of the aisle are certainly saying to the Federal Reserve and other federal
Sound
agencies
pop.
in our jurisdiction that we want to reassert Article I authority over the direction
High-low
that
ticker's
independent
balanced out.
agencies work.
It's not
Would it
bad.
be fair to ask you to certify that because of this change in Chevron, that the Fed would commit to promulgating new rules only if they're at the direction of an explicit congressional authorization?
So I think, first of all, we're studying that and several other decisions that have just come down in the last week or two. So I haven't got anything definitive for you on that. I think you know us to be an organization. I know us to be an organization.
Amazon bounced a
that is
little bit.
strongly
AMD
committed to the
dropped.
rule of law. Supreme Court
Even
says
Tesla, I
what
feel
the
like
law is.
Tesla,
We'll always do
11 days in a row.
what we believe the law is.
We
Well,
can
I'll
actually
submit
stay
that
up. That'll be
question
12.
maybe in more detail in writing, and maybe you'll have a chance to reflect on that. Back in February, you were on 60 Minutes, and you said the U.S. budget deficit, the national debt are unsustainable. Do you still view that the U.S. is on an unsustainable fiscal path?
I do. I think I tried to be clear that the level of the U.S. debt is not itself unsustainable, but the path that we're on is unsustainable, and I think that is not controversial.
That's not controversial. We have not gotten a debt downgrade in a while.
With that, and we know that
Y'all remember those?
The deficit's at 3 times the economic growth rate and growing. It's of concern, and it's contributed
Hezbollah
to
headline.
inflation. Just 3 years ago in Jackson Hole, Wyoming, you gave a speech where you were confident that inflation was transitory, which I think we've come to realize that's not the case. This hearing's sort of a can't-miss opportunity.
Dude, there's upflation,
for the Fed to
shrinkflation,
demonstrate some humility
greedflation,
on
and I think
monetary
there's one
policy
more.
decisions, which some on this side of the aisle particularly think have made inflation worse. Your August 2020 Jackson Hole speech, you said the flexible average inflation targeting framework regarding 2%, that you would let it run above 2%. Was the Fed blinded by the previous 20 years of global change that was deflationary and or you were not alert enough in 2020 to be more cautious about that change in policy?
So we were certainly mindful of a long period of time in which there have been very low interest rates, but also very low inflation, suggesting that the neutral interest rate must have fallen quite substantially. That was the standard view. The thing we didn't see coming was the pandemic. It's not like everything went off the rails.
Yeah.
It's like we had this pandemic, and it really changed the way the economy's working. We had a big crisis. We did a lot of things. So the concerns that led us to those concerns that we were in a world of very low interest rates all
Inflation,
the
yeah.
time.
But now, wouldn't you say we're in a very opposite situation where because of reshoring and tariffs and other policies that are quite inflationary?
I would say this. Those concerns are, right now we have the policy rate in the mid fives, right?
LNTH.
And we see the policy is restrictive,
this
but
length?
clearly interest rates, the neutral interest rate must have moved up, at least in the short term. So I think that's the question we'll be asking ourselves in our review, which begins at the end of this year.
We look
is
forward
how much
to
of what
that,
we
and I
did
go
in-
back to
in
the chairman.
how much of what we did in that time period is relevant to the new world where rates appear to be higher.
The gentleman from Georgia, Mr. Scott, is recognized for 5 minutes.
Thank you, Chairman, and welcome, Chair Powell. It's great
Gold on the
seeing
low.
you. Last time
Powell
I saw
said
you,
neutral interest rate
you
must have
had-
moved
we
up
had the
in the short term. That's a
gracious
headline right
pleasure
there.
of you
That's the first
visiting
time
with me in
all
my
day
office.
something really came across
And
there.
we discussed a great variety of things. Thank you for that visit. Now, Chair Powell, this year the Fed tested 31 banks, up from 23 last year. Is that correct?
I believe that's right, yes.
And by estimating losses, revenues, expenses, and capital level under hypothetical stress scenarios, we did that, correct?
Yes.
And all 31 banks remained above their minimum common
Above their
equity
minimum.
tier,
I like it.
one capital requirements after
beautiful.
observing losses of nearly $685 billion. Is that correct?
Yes, that is correct.
Yeah, I wanted to get those figures out and provide you with, you may have heard this, but I want to share it with the nation because your vice chair, Barr, made this statement, and I wanted to put this in the
What,
record.
in the yelling? He does
His
kind of sound
exact
like the guy
quote
version of
from
yelling.
this great achievement. He said, "Our goal of our stress test is to help ensure that we have enough capital to absorb losses in a highly stressful scenario." And this test
All right,
shows
Spy coming back
that
up. This
we
was like
did.
right around where it
I
started.
thought that was a
We
great
don't even have the
statement,
closeout.
of your record. Now, let me ask you my question. It's simple. Will the 2024 Fed stress test results have an impact on how prudential regulators roll out a new and updated capital
VRTX?
proposal?
So the two are really two different things.
Why is this thing moving?
There's the Basel III capital proposal, and then there's the stress tests. So, and really the Basel III, as I mentioned, we've discussed, we're almost ready to put forward for further comment a revised proposal with material and broad changes to it. The stress tests are a
Until
different
AMD
thing, and of
coming
course
down.
we tried it. We realize we have
Let's
to
get young Appel up
adapt
here.
those over time and be open to changes, and it has evolved significantly over time, but it's really a separate thing from the Basel III endgame.
Give us a little bit more information on the
I think they
Basel
play 2K
III,
during the testimony.
because I worked
I mean,
with
somebody
you,
playing Candy Crush
with
in there.
this. Our work goes
You know,
all
even
the
my mom
way
would play
back
Candy
to,
Crush, so I
the
wouldn't doubt
Obama
it.
administration when we responded to that crisis with our banks. And you and I worked that up where we came up with the hardest hit program to help those who were suffering with, those states that were suffering with high unemployment.
Oh, somebody in my...
And at the same
Oh, I
time,
forgot. I got people coming to do
high
some work.
home foreclosures, and we were
I gotta
successful.
close some shit. Hold
And
on.
we've established that program, and it's still going on and helping many of our states. But, you know, I want to also share what is happening around the world as a result of our activities. The European Union is now set to delay key parts of its bank capital rules by more than a year, so that their lenders will not be at a disadvantage. Over in Canada, it's important to know that their banking regulators have also delayed for another year, imposing high capital rules on countries' banks at the risk of making them uncompetitive. And the Swiss National Bank is highly unlikely now to adopt a proposed 15% capital requirement for UPS and other Swiss banks. And the Bank of England has issued a near-final proposal to increase UK bank capital by 2%. And I think this is all a measure of your great work and that of your vice chair.
So
and
nice.
I just wanted to
Nike. I mean, below
let you
72. I think
have a
70. That's the only
comment on
thing.
that, please.
Sure. So we're committed to finalizing this
GME.
proposal.
I don't know what
Banks are gonna
Chewy's
live
doing.
with these rules for a long, long time. The main thing is to get it right, and that's what we're doing. What we do in the end will be consistent with the Basel agreement, and it will also be consistent with what other comparable large jurisdictions are doing.
You're doing a great job. Keep up the good work.
We'll recognize the gentleman from Pennsylvania, Mr. Muser, for 5 minutes.
Thank you very much, Mr. Chairman. Thank you very much, Chairman Powell, and also thank you for continue to indicate that you will look at the entirety of the economy, the whole economy. Appreciate that. So one of the nation's largest banks
guy.
recently warned in
It
a
looks
memo,
like, what's his name, Bale?
and it's also been voiced by smaller banks,
Christian
that the
Bale?
current pace of regulations such as changes to capital requirements and lowering debit card interchange caps could lead to a new fees associated with checking accounts.
Amazon flushing
and other
again? No
increased
way.
costs for small businesses.
And I think
This
that was
does
our
come
first
amid
tech name that
expiring
started
tax
dropping.
provisions that are sunsetting as we speak, that are critical for small business, such as the R&D tax credit, interest deductibility, and bonus depreciation. This does raise the question, are you considering how these regulations and tax increases will directly work against your mandate to achieve 2% inflation? Moreover, with the proposed changes to Basel III, it is crucial to ensure that all stakeholders have a voice in this process, which you
Yes,
are
no, didn't
stating
crowd
will
get
occur.
clapped today? I don't know if
And
they're
Basel
similar.
III proposal and adequate comment period are certainly very welcome. So, Chairman Powell, yesterday in the Senate, you mentioned that the majority view of the board is to repropose Basel III for comment period. Could you clarify if this means the proposal will be reproposed from scratch?
Bond's coming down, too.
And any other specifics you can provide?
Sure. So we haven't reached agreement on this. As I mentioned, we're working through this with our colleagues at the FDIC and the OCC. And I can't tell you exactly what the form of it would be. The sense of it would be, though, that we're making material changes and that we would want the public to have a chance to look at those changes in the light of the way they play off against the quantitative impact survey and should have a reasonable time to comment on those. In addition, we're focused on one big area, but there are institutions that have made comments all across the spectrum, and we're reading all of those carefully. And we're not going to
Basel III, it's
republish
those
all of
capital
those.
requirements. I mean, it's
Some of those
literally
we
from
can
like
just make
8 to 10
changes
years
and
ago,
move forward
but
on.
it just
So
hasn't been implemented until now.
It's going to be a very labor-intensive, time-consuming process.
Okay.
Writing these things up takes a long time, and we're going to get it right.
Good, that's great. Obviously, Canada recently postponed, as did the EU and UK, for international competition standpoint.
Is it
seems
from
to
08? Is
make
it almost
sense,
20 years
and
ago,
so
I guess?
That's appreciated.
16?
Chairman, would you agree that excessive spending, increased taxes, limits on domestic energy production, in principle, are a cause for higher costs for business, contributes to inflation, and as well tightens the labor markets, kind of
Mark Pez!
Your two mandates?
Every day!
You're
Bro,
asking
was
me
it ever
kind
since
of a
the
political
Pfizer, I
question
feel
there.
like,
I'm
bro,
not
I
gonna-
love
don't
you.
wanna
Thank you, my
criticize
friend.
a platform
Yeah,
of
Nike was just
economic
hanging at
fiscal policies
72.
that are not really
I know,
ours
I'm
to
keeping
decide.
Amazon and Am Dizzle up here.
It's more of an economic question, but I appreciate your answer, sir. So when you mentioned recalibrate policy yesterday in the Senate hearing, was part of your thinking taking a more holistic view of economic conditions?
Yes, very much so.
Okay.
Yeah.
Okay. Chairman, is there any data to
Data?
support the so-called greedflation this term greedflation somehow has caused inflation.
Thank you.
Any data to support
Great
those
play. I'm glad I made that video.
We look
Some of you
at
guys
it
are
that
confused at
inflation,
first.
this inflation has been caused by a combination of, very strong demand and constrained supply. So it was really a high-speed collision between an economy that was reopening.
Thank you,
and by the way,
Marquez,
this
my
was- there was
man.
inflation all over the world at the same time, so these are some common factors. But at the same time, you had tremendous demand, for example, for automobiles. You had constrained supply. because there
Greedflation,
were
not
semiconductors.
greedflation.
Long story short.
But again, that's why even today, man, I'm going to
so
highlight
that-
it once
that to
again.
us is,
You
is
literally
what
have
inflation-
another
this inflation is
$38
all
billion
about. So we've
being
observed,
auctioned by the government
the sort
today.
of healing of the supply side at the
So,
same time.
I mean,
restrictive
remember,
monetary
just
policies
whatever
weighing
the
on demand, and
corporations,
we've seen inflation
they
coming
ain't
down.
got
So
nothing
no
on the
data that
government, bro.
supports that gouging of consumers is part of the
It's
inflation.
it's been very hard to track a connection with,
Okay.
earnings and things.
Secretary Yellen
No, Amazon
mentioned that
puts,
she
I
didn't feel
mean,
that there was
if
grocery,
anything, just be grateful maybe it could open
price
up the
shock
doors
and
to
that
an
sort of
earnings
thing.
play.
Groceries and gasoline are the two
But it's just
driving
odd how it's dropping
problems
like that.
for
But then again,
American
your
families
boy
and so my
Bezos has been
constituents.
dumping mad
Do you
shares.
believe your policies are helping to alleviate in those two areas?
So a lot of things affect, let's take energy first. The energy prices are generally set at the global level. We do have some effect on that.
Sorry,
but not
Chairman,
that
I've run
much.
out of time. Thank you. I yield back, Mr.
Sorry,
can
I don't want to
continue.
fucking hear it.
Thanks.
The gentleman from Missouri, Mr. Cleaver, is now recognized for 5 minutes.
Thank you, Mr.
Yeah, you
Chairman.
could go look
Thank
up the
you,
Fed
Mr.
balance
Chairman,
sheet whenever.
For being here. In
So
some
that
ways, I wanna
information is
follow,
public.
or at least respond to.
Chewy still holding
very
up a little.
civil, But
Again,
I
Intel,
think
that's still even holding
reason
green on the day.
of why we need an independent central bank. And your response was, the question you raised would, if I answered it, it would be along some kind of a political avenue, and you didn't want to drive on that avenue. So I'm.
You didn't want to drive on that
I'm also
avenue.
very much concerned about a lot of the discussion. I've been on this committee a while, and so it comes up quite often. When the Federal Reserve was birthed around the turn of the century, I think, around 1913, 1918, somewhere like that. Prior to the establishment of the central bank,
I think 1918.
was our country experiencing a lot of recessions because of no security? People felt no security, particularly the business community, in making big investments because nobody was in control. Just kind of think what went on just went on. Is that relevant?
Yes, I think the lack of a central bank between 1836 and the founding of the Fed was a period of lots and lots of depressions, and a lot of it had to do with the crop cycle and the banks not being able to handle the very large seasonal swings, and there was no central bank to provide liquidity. So that's really what gave rise to the founding of the Fed in the early part of the last century.
Credo,
Do you
CRDO,
think that
Flushing,
that it is dangerous
and Uber?
to blend monetary policy and fiscal policy?
To blend them?
Yes.
So we try to keep them very separate, and we try not to express views
TMCI on the
fiscal
high.
policy. That's for
look like
elected
fake
people who
TSMI.
undergone elections
Or
and won
SMCI.
and make those very difficult decisions. We have a really specific, narrow but important mandate that you've given us, and we try to stick to that. And so we take your policies as given, and then we conduct monetary policy.
Yeah, remember, Netflix earnings is literally right around the corner.
I don't want to draw you into any kind of a political response, but and I have not read all of this Project 2025
Bro,
document.
this
I read,
2025, they're
some of
like,
it
all right,
online,
Biden is not dropping out. He's
nights ago.
insane. We got to highlight
but
the insane
even whether
Trump
it comes out of a
approach. It's
2025
our only way
or
out.
3089, whatever. One of the things that I'm concerned about, reading this from this document, that the document argues that the Federal Reserve is the inflation problem.
This sounds like my video that we talked greedflation, we talked the Fed, man, it's great. Microsoft settlement with trade body KissPay does nothing for vast majority of European customers in Europe, Amazon says.
I'm wondering here, would you agree with any of that I just stated, whether it came from me or Chairman McHenry or anybody else?
So I'll just say, first of all, we're certainly fair game for any criticism people have. I think what we've learned and what we know is that having an independent central bank is really essential. If you want to have high and volatile inflation, then the quickest road to that would be to undermine the independence of the central bank, of the Fed in our case.
Okay.
So I frankly think that view is very widely held.
That's the quickest way.
Up here on Capitol Hill in both political parties.
So eliminating the Federal Reserve is best for promoting economic stability.
Eliminating?
Yes. Thank you. I knew that the ranking member was going to come in and deal with the issue of housing. She always does, and we all appreciate the fact that she's obsessed with it, and I like that obsession. But
I don't know what you said.
I'm wondering, as we try to figure out how to deal with this issue, oh my goodness, my time's running.
Was that a question?
I didn't finish it, but I sure yes. If you knew where I was going,
He's like,
please.
I'm fluent in Biden. I know, and there's going to be a question there.
We'll now recognize the gentleman from New York, Mr. Garbarino.
Thank you, Chairman. Chair Powell, thank you very much for being here today. Based on some comments you made today and yesterday, it appears you've made quite a bit of progress on changes to the Basel III Endgame proposal, and you're very close to agreeing some of the substance of those changes. I know you won't get into specifics. You said that. I just don't know how deep you won't get into them, but I just want to confirm what you said to my colleague, Mr. Muser. There will be, you're not reproposing some things, it's just going to be a partial reproposal?
That's what we're looking at doing, is major things that we've been working on, and there will be additional changes that will be made that won't be reproposed. That's what we're working on, rather than a full wide proposal.
So it's not a complete reproposal, just partial?
Yeah.
Can you get at least into, can you tell me if which components?
Damn, Bond's already flushing back down.
It's
That's
not
crazy, the amount of back and forth. Is that a new low?
Ready to go.
It's about to be. So bonds are dying. Could have made a little bit more if we held that NQ, but
when you're doing these things,
for the most part, you're back to open
I understand.
now.
I'm not asking
Very
for what
interesting on the
specifically
bond
you're changing,
market.
Which, if you're willing to say which.
I hope to be able to come
Okay.
to you with a really clear answer on that soon. I mean, I think we're ready to go at the Fed.
So that's my next question. So it's been said several times that you and many of your members of the board are at odds with your counterparts at the FDIC and OCC over how to proceed with putting out a revised proposal for comment. So if the FDIC and the OCC are not yet on board with allowing for a new comment period, who is holding up this consensus? Is it Chair Grunberg? Is it Director Chopra?
I don't want to say that we're at odds. I just want to say
all right, so SPY again, back to open. A couple names on the low, but that bond move, that has me more interested than not.
Well, it's a discussion that we're having, and I think it's been constructive, and I think we'll try
Favorite
to keep
energy,
it
probably XOM.
Can you at least answer whether
I don't know.
or not
I don't really have energy
the
names.
FDIC board needs to sign off, or can you just go to the chair?
No, I think
I have
it's
the
the
Apple,
board, and of course the
random play
comptroller
one, yeah.
is one person, but I think I mean, the FDIC can speak for themselves, but I do think their board would be the question.
Okay. One final question, on timeline question before I move on. You mentioned yesterday that a reasonable prediction would be that Basel would not be finalized until the first quarter of 2025. Under this timeline, would it be safe to say that implementation
Crazy move.
would
Well,
then
think
not
about it.
occur
The bond
until
market
at least
didn't really
the
go
beginning of
crazy during
2026?
Biden. I wouldn't blame Biden,
Again, I can't be that
but
specific,
ever since
but,
Biden, I mean, the
that's,
bond bull
someone
market
asked me,
died.
does it sound
You
like the
haven't
first quarter
watched
of next
bond.
year
Again,
might
think
be?
about
I
even
said
government
might be.
spending
Maybe there's
too.
a range of times it
But
would
you
take.
had more
The thing
bond
is, as I mentioned,
volatility for
U.S. banks are going to be living with these rules for many
Trump
years.
and all the
point is to
prior
get it right, not
administrations.
to-
But
not to do it
granted,
quickly.
you
know,
did
we
have
want to
bigger
get it right,
changes during
listen to the
Biden.
comments, make sound decisions.
Jay Powell was, I
move
mean, the
ahead
question they were
in a
talking
way
about
that
eliminating the
is,
Fed,
gives us a
because that was one of
sustainable
the, what's
set
it
of
called,
rules that we have to
Project
come back and
25?
fix all the mistakes.
That's the thing that apparently Donald Trump
I want
supports.
to move on to
It was like some
another
group
topic
that
long-term
advocated him to do it.
You mentioned yesterday that
But
you would
one thing would
most
be
likely
getting
not
rid of
move
the
forward with
Fed.
other rules until people reach a place of understanding and acceptance of a revised Basel proposal. I hope that's the truth, as banks need to fully understand the implications of a Basel proposal before any action is taken on long-term debt. Finally, Chair Powell, I'd like to emphasize the need for the Fed to conduct a comprehensive, data-driven, and most importantly, transparent assessment of the current liquidity framework. So very quickly, will you commit to conducting a public quantitative impact study and a full notice and comment rulemaking before imposing any new liquidity requirements?
I didn't catch the first part of that, the first part of your ask.
Will you commit to conducting a public quantitative impact study and a full notice and comment rulemaking before imposing any new liquidity
On the liquidity thing, I'm not exactly sure what we're contemplating there. We certainly contemplate getting a full range of input from the public on that, because some of these are novel ideas, and we understand that.
All right, as the chairman said before, these impact studies are very important because they're to show what impact these rules will have. So
they're important because you guys get to spend money on the study,
had a
and the
mucked up
study
process
says
with
whether or
Basel
not you can
2.0,
spend more
and,
money.
I don't think
It's
there's,
crazy,
we don't want to
honestly.
do that. And I have a little time left. I'm going to yield to my colleague from Pennsylvania, Mr. Music.
I'm going to yield to my colleague from the Pennsylvania.
I thank my colleague. Chairman Powell, just back to what we were talking about, the price instability of groceries and gasoline, where we do have somewhat of an affordability crisis has been termed. So would lowering rates in the near future be a pro-growth initiative, perhaps? Is that something that's
Amazon
being
for
considered,
GME?
that would actually drive
Wow,
investment?
that's a big ask, man.
And give a clearer picture for
I think Amazon's
investment,
more important than
and perhaps
GME.
help in these
So I
two
think GME is
categories
finally
and in the
running,
end,
and
increasing
even
supply
Chewy
so
kind
as
of
to
held
lower
up, but they gave up.
those
The
prices.
headline is just
Honestly,
the
when we
option
think
trades.
about,
But I'm
near-term
more
rate moves, we're
interested in
thinking about a
Amazon,
couple things. And
even
the
like
first of which
Netflix.
is we want to be more confident about inflation.
My apologies, Chairman, I went over.
Sorry.
Chairman, I yield back.
Yeah, bro, hold on. I need to
The
check
gentleman
this
from
out. I think
California,
they're
Mr.
doing work
Vargas,
on
is
my
recognized
house.
for 5 minutes.
Thank you very much,
I'm
Mr.
gonna go
Chairman.
pee,
Thank
and
you
then
again for this
I'll
hearing
see what's
and
up with
ranking
everything.
member. Thank you
I'll
very
BRB.
much. Chairman Powell, thank you very much for being here. We appreciate it. In fact, I was looking at your history when they were saying who nominated you when you got here and all that. In fact, you had public service even prior to that time, right?
That's right.
So I thank you for your long public service to the nation. I think
Thank you.
you've been outstanding. I think
Appreciate
we all
it.
respect you deeply here. You're pretty boring here today, to be frank.
Sorry?
You're pretty boring here, to be frank.
Thank you. That's a high compliment.
Yes, it is, because sometimes when you're here, there's all sorts of cameras here, and they're watching your every step and all. And I think there's a reason for that, right? And that's because the economy's doing all right. Am I wrong about that?
You know, take a look at our economy. We're growing at around 2%, it feels like. Inflation is down to 2.6%. Unemployment's at 4.1. These are good numbers.
Yeah, I mean, I hear the parade of horribles on the other side, how the sky's falling, but I don't see the media here to attest to that. In fact, it's just the opposite. Did you read some of the headlines of the new government in Britain? Some of the headlines? If not, let me read one. It says, "New British government inherits worst economic plight since World War II." And in fact, there's a number of headlines like that saying that England's in trouble. I imagine if you were running their central bank, I bet you there'd be a whole bunch of media here beating you up to find out what the hell you're doing or what you aren't doing. And I think the reason for that, again, is I think the government here has done a pretty darn good job. One of the things you said you didn't see coming was the pandemic, right? I'm not putting words in your mouth.
Right.
In fact, I was here and I heard the parade of horribles that we were going to have a recession, maybe a depression. In fact, the country was going to fall apart. Did it?
No. We went through a period of high inflation as the other countries did. And that's very challenging
and in
for
fact,
the people.
Isn't it the case that most of those countries had higher inflation than we did in Europe?
Over time, there were times when their inflation was higher. I think
Yeah, it was.
overall it was broadly comparable.
Yeah, in fact, I brought it up a number of times here because there was.
I love it when he asks a question, and then once Powell gives him one part of the answer he likes, he then he's like, good, and then now what about this?
There's a whole bunch of other issues to instability, political instability, and a whole bunch of other things, obviously. But I mean, it is interesting today that the parade of horribles that we hear doesn't seem to manifest itself with the media or the attention that you normally get, and that's good. I mean, I think it's a great thing. Now, I do want to ask a couple questions. I do have concerns. Basel III on housing. I think I've made those concerns known to your office, and I won't rehash them. But I do have issues that I want to talk to you about with regard to climate. Obviously, you said you don't read too much of the news. You didn't hear about Project 25. I don't think that's what you meant to say, and I don't want to put words in your mouth. I think when the ranking member asked you if you had heard about it, I think you said no. I think you've probably heard about it, but you haven't read it.
I've seen nothing more than headlines on it. I mean, I've devoted zero.
Yeah, me too. I don't read
energy
that.
into.
Yeah, I don't read that wacky stuff myself either, but I certainly read the headlines.
He's laughing. Everyone's laughing at this. They're like, then what do you say?
You obviously have seen what has
Bro, that's
happened
crazy.
in
We had that
Texas. You've
2025
seen
headline thing,
what
and
has
then that
happened
is all
with
we have
climate
heard
change. In fact, you've
all
testified
day
before
here.
you believe in climate change. Is that correct?
Sure.
Yeah. And so what are we doing? You've taken a number of steps, I think, that have been very positive to make sure that we look at the risks of climate change. Could you go over some of those? Because that does concern me. I think that's a change that we also didn't see. Well, I saw it coming. I've been saying it for a long time, but a lot of people didn't believe.
So, if you're looking at financial regulators, you're looking at people who have a very, very limited role in climate, and that is just to look at the institutions that we supervise and make sure that they understand and can manage the risks that they're running. That we are not climate policymakers.
Right. And I'm not asking
It has to be elected people who do that.
Right, but you have to take a look at the risks. I mean, look at the risks that the insurance companies are taking, and the banks, of course, are financing these homes, and now you can't get insurance on them, so all of a sudden you can't rebuild. I mean, these are risks that the banks are looking
So
at.
we don't regulate insurance companies.
No, right, but you regulate the banks.
Banks, yeah.
And these banks have mortgages on those houses, do they not? Many of them.
Well, in many cases, they're not writing mortgages anymore. So that's the result we're getting, is that banks are saying, they see these risks. They do.
My time's up, but thank you again. Appreciate you.
Thank you.
The gentlelady from California, Mrs. Kim, is recognized for 5 minutes.
Thank you, Chairman.
California, some reasonable people.
Chairman Powell, thank you.
Thank
for
God
being
we're
with
hearing
us
from the
today.
Californians.
Gosh, you're under a lot of pressure from all sides
Ready
to
for a
divert,
reasonable
from our
take.
monetary policy goals. And I commend you for your leadership and staying focused on the core missions of the Fed, which are price stability and maximum employment. So thanks again for your leadership. And you have stated that it is the Fed's strong view that you will have to reopen the Basel III Endgame proposal for comment again. And I really urge FDIC and OCC moving forward with reopening the comment period. Chairman Powell, would broad support mean abandonment of any modified proposal that garners mostly negative public comments in a public comment period for the modified proposal?
Sorry, didn't follow your question.
Would broad support mean abandonment of any modified proposal that garners mostly negative public comments in a public comment period?
I mean, SPY going
for
up.
the modified
But still have
proposal.
VWAP literally
support,
first couple minutes from where we
empirically
open, and
would
then
mean,
bonds
you know,
low-key kind of murdered.
Good solid vote on the Fed board. And I've tried not to be specific about what that means, but it also means broad support among the broader community.
This will
of
probably be over in like
commenters on all
30 minutes,
sides.
I think.
That's
So
what I
it
meant
started
by
an
broad
hour ago.
support.
I think it runs for an hour and a half, so 23 minutes.
That's what I meant by it.
Thank you.
Last
And as
time
the
wasn't that
Fed
bad.
looks
Yesterday.
to enacting several changes to the proposal, I would also urge you not to overlook how the Basel Endgame proposal would disproportionately impact FBOs and regional banks and U.S. domestic jobs because of the way the outside operational risk is, weighted. So can we get your commitment to that?
So let me just say I'm not going to get into specifics. We're well aware of those concerns. You know, we've obviously carefully digested all of the comments we've gotten from all different sectors, and those are concerns that we're well aware of.
Thank you. Let's switch gear to another matter. You have spoken for the need of transparency. Are there any conversations at the Fed to have more transparency and better engagement and consistency with stress tests?
So we have increased transparency in the stress tests over time, and I would say we do. If people want to write articles and make comments that are critical of the stress test, we're going to read those and we're going to think about that. We're open to improving it. We know that the stress test has to evolve over time if it's to remain relevant, and I think transparency is one of those subjects where we're prepared to listen and think about ideas.
Definitely. I would like to see more stress test regime that is more transparent and adapted, identifying unforeseen risks. So we can achieve that by being more collaborative, I believe, yes. So I'm also interested to hear from you whether you and your fellow banking regulators have considered the cumulative impact of any new liquidity standards with the Basel III framework and the existing post-crisis liquidity requirements. So what industry engagement has the board staff held with respect to changes to the liquidity framework?
So we haven't actually made any proposals on that yet. We have had significant industry interaction on the proposals, and I mean we will move, I think, at some time this year.
What about the board staff? Have they conducted any industry-wide data collection to study the necessity for and the impact of any changes to the existing liquidity framework?
I think we've done a lot of investigation on that front. But
Nike?
This is the beginning.
I would just wait until I get another deposit.
We haven't published
so
proposals
anything
yet.
but below like $70 though,
working on
I
that. It's a
could be
pretty
very
early
interested, or when that yield hits 4%.
Let me quickly talk about the inflation issue. We had a peak inflation rate of 9.1% in June 2022, and a lot has been talked about being a supply side issue and the demand shock from the opening economy. So can you elaborate how the expansion in the money supply and fiscal stimulus played a role in persistent inflation, and why is it so important to get to the 2% inflation rate goal right now?
So the inflation that arose here was a collision between very strong demand as the economy reopened. Remember that there had been fiscal transfers, we had rates very low. You know, those things were done because we thought we could be looking at a very, very bad economic time. As it turns out, the economy reopened and demand spiked very high. People had saved a lot of money because they couldn't spend. And so there was tremendous demand and there was constrained supply. And what you got was inflation. And you got that everywhere in the world. That's what happened. So what's happened to bring inflation down, we've made quite a lot of progress on inflation. To bring inflation down, the Fed has been working on with restrictive policy on
Morgan Stanley and
demand.
XLF
That
running.
has been working.
So
and
banks
the
are
supply
doing
side
good.
has been healing, and the negative labor participation shock has essentially reversed, adjusted for. So it's kind of working out as we had expected.
Thank you very much, Chairman.
The gentlewoman from Georgia, Mrs. Williams, is now recognized for 5 minutes.
Thank you, Chairman McHenry, and thank you, Chair Powell, for joining us today. As the president of the Federal Reserve Bank of Atlanta, Raphael Bostic has so rightly pointed out that combating economic inequality
I thought you
is
were
a
going to
critical
talk
part
about
of
how
the
much
Fed's
he's
dual
traded.
When everyone in our community doesn't have the opportunity to
It
contribute
sounded like
to
she
their
was
fullest
about to
potential,
throw him under the bus,
economy
and then
is
it
not
turned
firing
into
on
a-
all cylinders.
a
Nowhere is this more
congratulations.
apparent than in my home city of Atlanta, which has more Black-owned businesses than any other city in the country, but is still among our nation's leaders in the racial wealth gap. I applaud you and your staff at the Federal Reserve for the work that you're doing to make sure that the economy works as well for the hardworking people of Georgia's fighting 5th District as it does for those in the top 1%. This includes helping to make sure that financial services are affordable and accessible to everyone. As the Fed moves forward with the proposed changes to Regulation 2, I know that protecting access to affordable and accessible banking is at the top of your mind. That is why I was concerned when I started receiving outreach about the unintentional effects that Reg 2 proposed rule would have on marginalized communities, including my constituents in Atlanta. Specifically, I heard about the impact that the reduction in interchange fees proposed by this rule could have on bank-owned certified accounts in my district and across the country. The Bank-Owned Initiative is a partnership between financial institutions and trusted community-based organizations to offer low or no-cost bank accounts to unbanked and underbanked individuals. Access and affordability are at the heart of the changes that you're proposing, and I couldn't agree more with those goals. But we have to make sure that programs designed to serve unbanked and underbanked individuals in marginalized communities continue to flourish. In response to these concerns, my colleague across the aisle, Mr. Lukemeyer, and I sent a bipartisan comment letter in March to you highlighting those very concerns and urging that the final rule not negatively impact low and moderate income communities. Chair Powell, how does the Fed take into account how regulations impact constituents who don't have an attorney or an interest group to submit a comment on their behalf?
Well, let me say first, we have heard those concerns that you raised and others have raised about aspects of the proposed rule. And, we very much understand the concerns that are being raised.
Yeah, Powell has to do this twice a year.
Where we don't have comment letters,
They just torture him. It's not bad, though.
I mean, we try to be thoughtful about
Could be worse.
Impact of our regulations, but principally we're looking for public comment on things.
Thank you. The FDIC's most recent data shows that the rate of unbanked households is at an all-time low. The Bank-Owned Initiative has certainly played an important role in this progress. Bank-owned certified accounts are available to more than 95% of low and moderate income households across all 50 states. Access to low or no-cost banking services is a door to financial inclusion and wealth generation for marginalized families. As written, Reg 2 could undo some of the enormous progress made in the past several years. Chair Powell, how can regulators work with members of this committee to ensure that future proposed rules do not hinder Americans' access to tools that enhance the Federal Reserve's financial inclusion efforts?
So we're very focused on things like bank-owned, as you pointed out, and on access to the financial system for marginalized communities. So we wouldn't want to do anything to weigh on that. We were happy to work with you in your office on those issues. But as I mentioned, we're hearing the comments and we're reading them, and we're taking those into account as we think about appropriate changes to the proposal.
So we will definitely follow up on that, because as we're writing these regulations, I want to make sure that we're thinking about the real world impact and what it means to consumers when they're accessing financial institutions. I look forward to working with you to further the Fed's financial inclusion
Netflix
efforts.
on the low?
Like earlier this week, I sent you another bipartisan letter related to the Federal Reserve's April proposal to extend the operating hours of FedWire Fund service to 22 hours per day, 7 days per week, and every day of the year. That was news that I was eager to hear. This may sound like a small technical change, but it can have a big impact on our constituents, especially for those living in marginalized communities who live paycheck to paycheck. Growing up in the booming metropolis of Smith Station, Alabama, probably never heard of it, Chair Powell. But there are limited options for loans and short-term loans. In an area where everyone needs a car to get to work and they have to work to eat, when money is short, any delay in accessing a paycheck or paying a bill can disrupt your entire household. Extending operating hours for FedWire Fund service and National Settlement Service will allow people continual access to their funds outside of what we've deemed normal operating hours. And I hear the gavel. I'm out of time, but we will be following up for more conversation. Thank you.
Thank you.
The gentleman from Nebraska, Mr. Flood, is recognized for 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, after a year with very high inflation that battered American paychecks, inflation rates have moderated some. However, inflation continues to linger above the 2% target rate set by the Federal Reserve. In fact, the PCE inflation index has remained above 2% for the last 3 years. The Federal Open Market Committee's statement on longer-run goals and monetary policy strategy issued at the beginning of the year stated, and I quote, "The committee seeks to achieve inflation that averages 2% over time and therefore judges that following periods when inflation has been running persistently below 2%, appropriate monetary policy will likely aim to achieve inflation moderately above 2% for some time," end quote. Chairman Powell, does the commitment to achieve a 2% average over time apply in the other direction as well? Meaning that if inflation remains above 2% for a protracted period, would the committee instead aim for inflation moderately below 2% for some time in order to achieve an inflation average of 2%?
No, it doesn't.
Is it fair to say that you would need to see the PCE index dip
SMCI
below 2%
breaking.
at least once in the coming months in order to contemplate a rate cut?
No, that's not fair to say. We've said that you don't want to wait until inflation gets all the way down to 2%. because inflation has a certain momentum. You wouldn't wait that long. If you waited that long, you probably waited too long, because inflation will be moving downward and will go well below 2%, which we don't want.
What combination factors would you need to see in order to support a rate cut this month or in September?
So once again, I'll say I'm not sending any signals on any particular date of any meeting whatsoever on policy. I said that yesterday, and I'm saying it again today, but I will answer your question. So what we said is that we want to be more confident. We want to have greater confidence, and that means more good inflation readings. That inflation is moving sustainably down to 2%. Greater confidence that that is the case. But remember, we have a dual mandate, too. We're not just an inflation targeting central bank. We also have an employment mandate. So I could also see us cutting, and we've said this, I've said this, if we saw unexpected weakening in the labor market. And we do now see, I'll speak for myself, I now see the risks to the two mandates as much closer to being in balance. I think for a long time we've had to focus heavily on the inflation mandate, but I think now we're getting to the place where the labor market is getting pretty much in balance to where it needs to be, and so we're looking at both sides.
I know that the media and others have continued to talk about the prospect of political interference with the Federal Reserve. With an election coming up, I know you are very aware of the heightened scrutiny awaiting the open market committee meetings in July and September. Can you use this opportunity to speak regarding the Federal Reserve's political independence going into this election?
Sure, I'd be glad to. So, our political independence is critical to our ability to do our jobs and to sustain the faith of people across the political spectrum. And it comes down to, we make our decisions based on economic data, the evolving outlook, the balance of risks, and we don't take into consideration any other factors, including political factors. We have a long history of doing that, and I think the public believes we will do that. Any decision that we make on rates, on any of our policy tools, it's going to be very well grounded in the data, and it will represent our best thinking about what is best for the American public in the near and medium term. And that's the promise that I will give and that all my colleagues will give. And that means that we're not looking at things like election cycles. We're not looking at any of those things. We're looking at the data. What does it tell us is the right thing to do? When we figure that out, when we think it's time to move, we go ahead and move, but not until then.
Appreciate that. Finally, I'd like to raise concerns with housing costs. While shelter is one component of the broader PCE calculation, housing often makes up one of the largest, if not the largest, expense for many consumers. Inflation for housing remains persistently high. One of the characteristics of this economy is that consumer sentiment is remarkably low. Do you think high housing costs could be contributing to the persistently low consumer sentiment?
I think high prices generally. I think nobody really can be super highly confident of their answer on this, but I do think it's the fact that while inflation has come down, prices are high, if you know what I mean, and people are paying more for things, more for housing, more for the essentials of life, food, energy, and that to me is how I would explain surveys. We say that the economy's growing, inflation's come down, unemployment's low, and all that's true, but prices are high.
Thank you, Chairman Powell, for your answer and your testimony, and I yield back.
Gentleman from New York, Mr. Torres, is recognized for 5 minutes.
Thank you. Chair Powell, the Fed has an inflation rate target of 2%. Are you waiting for both PCE inflation and CPI inflation to fall to 2%?
It was funny. I had to explain to my mom how inflation worked.
We look at different measures.
She said, "What do you mean 2%?"
Quarter of a century.
It's not 2%,
PCE
3%.
inflation has been
That's
the
a lie.
Fed's goal. We've defined our goal in terms of that because we think it's the better.
I was like, it's year over year, Mom.
Of the
So
cost.
that's added to the year before that, and then the year before that.
And
yeah.
you've said that you're willing to cut interest rates before reaching the 2% target. Is the decision to cut interest rates going to be driven by reaching a particular target en route to 2%, or is it driven by the overall trajectory of the inflation rate?
It's going to be driven by the totality of the data. There isn't a particular number that we have in mind that we have to get to. It's more, you look at all of the data, and the question we're asking ourselves is, are we sufficiently confident that inflation really is moving down toward 2%? So what's the underlying inflation rate, looking through the volatility? We're also looking, though, as I mentioned, at the labor market. We're asking ourselves, we have to take into account now maximum employment, that mandate. So we're looking at both of those in the decisions that we make.
I mean, are you confident that the inflation rate is on a downward trajectory?
I do have some confidence of that. I think we've seen that over the past several years. The question is, are we sufficiently confident that it is moving sustainably down to 2%? And I'm not prepared to say that yet.
Chair Powell, you announced a reproposal of Basel III rather than a mere revision. Do you believe that the U.S. banking system is sufficiently capitalized in the absence of Basel III?
I've long been of the view that U.S. banks are well capitalized, and that the level of capital in the U.S. banking system is about right.
Okay. So if the banking system is sufficiently capitalized in the absence of Basel III, then what exactly is the need for Basel III?
First of all, there's no precise answer as to the appropriate level of capital. I think we've been part of developing the Basel standards. They create international
Spy's still going.
broad parity. It's important that we have that. It's important that we
See
do
a lot of
something
chat
that is
saying
comparable
sound
to
pop.
what the other large jurisdictions are doing. And
Oh, it's up a
consistent
lot,
with
actually.
Basel,
Back
and
to
I think
force.
That's what our banks want. That's what we want, and that will be best serving the public.
But you agree we should conform without gold plating?
You know, some things we've gold plated, and some things we haven't. And but I think we should make. I think our end game proposal should be at the end. Should be consistent with the requirements of Basel and consistent with what the other large jurisdictions
That one
are
again?
doing.
Are you confident that there's no legal conflict between the standardization recommended by Basel III and the regulatory tailoring mandated by Congress?
I think we can work through all that, yeah.
Okay. But if there were a conflict...
Basel doesn't impose any requirements on anyone. There's no enforceable requirements. Every jurisdiction does what it's going to do. Basel doesn't bind anybody.
Right, but the regulatory framework you're adopting would codify those recommendations.
Yes.
Which would have the force of law, right?
Yes, that's right.
And so if there were a conflict between the codified recommendations and an act of Congress, would you agree that an act of Congress would supersede those
Yes.
recommendations?
Sure.
Does the loss of Chevron deference have any implications for Basel III?
You know, it's very early days to assess. There's several decisions that are about administrative law, and I think it's too early for us to say. I mean, ultimately, the question is, are the actions we're taking in compliance with the law? And that decision says that there will be a less deference, or no deference maybe, to the opinions of the agency, but that just means a court will be answering the same question, which is, are those actions consistent with the law?
The Fed has a target rate when it comes to inflation. Does the Fed have a target when it comes to quantitative tightening, like when it comes to what should be the size of the Fed's balance sheet?
Well,
Bro, Spy right back up to the high here. So again, it's around where I did that other short. I think the NASDAQ is lower.
Size.
I'm going to get sound. Chip names calm down for a little bit there. I mean, it is, what, Euro close in 3 minutes?
We want an ample reserves regime with a buffer.
So get ready for that.
So that reserves are not scarce. And we think plentiful reserves, ample reserves is the right place to be. And, you know, we'll find that empirically.
Can you put a number on that?
No, I can't really.
For 4 decades, we've had the best of both worlds, low unemployment and low inflation. Can the U.S. economy return to the golden age of low unemployment and low inflation, or are we doomed to live with a new normal of higher interest rates?
No.
Well, I think we have low inflation. We've got a period here of very low unemployment.
We have high inflation, so can we have the best of both worlds?
We certainly can, and that's the plan. Okay. We're going to return to 2% inflation. I'm reasonably confident. Some people argue that we're entering into a world of a lot of upward inflation shocks. That would be a challenging world, but that remains to be seen.
Thank you.
Thank you.
Gentleman from Iowa, Mr. Nunn, is recognized for 5 minutes.
Thank you, Mr. Chair. And thank you, Chairman Powell, for being with us today. Your office has done a very diligent job in working with this body on both sides of the aisle. I chalk some of that up to the fact that you've got some very good folks from Iowa on your staff there, helping keep the trains running on time, so that's excellent. I will note that, in Iowa, the average family has experienced, annual inflation of about $925 per month just in the last 3 years. I've got 6 kids. We're the #1 egg-producing state in the country, but yet eggs for each one of my kids goes up 40% this past year, and take that times 6. I'm no economist, but that adds up real quick, and I think I'm reflective of a lot of families across the country right now. So, Mr. Chair, one of the things I'd like to talk about is what we are focused on and what your department's working on at the Fed.
Yeah, 10-year
U.S.
auction in
Federal
an hour
Reserve,
and a
in my
half.
opinion, should be more focused on folks like my
It's weird.
hometown
Bonds got
Monterey,
murked,
Iowa,
though, today,
versus
too.
What's coming out
They were
of
doing decent in the
elected
beginning.
bureaucrats in Brussels, Belgium, for example, which is one of the reasons I'm so grateful that you have talked about
Watch
reopening
NVO.
Basel III.
They went down.
conversation on
They had
what's in
that
the
bad
best interest of
news
the American
earlier,
people. I
2
applaud
days
you and
ago
your
with the
team
Eli
for this.
Lilly stuff.
While I would like to see Basel III candidly scrapped altogether, I think that there are three things in this proposal that we've got to look at immediately. One, the impact of credit availability, especially to ensure that it won't be tighter credit conditions on small businesses back home in places like Iowa. The ability for farmers across the country to be able to hedge their grain, corn, soybean, livestock in a new Basel III conversation, and ultimately eliminate the downstream effects on American banks being held to higher standards and very clear in Basel III than what's being held in Europe. So with that, I want to readdress your team's attention to the letter I sent in a bipartisan way with Senator Jerry Moran, specifically emphasizing the negative impact of increased bank capital requirements on the economy, our constituents, and ultimately our ag producers across the country. So what I'll first say is, can you confirm that the next Basel III proposal as outlined will address concerns from our ag growers, including our farmers?
Let me just say that we're well aware of the concerns you're raising about hedging, and I'm not going to be too specific about things, but we're quite aware
And
of those
high.
concerns.
So Euro close,
I
literally
certainly hope
back
your team
up
gets the
to
opportunity
highs.
hear
Yeah.
that because it's one of the most
Big
painful
pie,
things
and then
I'm
it's
hearing
doing
back
what
in
it did
my
earlier. Gold and all the
Would
other
you
guys.
agree
moving.
that the end users' concerns
That's crazy. The NQ is still lower than where we took
could
that
have been
for
mitigated
short.
maybe at the
But
front
yeah,
end
that
of
just
this
rocketed
if,
up.
Congress or say a farmer in my district had been included in those opening conversations?
That was big.
In
But then
hindsight,
again, I mean, you're still in the range.
that's
But
right.
55.98, Chattadonia.
Period is for.
55.90, you're 2 points away. 1.2 point. 1.2 from all-time highs. And 5,600. That is a new record high today. 37.
A lot of those were from the ag industry
High.
who felt that they had no voice in this and were a recipient of things that really harmed their businesses. With that, I want to read quickly, former Treasury Secretary Larry Summers was asked about Basel, and he said, quote, "We're going to need to prepare for consolidation in banking in the future, quite possibly some even further evolution of lending away from banks." Now, I'm going to note here that Iowa has over 250 community banks with assets under $7 billion. His commitment, or his comments are of great concern on this consolidation. Do you share concerns about a consolidation amongst banks across America?
So, I speak for myself, I realize that community banks are tremendously important in their communities, and it's not a better world when community banks go out of business, or at the same time, if there needs to be consolidation, I don't think we should be standing in the way of that, but we don't want to be part of the reason why community banks are going out of business or being forced to merge because of, for example, high fixed costs because of regulation or other things.
I would agree with you, Mr. Chairman. We don't want to be the instigator for a small bank to have to go out and stop serving a local community. As we look at Basel III, if it's finalized in early 2025, does that mean we will push implementation back to 2026?
I don't know exactly what it would be, but that's something like that is right. We'd have a typical phase-in process at the end of the, quite a lot of work to do to get to a final rule, and then there'll be a phase-in process. I don't know exactly what the date would be.
Thank you, Mr. Chairman. I just want to know kind of a timeline for my folks. I mean, there's obviously 2026, or take my advice, scrap it all together and we can start over, if we even need to do that. Let me ask very quickly, with Chevron overturned, is there anything the Fed is doing to identify areas where maybe we have over-regulated at the federal side and you're self-policing right now?
Under the Chevron decision? Yeah. I mean, again, our view is we're very focused on obeying the law and reading the actual words of the law and interpreting it according to the words that are in the law. This is the way we approach things, and I'm not sure how much will change. Basically, a court will be doing that with a little bit less deference to the agency, but we think we're already interpreting the law pretty carefully. So, and again, these are brand new decisions. There are several of them, and it's way early. We're just studying them now.
Thank you, Chairman Powell. Thank you, Chair, and I hope you continue to self-police. It's much appreciated to you and your
We'll
team.
now recognize the gentleman from North Carolina, my friend, Mr. Nickel, for 5 minutes.
Thank you so much, Mr. Chairman. Welcome back, Chair Powell. I represent a Republican-leaning, very purple district, so my constituents sent me here to get things done. It's been disappointing that we're on track for what I believe could be the least productive Congress in our nation's history. But this committee has done some good bipartisan work on the digital assets market structure bill and stablecoins. It's a place where I have hope that we're going to see some action in this Congress. I know you and I have privately spoken about stablecoins, and here in the House, in a bipartisan way, we've been working diligently to pass a bill to regulate payment stablecoins. This committee voted in favor of the legislation in a bipartisan way last year, and there have been numerous calls from this committee to you and to the Fed asking that you prioritize working with Congress to help push this legislation forward. We've enjoyed our conversations with staff as well. Can you commit to directing your staff to finalize and support passage of stablecoin legislation this year?
So we've been, really pleased to take part in this process. And, very much.
I'm looking at the futures. If it goes up another round, I'm down for another play. Otherwise, we got to wait till end of the day.
We think it's really important that we have a federal framework for stablecoins, and again, we'll be all in on working with you to get that done.
Thank you very much. Big issue for the folks that I represent, housing. The rising cost of housing hits my constituents especially hard in North Carolina. Our ranking member, Maxine Waters, has made this a big priority for the work that we do in the committee. In North Carolina, we've got 343,000 households that spend over half of their monthly income on rent, leaving little money for other expenses like healthcare, transportation, and food. Access to safe and affordable housing is essential to the well-being of working families and individuals in North Carolina and around the country. Chair Powell, despite the strong economic trends you mentioned in your testimony, housing prices and median rents have increased by nearly 50% and 41% respectively since May of 2020, and they continue to rise. In fact, housing costs continue to outpace modest wage gains. High interest rates continue to add to those costs. For example, high interest rates make it more expensive for home builders to finance new housing. High interest rates also cause landlords to change higher rents and lead to higher mortgage costs for would-be home buyers. I know that you and your colleagues at the Fed are correctly focused on bringing down inflation, important goal, but have you considered that at this point, with housing cost increases being the primary driver of inflation, keeping interest rates high only towards that stated goal?
So a couple things are happening with housing. Before the pandemic, there was pretty serious housing shortage, and we can't do anything about that. Then the pandemic comes along, and we really think the best thing, the most important thing we can do for the housing market in the medium and longer term is to get inflation under control so that interest rates can come down, so that we can get back to a more normal interest rate. No one knows exactly where interest rates will go, but they'll be lower than they are now. And the housing market, supply and demand, will work their way out, and you'll have supply of housing. There's still going to be a housing shortage at the end of that, though. And it's true that our policies work through interest-sensitive spending. Housing
what's
is
up,
maybe the
K-Chan?
most
Arturo.
interest-sensitive form of spending.
God bless you. I went to go
Housing
pee real
houses
quick.
with a
My
mortgage.
man, I hope
We
y'all
know
got
that
it
we have
long term.
really significant
I hope y'all
effects in that
feeling
market,
blessed.
and
Amen.
It's tough on people.
And
but
don't worry,
this is
the end of the
path to getting
day and
inflation
tomorrow
down,
we'll
which
get
will
more
bear fruit
excitement.
for many.
Even then, I mean, a new all-time high every day.
I don't think I'm going to be able to get in my next question.
TTD flushing.
The time I have, but I wanted to give you this opportunity if you'd like it. I've talked to you privately about this and have a pretty good idea what you'll say. But if you would like to say that the economy is heading for a soft landing, you're welcome to say soft landing as much as you'd like right now.
I'll say, for some time.
Why is this dude
I've
so
thought
fucking
there is a
giggly
path
on
to
soft? He
getting
loves it.
Back to full
Say
price
it,
stability
say it,
without-
pal.
while keeping the inflation.
I just want to hear you
the
say it.
unemployment rate low. There is that
Isaac,
path. We've been on it.
another day of
We're very,
learning,
very
baby.
focused
Tell him,
on staying on
Tiara.
that path.
Good
I would say
morning.
we're at a place now where the risks to the two mandates are much more in balance than they were.
He said just
That
say
means
it.
It's not just about
Just
getting
let me hear you
inflation
say
down.
it. Say it as much
Job
as you
is
want.
not done on inflation.
Soft
We have
landing,
more
yeah.
work to do
Thanks,
there, but at
pal.
the same time, we need to be mindful of where the labor market
TTD
is. We
flushing.
have seen considerable softening in the labor market. We still have a strong labor market with low unemployment. by all means. But
it's crazy because this little
what we
all-time
are
high
very
record,
focused on,
we're back to the January record. Remember X amount of days and weeks in a row?
Thank you.
You're back to setting records in
Texas, Ms.
terms of
De La
every day
Cruz, is
being
now
green.
recognized.
Thank you, Mr. Chairman, and thank you, Chair Powell, for being here today. I appreciate that. I represent a working class in South Texas. In fact, my district is mostly Hispanic, one of the most Hispanic districts in the entire nation, over 80%. And my district is also a rural community. So the topic today greatly affects my constituents and is something personal for me. That being said, the population that I represent is a population that the Federal Reserve research has shown disproportionately will be the hardest hit in inflation. That being said, higher prices due to Biden's induced inflation is something not only the nation is feeling, but my constituents
Yeah, literally,
they're feeling
TTD
it
went
at
nuts
the
after that
grocery store,
CNBC
they're
thing
feeling it at
yesterday.
the gas pump.
And then now it's down
Small
3.
businesses are feeling this, and we know that cutting back on their spending, people who are living paycheck to paycheck, they still can't get away from these increasing costs at the grocery store or the gas station. So even small changes have a big impact in rural communities like mine. In fact, the Farm Bureau recently said that the cost of the 4th of July prices, the 4th of July celebration had high increases. The headline reads, record high 4th of July cookout costs, inflation hits the backyard. This report says that costs were up 5% from last year and up 30% from just a few years ago, all during the Biden administration time. Now, the Biden administration wants us to simply forget about the last 3 years and the pain it has caused families in my district. They don't understand why people are unhappy about their current economic situation. And quite frankly, it is angering and it's simply out of touch with the everyday American.
It's the best economy in the world.
Obvious
Shut up.
that until we grapple
You don't feel it, you don't know how
with
good
the
you got
runaway
it.
government spending,
Why?
that
It's
unfortunately
expensive.
we are going to
want
continue
it.
to have runaway inflation. Chairman Powell, can you explain to us how the excessive government spending not only increases the national debt, but also affects inflation as well?
Sure. So let me say, first of all, we completely understand that inflation hurts people,
Is he
low and
really
moderate
driving?
income
We
people
understand our actions affect communities.
directly and immediately in a way that
That's
it
the ending
doesn't
quote.
affect even middle-class people, because paying more for the necessities of life when you don't have much of a financial safety net, the pain starts right away. We get that, and so it is for those people, among others, that we are doing everything we can to get inflation under control and stay at the job until it's done. In terms of the causes of inflation, the inflation that we're having is not that different from what other advanced economies around the world are having, and it really results from the pandemic comes along. Inflation is low. The pandemic comes along. We shut down the economy. They're sent checks to replace their income. They can't spend that money because they can't go to the movie theater or to a football game because everything is closed. So savings go up. And so people are spending a lot. Meanwhile,
Chair Powell, I have only a minute left, so I yield my time back. I want to shift gears real quickly. I continue to believe that the federal banking agencies, including the Fed, should scrap the flawed Basel III endgame proposal and start over. At this point, the last thing a first-time home buyer, a small business owner, and constituents, as you said, low-income people who are rural people, for example, in my community, the last thing they need is harder access to capital, which is exactly what that proposal does. The public knows it and doesn't want it.
I mean,
either,
Celsius is
with
waking
a
up after
whopping
hitting
97% of public comments being negative for this proposal. Chair Powell, don't you agree that with the overwhelming negative reception of this proposal, that it shows a lack of public support?
I do think that's fair to say.
Thank you. I yield back.
The gentlewoman from Colorado, Ms. Pedersen, is now recognized.
Thank you, Mr. Chairman, and thank you for your service in such difficult times. We sign up to serve and we don't know what's going to come our way. When I think about what we've been through as a country with a global pandemic, the economy in collapse, and what this Congress was able to do to infuse money to keep our small businesses afloat, critical services available, and making sure that we were in a position for the quickest, strongest recovery in the world. And while we have a lot to feel proud of, we recognize and have had many conversations throughout this committee about the pain points that people are continuing to feel with rising costs. And you touched on this. I really appreciate the discussion around housing in an earlier question, because this is the greatest inflationary costs, especially in Colorado, where we have seen significant home price increases. A lack of supply. People are unable to move because they would go to a much higher interest rate, and then people are unable to buy because they can't afford those mortgage payments. And so while you've talked about recognizing that lowering the interest rates will actually help with addressing the housing crisis, we still have a lack of housing supply. So can you talk a little bit more about what's happening, and that the lower interest rates are only a piece of this?
Randall.
It's a longer term
ازيك
thing,
حبيبي?
and a lot of it is
Did MO pop
it's
up?
harder to
It went
get
down in the
lots
morning.
and zoning and
Yeah,
materials and
it didn't get
workers,
past the
and,
47,
in
or
many,
it did
many
for a little and then came down.
areas, the
We got our
near-in
dividend, though.
Areas are all built up. If you look around Washington, I grew up near Washington D.C. and it was countryside. Just a
Yeah,
couple
arm
miles
circles.
outside
I was just doing
Beltway.
my
It wasn't a
stretches.
Beltway when I
It's
was
my
born, but
bro. My hamstring
ultimately,
is messed up. It's super
just,
tight.
We have not enough housing, and that was true before the pandemic, and certainly the pandemic did slow down housing construction. I think we'll get back to a more normal economy with lower interest rates and those sorts of things, but we're still going to have housing shortage.
Absolutely. When I think about the other pieces of the fallout from the global pandemic and the changes that we saw in our economy was in commercial real estate. And I've continued to read about regional bank failures and the risks that the commercial real estate poses in the long term for those assets being on the books for our banks. What is your insight on the risk that it poses for our financial stability, and what we should be thinking about here in Congress?
So the commercial real estate situation, which is, it's significantly downtown office and related retail and things like that. This is something the banks have been working their way through for the last couple of years. I think it'll take more time, more years
come back
to work
up.
all the way through it. We know from the stress tests and from our own work that the large banks, they're going to be okay here. Some of the regional banks and smaller banks have what you would expect, which is high concentrations in their local community in real estate. We are aware of those. The banks are aware of it. I think the supervisors have been around those banks, making sure they have capital, they have liquidity, they have a reasonably, not too optimistic assessment of how much capital they'll need, how big the losses will be. So I think we'll be working through this, and it doesn't seem to be a systemic problem or one that threatens broader financial stability. It does threaten bank profitability and those sorts of things, but it'll be with us a while. We'll just keep working our way through it.
And the ability to continue to loan to small businesses because you're being locked up. You are not going to have enough time to answer this question, but my remaining outstanding question is around the recent Chevron ruling and how you anticipate that impacting the Fed's ability to adjust to the needs of the country and ensure financial stability without being sued at every turn.
We're just looking at all these new decisions, so in its earliest day, I speak under the control of my general counsel, who I don't want to cause him to strike me.
That's how I feel about my staff. I mean, not striking me.
No, but I mean, look, ultimately, we're already very careful at the Fed about keeping within the law. really committed to that value. And this ruling doesn't change that. But I think we'll continue to be an institution that's strongly committed to the rule of law.
Great, thank you so much. I yield back.
Thank you.
Gentlelady yields. The gentleman from
That's
Wisconsin.
crazy. I didn't even
Mr.
know they got
Fitzgerald.
Taylor Swift.
Chairman, thanks for being here.
That looked like
There
Taylor.
has been a lot
Taylor
of talk
Congress.
about Basel III.
That looked like
Wanted to
Taylor
just
Senate.
change that
Taylor,
subject
nothing
a little
gets
bit.
passed in
Long-term debt
Congress
proposal,
swiftly.
I think should be rewritten and reproposed as well. But at the very least, the rule needs to be tailored.
These look like Taylor Swift's
as
dad.
law requires.
That's crazy.
So
They got
that
the whole
regional
family
banks
out
are
here.
treated more harshly than the largest banks, of course. In particular,
Taylor
the requirement
Fisk.
for regional banks to hold long-term debt at both the holding company and insured depository institution, that seems to be a
Thank
a
you.
burden,
Your
is
son's
what we're
watching.
hearing,
He
I
asked, what
think.
is this? This is listening
I
to
just
old
wanted to
guys in
mention
Congress
that
grill
I
our
would
favorite
hope that there
financial
would be some
character.
flexibility for
But get a
smaller
long-term.
regional banks.
That's all.
to
Just get a long-term for the little guy.
resources, because they're obviously, there's some resources that are loss absorbing, I guess is the way you would consider them in the reproposal. Do you have any thoughts on kind of how this is playing out right now or what this looks like?
Yeah, so on the long-term debt thing, we put it out for comment. We've received quite a few comments, and staff has been analyzing them, and that's something we're well aware of the concerns that have been raised, and we're thinking carefully about how to move forward on that. The other one was prepositioning that's more along the lines of the discount window and the liquidity requirements, I take it. So
Right.
So, we haven't made a proposal there yet. We're thinking carefully about that. I think we're trying to learn the right lessons from what happened last spring at Silicon Valley Bank and a couple other banks, and one of them just is the discount window worked, but we could certainly modernize it, make it more effective. And also, we learned, that bank runs are moving just a whole lot faster, at least in that case, and that even bank runs from 10 or 15 years ago were nothing like as fast as what happened in Silicon Valley. So we need to bake that new learning into the liquidity requirements in some way or other. We, again, haven't made a proposal. When we do, of course, it'll go out for comment, and we'll very much want to learn from those comments.
Very good. There's been a clear trend of banks stepping away from the mortgage market, kind of in the face of the increased regulation. That's my interpretation, at least. Non-bank lenders have stepped in to kind of fill that void. Today, banks support the non-bank lenders and the broader housing finance system through the so-called warehouse lending for home mortgages.
Gold about to get back up to 2039 day.
I'm deeply concerned that some of the, as was mentioned by my colleagues earlier, that some of the Basel rules could harm both bank and non-bank lenders alike, kind of undermining the liquidity and kind of the raising costs of home buyers. So let me just ask, in regards to Basel III, the endgame proposal, could it make housing finance less stable, I guess, is the question.
So that's certainly not the intention, and we're again well aware of the concerns that have been raised, and certainly paying careful attention to those.
Despite the smaller issuer exemption for debit interchange fee cap, insurers with less than $10 billion of assets reportedly lost about 35% of inflation-adjusted interchange revenue. Have you considered the impact the further reduction of debt interchange will have on small financial institutions with less than $10 billion of assets?
Yes, so that's another one where we put out a proposal, we got a lot of comments, and we're carefully reviewing those, and you're certainly aware of the specific concern that you raised.
As you may know, the latest Fed Y14 proposal, which is used to help collect data for Fed stress tests, asked banks for more detailed data on bank lending to non-banks. As a result, there's concern that the Fed may start trying to indirectly regulate non-banks and the financial risk. I just talked to one this morning that's concerned about that. So given those concerns raised about the lack of transparency in its stress testing models and the potential unintended consequences, is the Fed planning to indirectly regulate non-bank financial institutions through these tests?
That's not the idea. The idea is we see intermediation growing very quickly,
He's wearing
in
the same tie as
non-banks.
yesterday.
And, we don't regulate them.
Fun
We don't have a secret plan to regulate them or anything like that.
Yeah,
It
email
is-
me, Bunny, and
but
I'll
the
answer that
question is
after we're done with this.
Risks are being kept
I don't wanna
inside the
give you an
banking system,
answer
which we
talking
do
over
regulate
Powell.
and supervise. And what are the relationships between these large non-banks and banks? And, we don't have a preconceived answer to that. We just want to understand what are those business relationships like, and what kind of risks does that mean the banks are running? That's all it is.
Thank you, Chairman. I yield back.
The gentlewoman from New York, Ms. Velasquez.
I think there's
is now
only
recognized.
5 minutes
Thank you,
left.
Mr. Chairman. Thank you,
I use
Chairman
ZB.
Powell,
I
for
use the
being here this
futures,
morning-
but
today.
it's one thing to
Almost
trade
now.
them as much as it is
Once
be
the
aware of the
Fed
rate.
is
Go look at the
reassured
whole entire
that
bond curve.
inflation is
Go to
under
trading
control,
economics, click on
what
bonds,
does the path
and then go
back
through
to
the whole
neutral
curve.
interest rates look like?
No, this
we
is
said that
live.
we wouldn't reduce rates
The
until
one
we
yesterday
were
was in
confident
Senate.
that
This is in the
inflation
House.
moving sustainably down to 2%. I think the question of what is neutral is going to be an empirical question. I think it seems to me it's unlikely that we'll be going back to the very low interest rates of the pre-crisis period. But we'll know that we won't know that until we get there in a way.
And the Fed's dual mandate comprises of price stability and maximum sustainable employment. As the Fed is thinking about inflation and the possibility of interest rate cuts, how are you balancing these priorities with the need to maximize employment?
Tesla is coming back up.
Over the past couple of years, we've had a very strong labor market and inflation well above target, and that has led us to focus mainly on bringing down inflation. Over the course of 2 years, inflation has come down pretty significantly. There's more work to do there. We're not at our target. We need to keep on that job. At the same time, the labor market has cooled pretty significantly. And so I would say those two goals are now much closer to being in balance, and that means from a policy standpoint, we need to be paying attention to both of them. Whereas for the last couple of years, really, we had to pay mostly attention to inflation.
Chairman Powell, I have told you that I will be asking for a status update on the Section 956 rulemaking
Chewy is
at
climbing
every
back up.
future hearing. Since your last appearance in March, several of your fellow regulators have issued a proposed rule. Why did the Fed choose not to sign onto this proposal?
So what we're doing is we're looking at the current state of affairs as it relates to incentive compensation. As you may know, we've had guidance in place now since 2010 for all banks.
Coming back up.
and
High
we
ticker is actually
supervise,
gassing.
pretty
Remember, more
significantly
names
around
were
that.
green than
So
not
it's a very
today.
different picture than
I
the
wanna
one
say that's the
that
same.
was there in 2010. So
Yeah, SPY
we're asking ourselves,
323
what
in the
is
green,
what is the
178 in the
situation
red.
today, and how do we tailor
NASDAQ
a
61 green,
proposal
40
to
red.
address, the residual
Then
risk
Dow
as
Jones,
opposed
19
to
green,
what
11
the
red.
situation in 2010 was.
Yes. In previous hearings, you said that you need to better understand the problem in order to write the rule. In a speech in June,
That's 100K,
SEC
baby.
Commissioner
Now 990.
Lizarraga
Those are
said,
99.
and
I'm
I
assuming
quote,
good work,
"It
baby.
has been
Finger
well
to the sky,
documented
man.
that in the lead up to the financial crisis, pay structures often encourage big bets that maximized short-term profits but ignored bigger, longer-term risks that threaten to take down the entire financial system. Additionally, since your last appearance, several of your fellow regulators have moved toward with a proposed rule. Why have your fellow regulators and Commissioner Lizarraga been able to understand the scope of the problem and the Fed has not?
Well, I think the quote
Meta's
absolutely
hitting a
makes
high.
my point, which is
Again, they
I
got
think everyone
upgrades. They
agrees
started off
that
slow in the
incentive
morning.
compensation practices before the global financial crisis were not in a good place. However, we published guidance on incentive compensation, binding on all, well, not binding, but guidance for all banks in 2010, after putting it out for comment. A lot of thought went into that guidance.
Why is he getting mad?
And now we supervise on that guidance. And so the situation with incentive compensation now and banks is completely different than it was
This is the
before
Elizabeth
global financial
Warren question from yesterday.
Completely different.
If you guys
Well,
don't work, he gets
you
mad
know,
at this
the-
topic.
The other regulators have been able to figure this out.
Every
and you
time he
haven't.
gets- yeah,
But
every
let me
time
just
he's asked
say,
about this, he gets
This is not
pissed.
how congressional mandates work. Of all the rulemaking provisions in the Dodd-Frank, only 148 were mandatory. And of those, only 22 had a deadline of less than a year after enactment. Section 956 was one of them. And I hope that you come to the conclusion that it is your duty to issue the regulation. Thank you, and I yield back, Mr. Chairman.
Section 156 requires either a rule or guidance, by the way. It does not require a rule or guidance.
Mother.
Thank you.
The gentleman from Florida,
He hates
Mr.
it,
Donalds,
bro.
is now recognized.
Anytime he's asked
Thank you, Mr.
about the
Chairman,
guidance on the
Secretary
bank
Powell, it's good to see
regulations
you.
and what happened, and they
Let's
grill him, he
cover
hates it.
A lot of different
He
areas of
hates it.
ground. According
You don't
to
really
the
see
Bureau
Powell
of
react like
Economic
that too
Analysis,
often.
Since President Biden took office, the price of goods has continued to outpace
By the
family
way.
incomes, with prices
Rule
increasing
or
now
guidance.
19.3%, while
thought I'd throw
average
that out
weekly
there.
earnings have only increased 14.6%. So families have fallen behind with respect to their purchasing power, that they're able to go and acquire goods. What role has government spending played in creating this untenable economic crisis?
Gold is coming down a little bit. I thought it was about to break out there.
I'm sorry, I can't hear very well when the
And
door's
then bonds
open.
came
So
up. a
I'll
little.
repeat, that's fine.
No, I heard you.
Oh, okay.
That needs to be closed. So what role is government spending as part of the story? So government spent, we had our rates really
Russia
low.
CPI came in 8.3
The
versus
pandemic
8.6.
happened and we closed the economy
For
and then
those of you
reopened it.
interested.
And I think you saw a burst of inflation, everywhere in the world. And certainly there were many contributors to that.
Do you think that
Okay,
the president
SPY's
in
about
his
to hit a
budget
new high,
calling
at least
for
the
an increase
futures
in-
are.
of federal spending, up to
You're
upwards of
3/4 of a
5%
point
increase
away.
in federal spending across the board? Do you think that's going to have further implications on stubborn inflation plaguing the pocketbooks of the American people?
It would be inappropriate for me to comment on the president's budget.
The only reason why I would ask Mr. Powell is because obviously the Federal Reserve is having to respond to various aspects of fiscal policy coming from Capitol Hill. Regardless of the president's budget, would it be appropriate in the current environment for federal spending to increase 5%, 10%, 15%?
Honestly, that's a question for elected representatives. We don't play a role in fiscal policy.
Oh, fair enough. Is it the view of yourself and the Federal Reserve Board that fiscal policy does create impacts on the Fed's ability to manage monetary policy for the United States?
We take fiscal policy as a given, and we're not commentators. We're not the Congressional Budget Office or the Office of Management Budget. Whatever fiscal policy happens up here, we decline all opportunities to be commentators on it. We take it as a given, and that's because we didn't run for office. We don't have that job. We stick to our knitting, and the fact that we're independent really depends on us sticking to what our assignment is, which is to deal with things with the economy as it is.
I would argue that the fiscal policy of the United States has given you guys a lot more to deal with, and whatever the various burdens that come with it. Unfortunately, you have to tangle with it, but the American consumer is the one that truly has to deal with it. I'm going to move on. The Monetary Policy Report cites a pickup in immigration as one of the major factors that has improved the supply of labor.
Why is it
However,
making that
labor
noise?
force participation rate remains below pre-pandemic levels. What percentage of the increased foreign-born labor supply, to your knowledge, comes from illegal immigration?
What percentage of the?
I can't
say again
answer
the
that.
question.
What percentage of foreign-born labor comes from illegal immigration?
I think all of foreign-born labor comes from immigration.
No, illegal immigration.
Illegal.
Illegal,
Sorry,
sir.
didn't get that.
He's like, why are you asking
I
me
don't
that?
know the answer to that.
All right, well, one of the things that I think will be important to help, I guess, advise Congress on what to do going forward is if the Federal Reserve had some data to that regard to help us make further decisions into the future. Chairman Powell, let me ask you this one overarching question. Obviously, interest rates, if you compare it over the last 15 years of monetary policy, is at an elevated rate. Does the Fed anticipate any possibility of rates being lowered, whether it's 50 basis points, 100 basis points, at some point over the next year or two.
So
Well, yeah,
I guess
right?
if the question really is, where are interest rates going to settle out when all of the effects of the pandemic are really done? And no one knows. This is a great discussion to have, but I think my sense and
Okay,
pretty
did that
commonly
weaken to
people
a new
think
high? It did.
we probably won't go back to the.
You hit a
that
new
era
high on that. I don't think you
between
hit your
global financial
5,600.
crisis and the pandemic, where rates were
55,
very,
99,
very low.
59.
Inflation was very low.
So that's either going to be the
And-
top of
and,
the day,
you
or
know,
we're going to rip through
extremely
it,
low. There were
like 7 to
major
10 points, and then
European
come down.
countries that had negative 10-year bond rates, negative, and that was not the case here. But I don't think we're going back to rates that are that low. We think that things like the neutral rate are driven by slow-moving forces, but ultimately, you can see the effect. We have, our policy rate is over 5% now, and it feels like policy is restrictive, but not, intensely restrictive. So that suggests that the neutral rate of interest, at least as of now, will have risen somewhat, which means
It's
rates
going
will be a
back
little higher.
up.
Okay, thank you so much. I yield back.
Thank you.
Gentleman yields back. We now go to the gentleman from California, Mr. Sherman, who is recognized for 5 minutes.
Why is this still going on?
Mr. Sherman?
50. Oh my gosh, you hit it.
Move on.
5,600.
If it's Josh's
Well, you're going to have to
turn,
wait
it's
till this
Josh's
ends, though.
Gentleman from New Jersey is
I
recognized.
can't interrupt Powell.
Thank you,
Pump
Mr.
It Up.
Sherman.
We've had this
Thank you, Mr.
situation
Chairman.
before. So bear with me.
Chairman Powell,
Your Pump It
you
Up
have
is on
said
deck.
that custody assets
It's
are
good for all the
off
people who come in
balance
late and they're
sheet,
like, "Did you pump
always
it
have
up?"
been, and do you stand by that?
Sorry, say that again?
You've said that, quote, custody assets are off balance sheet, always have been. Do you stand by that statement, sir?
I think as a general matter, yes.
The SEC's Staff Accounting Bulletin 121 affects a core banking activity, custody. The specific bulletin requires banks to put digital assets held in custody on
Bro,
their balance
bonds
sheet,
rocketed up
effectively
too.
keeping banks out of the market entirely. Have the Fed and the SEC had conversations about the impact of SAB 121? And just want to
Well,
get
I
a
can't
sense of your
believe we
thoughts
already
on the
hit
policy, please.
5,600.
So as you know, I think we don't comment on the SEC's policy. They don't comment on our policies either. So I know that I knew you were going
Man, even
to,
bonds ramped
SAB
up pretty heavy. I
121
think
on that,
bonds
but
are on the green,
honestly,
yeah.
It's the SEC's
Look at that.
business.
So bonds went
not
red
ours.
and now they're green. They've been moving like 0.5% today.
Last month, you said that when evaluating inflation data, you consider whether wage growth is
Japan
outpacing
plans
productivity.
for more tanker
From
imports to
1979
tackle jet
2019,
fuel
middle-class
shortage.
workers' productivity grew about 60%, while their wages grew by about 16%. Do you consider this historical gap when considering whether to hike rates on families obviously struggling to make ends meet?
So we're looking at inflation and we're looking at maximum employment. Those are our goals. We don't really have the ability we don't have a bunch of different tools for things like what you're talking about. So really, it's just those things. Of course, we're very well aware of longer run trends like that. You have
Japan's
to also include
tankers.
benefits, though, in that analysis, which does close that gap quite a bit. You just mentioned wages.
NXPI and ON.
I appreciate that. Thank you. Mr. Chairman, yesterday the Director of National Intelligence said that, quote, Iranian government actors have sought to opportunistically take advantage of ongoing protests regarding the war in Gaza, end quote. They have observed actors, quote, observed actors tied to Iran's government posing as activists online, seeking to encourage protests and even providing financial support to protesters, end quote. As a member of the House Select Committee on Intelligence, I'm equally concerned about our adversaries meddling in our financial system. Can I have your commitment, or if you can discuss the work, if you're working with other federal agencies to investigate and address foreign interference channeled through our financial institutions?
So we do take part in many of those things, especially at the staff level. And as you know, there's a lot of focus in the intelligence community, and it's very helpful to the banks, the commercial banks, and to us. But we're certainly very focused on those issues. We've got a strong team. Of course, you're never able to sleep on cyber risk, but we just keep fighting it.
We just keep fighting
I would like to switch gears to the discount window, please.
Why did that sound
we've heard
so
that
like,
the discount window is
just-
behind
we
the
just
times in
keep
terms of
fighting
its
it?
operations. We also continue
I
to
don't
hear
think
that
you're
efforts
fighting
to
it. It does not
modernize the
sound
discount
like that.
window and encourage its use will be ineffective without reducing the associated stigma. The usability of the discount window is an
I'd watch
important tool
bonds,
for
though,
banks
again.
that
I mean,
need
this whole week,
liquidity.
I'm more
Just
fascinated
wanna
with
get a
what
sense
bond
of
yields
efforts
do.
underway
Again,
to
granted,
make
you
the
are
discount
hitting a new
window
high
more
every
realistic
day,
option for
but
banks that need
still,
liquidity.
you just hit a new all-time high, 5,600.
It's a couple things.
That bond
First, it
move,
is,
I mean, pretty much, we were
we
almost
need to
100
modernize
points
our
lower,
infrastructure. You know,
and then the rates were a quarter
discount
percent
window in
lower.
our system
So that's
is-
kind of the
is not- it's
fascinating
not a
part. Do the
primary
bonds
source
catch up
of
or not?
Credit. It's a source for banks that they can use under certain circumstances. So, but we know that the infrastructure is a little tired, and we're investing in that and making it more user-friendly and all that. So that's a big
Welcome
project
back,
that's,
Sam. Hopefully you
going
got
on.
that
So
long
the
term,
second
baby.
point was,
and I got a good long-term question
stigma.
we're going to go over
Stigma
after this.
is, that's tough. That's a tough one. And
That's a
you know, it
tough one.
amounts to-
Stigma. That's a tough
There are a lot of
one.
ways
I
to get
know.
after
It's
that. We're
difficult.
studying all of them. You know, in a sense, if you require banks to use the discount window, then that can help with the stigma. I think, I mean, this is a big ask, but, you know, when Congress required us to publish the names of discount window users, that didn't help. It doesn't help at all, because banks basically say, we're not going to use discount window because it might, you know, people might see us as troubled, and that's not what we want. We want people to be able to freely use the discount window. So we've been focused on this issue for a long time, have not made a lot of progress on it, but right now I think we're very focused on it.
Thank you, sir. And I'll yield back. Thank you.
Gentleman yields back. We now go to the gentleman from New York, Mr. Lawler, who is recognized for 5 minutes.
Lawler.
Thank you, Mr. Chairman. Chairman Powell,
All right,
to
I'm
the
waiting.
best
I
of
want
my
a new
knowledge,
high.
the
I'm gonna
last
probably
public
short the
meeting
next high,
between you
but
and President Biden
I don't want to go
occurred
for
on
it now.
May 31st, 2022.
I need it to
Does
go
that
past
sound accurate?
5,600.
I'm going to take your word for it.
Okay. Have you had any private meetings with the president since that time?
Oh,
No.
this is the question they
Any
asked
phone
Yellen.
calls with the president?
I don't believe so.
Nope.
Is there any reason why you've not met with or spoken to the
Apolitical.
president?
I mean, I meet with any president calls, you come and you meet, but that hasn't happened, so.
So in over 2 years,
I
with
forgot which
inflation
Powell's number.
still
How do I call?
nagging
Which
us,
number?
with Cost out of
Fuck that,
control.
just tell him,
President
yeah,
Biden
he's
has not
good.
asked to meet with you in over 2 years.
I haven't had a meeting with him. He hasn't sought a meeting, and of course, I don't seek meetings, so you have the date. I don't.
But to your knowledge, in the last 2 years, you've
New
not
York
spoken
Democrat
with or
Pat
met
Ryan
with the
calls on
president.
Biden to step aside.
He shook his hand in a line once, but that wasn't a conversation. It was just.
I shook his hand in a line. Wow.
It was at a state dinner. I attended.
They're
going to
use this, the media. They did it with Yellen yesterday.
a few months ago, and I shook his hand. Good evening, Mr. President, and that was it.
Does that not strike you as odd that the president has not sought to meet with you?
Not at all. Not at all. We're an
Mr.
independent
Chairman.
agency, and
Mr. Chairman.
What?
Parliamentary inquiry, please, Mr. Chairman.
Wait, what?
I'm sorry.
Am I recognized?
I want to answer your.
Why won't they let him answer it?
Thank you, Mr. Chairman. I make a point of order under Clause 4 of Rule 17.
What?
The gentleman's words are disorderly and violate the rules of decorum in debate insofar as they are negatively reflecting upon the personality of a candidate for president of the United
Wow, bro, he just fucking, he said, nope, decorum
Not
violation.
engaged in any personality.
What the fuck?
In any, his question.
Damn,
about
bro.
anyone at this point. I'm not sure where you're going, Congressman.
That's crazy.
We have
Congressman is recognized.
Thank you.
Mr.
Thank
Chairman.
you.
Happy to answer your question.
Yeah, the chair said, fuck you.
Thank you.
Mr. Chairman, I'd like to
Not at all
continue with the
unusual.
point of order.
Dude, what the hell? That's wild.
Mr. Chairman,
He's not banning him. He's
we
trying
have
to say,
been
no, you can't talk
admonished in
about
this
this.
committee that we
He's
should
saying it's
not,
out of decorum and it's
have
talking about
words
the
that
personality of a
negatively
presidential
reflect upon
candidate.
persons who are running for president. This would include Mr. Trump as well as the current president.
Didn't the ranking member do a whole opening monologue
Chairman,
diatribe about some ridiculous
Would you please
Project
rule my
2025?
friend out of order, Mr. Chairman, until you rule?
He's trying to snitch. He said, rule him out
Mr.
of
Lawler has not admonished or said anything negative about the president at all.
Chair's like, nah.
I just listened to his comments. So
Jeez,
I'm
bro,
gonna
that's
recognize the
crazy.
congressman again.
So somebody
Mr.
in the
Lawler,
House had
New York.
enough of this anti-Biden
Thank you,
shit.
Mr. Chairman.
Yeah,
Ms.
you're
Powell,
not
you were
answered. Don't
trying to
fucking
answer
talk
my
about
question.
this.
So we're an independent
Even Powell
agency.
wasn't even Powell said that's not unusual at all.
administration
I
has
wasn't
been
even
very
turning bad.
respectful of,
I don't know why he did that.
Fed and not.
Wow, that was the most entertaining thing we've
wanting
seen
to
in this.
Try to influence and things like that. And
Bro, he literally just
I don't
stopped
find
him.
it at all unusual. I've been at the Fed for as my 13th year, and I think there can go by long periods of time when the Fed chair doesn't meet with the president, and that's totally fine.
Okay.
Dude, what?
Since you made mention of the independence of the Fed, and I know you pride yourself in that independence.
See, you only see that if
you
watch this shit
acknowledge,
live,
or do
'cause we're
members
nerds.
of the FOMC
That's
acknowledge
wild.
that a rate cut in September could be viewed as political just 30 to 60 days before an election?
So our undertaking is to make decisions when and as they need to be made based on the data, the incoming data, the evolving outlook, and the balance of risks.
That's crazy.
And not in consideration of other factors, and that would include political factors. We will make those decisions. We have a long history of doing that, including during election years, and that is the undertaking we'll make. Anything we do will be very well grounded, and you know, it's just not appropriate for us to get into the business of thinking about election cycles at all, one way or the other.
So inflation year over year from May 2024 to from May 2023 to May 2024 is up 3.3%. Overall inflation. Energy inflation is up 3.7%. Food inflation up 2.1%. With inflation continuing to be a challenge, do you see a rate cut as a possibility at this moment?
So I think you're quoting the CPI numbers, which are operating at an unusually high gap
Crowd
to the
flushing
PCE.
even more.
For 25 years, the Fed has focused on personal consumption expenditures inflation, PCE inflation. And usually
And
the
new
gap
high
to
on the
CPI
SPY
is
now.
only 25 or 30 basis points. It's more now. So the PCE numbers, the current
I wanted to
PCE
like
numbers are
overshoot if I'm going to go
2.6%
for a short.
headline,
Low key, I kind of wanted at like
2.6%
5607
And
to
we've
5615, or
for
I say fuck it,
good long
don't make
period.
a trade, and then just wait
Our
till the last
test
10
for
minutes.
being willing
Because I already
to
hit the
consider,
first one, so that's why
beginning
I'm
to
like, I don't
loosen
know if
policy,
we're going
and
to
that
really
test is
go too
that
crazy
we
there.
wanna
But this
be
is
more
that second
confident
pop I
that
was looking
inflation
for.
is moving on
But
a
I want
path
a real
sustainably
overshoot.
down to 2%. Not at 2%, but on a path sustainably to 2%. That's the test we've articulated. I have some confidence, as I said earlier, that we are on a downward path.
That's a
If you look
huge
at the
overshoot
data,
now.
It's pretty clear that
Is
we
Apple
have
the
not
driver of that?
that we have
Because high ticker is
sufficient
fully
confidence,
gassed.
and that will
Apple had a huge pop there
decision that
too.
our committee makes.
Yeah, I would just note, obviously, CPI, the price of goods, the price of
Yeah, that's a
purchasing
huge pop, bro.
home,
Apple just shot up
price
$1.
of a mortgage.
Apple
cost of a
aims to
mortgage,
ship
it's been
10% more new
astronomical.
iPhones in
Westchester County, for
24
instance, where I
after
represent,
bumpy
the average mortgage
23.
cost is up $1,000
So there it is.
a month.
Again, that's the second
over
good piece of Apple
$12,000
news
a year.
today.
In the
Remember, it
time
got
I have
the
remaining,
driver this
quick
morning
question,
off of
in
the
your meetings with
PC
the president,
shipments.
Have you noticed any mental or cognitive decline?
No.
Thank you. I yield back.
Point of order. Gentleman's time has expired. Gentleman from
Point of order,
Texas.
Mr. Chairman.
Point of order.
Yes, Mr. Chairman. The gentleman just mentioned the president's cognitive capacity.
What the
And,
fuck, bro?
I
Who is
believe
this
to
guy?
be a violation of the rules with
Bro,
with
Mr. Green, come
relationship
on,
to
bro.
decorum, and that this,
Dog, that's crazy.
goes into a personality of a president.
Gentleman's time had expired. You're recognized now for your 5 minutes, Mr. Green.
Let's hear Mr.
My
Green.
point of order is to be made immediately after the gentleman's statement. And
He's
that's what I'm
rejecting
doing.
your point of order. He didn't say shit.
I would remind members not to engage in personalities and comments about the president.
But, Mr. Chairman, if I may, with my point of order, I demand that the gentleman's words be taken down insofar
Bro,
as they
this is
negatively
wild.
reflect upon a candidate for president.
No, this
of the
isn't
United
coordinated, bro. It just this is somebody getting sick of this whole Biden shit. He said, "Don't you talk bad about my president. Don't you dare." What's happening? Are they going to
Gentleman from New York, Mr. Lawler, is recognized.
I'll happily withdraw my words, though everybody understood them.
Mr. Chairman,
I'll happily withdraw,
Gentleman
though
Charles
everybody
is
understood.
I find
Mr. Green,
his
you're
final,
recognized.
if I may, Mr. Chairman, his final comment was, although everybody understood them, in my opinion, that then brings us right back to where we were before he made his
Nah,
attempt to
bro.
withdraw.
Fuck
Now,
that.
if he's willing to withdraw appropriately, I will not demand. But until he does so, I
Google
demand that his
healthcare
words be
partners can
taken
now
back.
access Fitbit's
The
irregular heart rhythm
gentleman's time had
detection.
expired.
Check, is it
Mr.
Tandem?
Chairman, the time does not
Abbott.
expire on,
That would
on
be a
the
sympathy.
request that I've made. The point of order. The time didn't expire on that.
I recognize
Let
Mr.
the
Lawler.
record reflect, I withdraw my words.
Thank you, Mr. Chairman.
Damn.
Gentleman from Texas.
Well, he
Mr.
got him to
Green is now
withdraw the whole
recognized for
thing.
his
It's
5
kind of like court. If you got, like, we were asking a question, they're
Thank
like,
you,
withdraw it, like,
Mr.
essentially.
Chairman, and I thank
I can't
the,
go in the
chair
record.
for
Man, this
appearing
guy, I don't
today.
even want to listen to this guy
I hope
anymore.
things are going well
That
with
was
you.
fucking
I know that
crazy.
This is a difficult time for you.
He's the only
And,
person
quite
so
frankly,
far
it's
between
been
the
a
House and
difficult
Senate
time for a number of
who has
years,
complained
and
about
proved to be quite
asking
resilient
Powell
and
about
quite
literally. They
effective
asked
at what you
Yellen
do,
the
so
same
I
thing
thank you for
yesterday
what
if
you're
she's met
doing.
with the president.
I do want to ask you
That's fucked
about
up.
several things, and I hope that I'll get to them. But first, there was a post-failure lessons report after the failure of Silicon Valley and Signature Banks. I thought that report was pretty important.
Yeah, I mean, he did get
How
what he wanted,
important
but I
is
mean,
that
this goes back to the whole
post-failure
weirdness of
lessons
everybody
report?
talking about Biden all of a sudden.
It's
You
important.
know what I'm
and
saying? Because
we
it's just
wanted
like,
to
why,
learn the
like,
right
why can't we
lessons
talk
and-
about that?
and make the right
That's
changes
fucking
to
crazy.
both our rules, but also really to our supervisory practices more than anything else, and we're doing that.
And is this something that you believe to be important after each incident, such as what happened with Silicon and the other bank?
Yes, I think we all have a lot to be humble about, and we try to learn from.
It's not part of
learn
this.
from
No,
events.
I think it's a legit question.
Thank you. Let me go
They
on
asked
to the
Janet
next,
Yellen the same thing.
question, which has to
So
do
why
with,
can't you ask Powell?
The banks that
And Powell
are
didn't even say
small.
anything bad.
Let's
If
talk
anything,
about
I
those that are
respect
less than
Powell
$5
more.
billion
Powell
in
said
total
it's not
assets,
unusual.
yet
None
they
of
are
that shit.
subject
It wasn't
to the
even
special
bad.
assessments
I've heard way
of the
worse things about
FDIC,
Biden in the
once
last
the
48 hours
systemic
than that
risk
question.
exception
And to
triggered.
strike that from the
I'd like to
record
see them,
and to have that withdrawn, that makes
exempt
no
from that.
damn sense at all.
Do you
That
have
means
any
you may not
comments
even
on
hear about this, like when it's all said and done.
That's really that's either a statutory matter.
New
or
high
it's a
going up
matter
here
of the
too. Again, that
FDIC's
Apple driver
practice.
big.
So it's not something the Fed has any input into, really.
Okay.
Honestly, I
Let's do
think
this
it does
next,
make
please,
Biden look
as
worse.
time
You
runs
can't even
out.
talk about it
Would
now?
You kindly finish
That's crazy.
your commentary. You were giving a comment on the pandemic and how the pandemic helped to generate this inflation, and you were stopped in the middle of your comment. So would you go back through that, please, so that the public at large can get a better understanding of what actually happened with the pandemic and inflation?
So I'd be glad to, and I think people are now. We have a few years to look back. I think the more years that pass, the clearer we can see what was happening. But I think you look back now, and you're seeing this broadly. What was happening was governments did a lot to support
You know,
economic
this guy's
activity
Texas too.
during the pandemic.
That's
And
the funny part. Mr. Green is Texas.
strongly, and I think in hindsight you can see that there was just a lot of support for demand from fiscal policy.
That was
from
one of the
monetary
strangest
policy.
things we've witnessed,
And that
I would say.
supply was constrained. You couldn't make cars. Supply chains were tangled up. There were shortages of so many things. So what happened was we got a burst of inflation, and the United States got a big burst of inflation, really more from demand than other countries did. Then you have the war in Ukraine, which gave a big burst of inflation more to Europe than to us. And so you wind up with a situation where you've just got a lot of inflation. And my thinking at the time was it's going to take restrictive monetary policy, and it's going to take time for the supply side and demand side distortions from the pandemic to unwind. 2023 was the year when that kind of happened. So supply chains were fixed, the labor shortage was greatly alleviated, and unemployment remained very low. Inflation came down by a very large amount last year, while growth remained quite strong. So this was the year that kind of proved that thesis. Now we're in 2024, and it's a question of
Okay, bro,
finishing the
Spy's
job on
still ripping.
inflation,
I think
which
that
we're
Apple
committed
stuff
to do,
really
while also
woke it up.
keeping a strong labor market, which we're also committed to doing. And that's a balance that we have to strike in our policy. But I think we know more now about where this came from, because we can see what made it go away. And it was a combination of supply and demand, as we had kind of expected.
And two of the most significant factors were the pandemic and the war with Ukraine. Is that correct?
Yes, and it's also the fact that the pandemic summoned forth a great fiscal and monetary response, and that contributed to really strong activity and to inflation.
Can we
without
get it
question.
covered? Yeah, because
we're gonna
maybe
run
you'll
out
get
of
in
time,
trouble
but I have to
for
ask
talking
it.
about
But
it.
if not for
It
that
violated
voluntary
decorum.
response, I know that it's a counterfactual.
Dude, that shit's
but would we
insane.
have possibly gone into.
I'm mine. When was the last time you've ever seen that?
That's what we thought
I don't
at the
think you
time.
guys have
And I
ever
think
witnessed
mainstream,
live somebody
economists
try
were
to
very
call for
concerned
some
that,
like decorum
we never
violation in
literally
one of these
shut the
interviews,
global
especially
economy down for
with Jerome Powell.
period, and then tried to reopen it. We didn't know.
Should be
how long it
ending
would
though
take or
in
how
like
well it
7
would go.
minutes, I believe.
Thank you, Mr. Chairman.
Gentleman's time has expired. We now go to the gentleman from Oklahoma, Mr. Lucas, who's recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you, Chairman Powell, for testifying today. I realize that my questioning point in the hearing today, probably a lot of material has been covered, but there's nothing ever wrong with asking important questions a second or third time. You've reiterated how members of the board would like to see a revised Boswell proposal put out for public comment, and you're working through the process with FDIC and OCC. From my perspective, the FDIC is in a period of uncertainty. The current chairman announcing he'll resign to restore confidence in his agency, and the replacement is awaiting Senate confirmation hearings. And at the OCC, we have an acting comptroller who has not been yet confirmed by the Senate. At the very least, given the expected broad revisions, I hope the other agencies agree that a complete reproposal would be appropriate. So, Chairman, could you give me some indication of what the potential timeline around such a decision to repropose might look like?
It's pretty uncertain, but I'll give it a
Please.
shot. And I'll say again, that these discussions we've been having with the other two agencies have been very
Yeah,
constructive,
CNBC cut this off.
and we very much want that to continue. We've
I
got
think
pretty
after
good
that whole little
agreement
fiasco.
on the substance, and now it's about the process. So
It's not a good look.
a baseline might be that we agree on a reproposal of some
Last
kind.
time you saw it was Marjorie Taylor
gives
Greene,
the
but like
public a chance to
it had
see
nothing
these
to do with
changes
Powell or
and react
Yellen,
to them
and then she was
and write comment
roasting
letters.
somebody's fake eyelashes
that
and
could
body.
happen. We take us a while to write it up.
Dude, this is I feel like completely
and then we put it
different,
out
let
for
alone with
60
Powell.
days. I see
Wild,
that
bro,
couldn't
wild.
happen probably until part of the way through the fall. Then there would be, let's say, 60 days of comment, and we get the comments.
Marquez, baby.
Evaluate the comments and think
My
carefully
man,
about them.
I'm gonna keep that in the
We've done
record. You
that,
know what I'm saying?
we have to write up the final version. and
Yo,
that would take
GE
some time.
popping.
So that probably puts you. My guess is it
And
puts you
SPY
well
still
into
going
next
up.
Year. As I mentioned, these are rules that the banks are going to have to live with for a long time, and we need to get them right. It's not something we should be hurrying on. We need to take our time and get it right, and make sure that we hear the comments. This is a very big piece of regulation. A lot of things will need to be changed. There are a lot of good things in there. We want to come out with a good proposal, and that's what it'll take.
To shift gears on you, Chairman, the
He was leading an
2024
answer of
stress test
cognitive
focused
decline,
on
which was
commercial real
inappropriate.
estate
I don't
risk,
think he was. I think
which is an area
all of that
we've
was
all been paying
appropriate.
close attention
In my
to here on
opinion,
this
you're
committee.
free to have your own, but
Do you
with
agree that the
how
results
everybody's been
show the
asking
financial
certain
system to be
questions,
strong?
they asked the same thing
Yes.
to Janet Yellen yesterday. Again, we even had headlines on it. I don't think any of that was inappropriate.
Folks back home
I think that was
are always
just.
very,
I think a Democrat got fed up,
concerned about inflation.
and that was
the
it.
period we've gone through lately, not just the basic necessities.
I even think
that
Homeboy
we've explored, but the cost of doing
decided to
business and all
withdraw
those
just to
other
not
issues.
start any beef.
The
Like he said,
fact
most
is
people
that
heard it.
inflation's
So
still
it
running
wasn't
above
like-
the
it
Fed's
wasn't- I don't think
2%
that was
target.
bad at all. That's why I
We've
think
seen
it's
significant price
that much more
increases in food and
surprising.
energy over recent years. As you and I have discussed before, I started
did
out
say
as a
he
young
only
farmer
shook
in
his hand in 2 years.
1977
How is that
in
an
the inflationary
appropriate
period
question?
during the
How is
Carter
it
years.
inappropriate?
Then when we went through Chairman
Listen to what you're
Volcker's
saying.
rather,
It wasn't a
of course,
bad. That's not
dramatic
bad.
tightening
Especially
of
when
monetary
Powell's
policy.
response was that's not unusual at all.
And I still remember paying
Powell didn't even
17%
throw him under the bus. That's not.
borrowed
He's
coffee
asking
money
how
when I was a
often you've
student
met
in
with the
college.
president.
I was
They
well
asked the same thing to
collateralized,
Janet
but
Yellen,
that
the
was
head
a
of the
bargain
Treasury.
in the fact that the capital was
It's
successful.
not inappropriate
So
at
I'm
all.
particularly sensitive, being a part of that generation, that if inflation isn't effectively dealt with, it can spiral out of control. Could you expand for a little bit more about your approach?
Doesn't
in
mean
dealing
it's
with
the appropriate
inflation
place. I
in a
don't.
way
What
that
is
doesn't repeat the
inappropriate about
mistakes of the
having
past? I just want to
asking
avoid
the
the mistakes
financial
of the past.
people on their semi-annual
So I
review
think,
their interaction with the president?
really,
Come
one of
on,
the
you
big
guys.
lessons coming out of
I
the
know it's
big-
only a
the high
couple of you who
inflation of the
disagree,
70s, which we
but
both
come
lived
on.
through, is that
Like,
it really is on the
think
central
about
bank
what's
to
happening
be
here.
on
This
the
isn't
case
that.
and
It's
do
not
the
a big
job
deal.
and-
I don't.
and
I
make
think
sure
it's
that
more
it
of a
is
big
fully
deal
well
to
and
try to
truly done.
react to that than not.
This
This is a semi-annual review of your two financial people,
fully
and these guys are
accepted, or
funding
that wasn't
trillions of
necessarily
dollars
the
of your
thinking.
financial
Also,
system,
the independence
and
of
you
central
cannot
banks was
ask
much
them
less respected
about when they saw the president.
So
Come on.
all the more credit to Paul Volcker for having the courage to do it. So we now, that is an internalized lesson for people in central banking these days. We do understand that. We are
Powell,
committed
and
to
none of their
bringing
responses
inflation
were bad
sustainably
too.
down
On
to
top of that, it's not like this
One
was
last
to get
question in
some
my remaining seconds.
that makes Biden
You
look
and the
bad.
leadership
It's
of the Feds
both of
will
them
be there the
had
day
very
before the
appropriate
election this fall,
responses
and you'll be
too.
there the day after the
That's why I'm
election.
like, come
Still be
on.
the same people carefully watching the Fed's responsibilities, correct?
This is my fourth presidential election at the Fed.
Yeah,
and I
Powell
can tell
wasn't,
you,
and
come
Powell
to work
didn't.
the next
He
day
didn't
and do
drag
our
him, and
jobs.
that's why I'm saying,
Gentleman's
it's like,
time
why
has
is this
expired,
even a
and
big
I'll go
deal?
to the gentleman from California, Mr. Sherman.
But to think that's
Coming out of
inappropriate,
COVID,
I strongly disagree
everyone
with
said
that.
a soft landing was impossible and a recession
Hey.
was inevitable. I want to
Sorry, I
commend
saw
you
his
and the
hairline. It's like
administration.
mine.
It looks like we've seen a soft landing. We've continued to have historically low unemployment rates and historically low unemployment rates for people of color. And in the last 18 months, we've seen a 4.7-point decline in the inflation rate as measured by the Consumer Price Index. Is that the greatest decline, or I realize you may not have done the calculations, but I did the calculations. It's the greatest decline that we've seen in
on
an
the high.
18-month period this century. Do you have any reason to disagree with that?
I hope that's true, and I'm glad you said it, because it's certainly a lot. I can't validate the statement, though.
I'm sure you have a fine staff that will do the calculation, and hopefully we'll see the press release.
Yeah, that's their first
When
pullback.
Secretary
56,
Yellen was here
63 on the
yesterday, I
futures.
addressed an issue that both
62
you
or
and her should be
67 is where I was
concerned
aiming
with.
for. I didn't take that one,
I've
though.
always opposed Operation Choke Point, where for political reasons, banks wouldn't provide or might not provide financial services. Florida and Tennessee have passed laws giving anybody who's denied a bank account or even a loan a way to claim that that was for political reasons, and it opens up the possibility that banks would be pressured by those laws to release their suspicious activity reports, which I understand are supposed to be private. And so I hope you'll work with the Secretary in making sure that the laws of Florida and Tennessee do not adversely affect our ability to deal with suspicious financial circumstances. You have a dual mandate. I think you have a third mandate that is implied, because the budget deficit poses a great risk to price stability and to employment.
Apple's still
keeping
holding up. Watch
unemployment
out
low.
if that does round two.
And you don't deal with spending, you don't deal with taxation. But in two ways, you dramatically affect the budget deficit. Federal government is the biggest borrower in the history of the world. Interest rates affect
Amen.
the forthcoming budget deficit.
Okay, I'm going to go pee. I think this is about to wrap
At
up.
times, you've turned over to the federal government up to $100 billion in profit. And so I hope that you would consider whether your first two mandates imply that you at least have to look at how your policies affect the budget deficit. I hope that you will go with republication of Basel III and insist on that. I know you're dealing with two other regulators on that. A recent assessment by PricewaterhouseCoopers showed that the original proposal would lead to higher borrowing costs for small and medium-sized businesses. And in every way, Basel III seemed to be slanted toward telling the banks, go and put your money on Wall Street, where you just are going to have interest rate risk. And don't loan your money to local Main Street businesses, because there's credit risk there. And in fact, if you had a fair system, you would mark to market all bonds, not just those that are, quote, available for sale. I hope also that as you redo Basel III, you treat energy tax credits, green energy tax credits, the same way you currently deal with low-income housing tax credits, that you keep in mind the effect on the securities industry, particularly municipal bonds, that you don't unfairly to local business say that if it's a publicly traded company, it counts only 65%, and that you look at mortgage servicing rights as an asset, and that you fully account for the private mortgage insurance. I know you give some credit for that, but frankly, a 80% loan to value and a 90% loan to value that has private mortgage insurance pretty much expose the bank to the same risk. I'll ask you one question about the debit cards. You're planning to provide only, I believe, a 0.3 cents additional charge for dealing with fraud prevention. Fraud is just skyrocketed. Would the Fed consider increasing the fraud prevention adjustment before finalizing its proposal?
And that's part of the comments that we've received on the interchange rule, and it's something that's a concern that we're aware of, and we'll take that into consideration.
I yield back.
Gentleman yields back, and now the gentleman from the great state of Missouri, Congressman Lukemeyer, is now recognized for 5 minutes.
This has to be the last one. I think they started.
Certainly appreciate the thoughtful gentleman from California's remarks on some of the stuff, but I'm kind of curious how Jerome Powell, he indicated you got a third implied duty here to actually work with the budget. I really thought that only Congress had the ability to impact the budget. We're the ones, not even the legislative, not the executive branch, not the judicial branch. The legislative branch is the one that handles the budget. Am I mistaken on that, Mr. Chairman?
I believe that is right.
I don't think you want our job on top of what you got. One of the things that's come across
he actually does the pompous laugh.
Is some of the legislatures this last year around the country
I love it.
have started to pass banking laws that infringe on federal banking laws. Have you seen this? Are you aware of it? Do you have thoughts on it? Can you tell me what your thoughts may be?
Honestly, I have not seen that, and it wouldn't necessarily come across my desk. It might come across Vice Chair Barr's desk more.
Okay, well, I was just concerned because, I mean, you handle lots of banking rules and regulations, and so we don't want to have the state usurp the duties and responsibilities and the legal ability to
these are preemption issues?
Yes, preemption issues is what it's all about.
Yeah, that's a big deal for the OCC issue.
Yeah, so I was just curious if you'd run across any of that, had any thoughts on it. Okay. One of the things, I just got done coming out of a committee hearing with small business a while ago, and there was a home builder individual there, a contractor, and he was talking about the cost of regulations.
Ivan,
basically $1,000 increase in costs about 100,000.
What's your PayPal, Ivan? I have $1,000 for you.
To be purchased because they're no longer affordable.
If you have a PayPal,
so
I can send you Bitcoin too.
With regards to cost of regulations, do you fall under the Administrative Procedures Act?
Ivan, the agent.
Yes. So part of that act is to determine the cost of a regulation, correct? Or the cost of compliance?
I don't actually know the answer to that, but I know we follow carefully the APA.
But I mean, to me, that's a really important point from the standpoint of how you look at rules and regulations to ensure that the cost is not going to be more than the economic benefit of what you're doing. So, I mean, this has to be part of your analysis, I would think.
Ivan.
Certainly, we try to make our rules as efficient as possible and to get the job done.
One of the concerns we have is with, and I think the gentleman talked about the credit
He's
card
not even
situation
listening.
here.
That's why I offered him the money.
And
he doesn't want it.
With regards to the Chevron doctrine.
Because he asked me that question about Nike, and I gave him a full answer. And then he answered. So he's not even listening. He's just putting shit in the chat. Even if I'm like, hey, I'll give you $1,000. He don't even.
Rule,
that's cold, bro. That's cold.
By this at all?
I mean, it doesn't change our assignment under the Durbin Amendment to do the interchange rule. So we're always focused as an institution on compliance with the law. We're a very law-abiding group,
But does it narrow your ability to go beyond or reinterpret laws and rules and things like that? It seems to me that's what the
That'll be a
what the
question
purpose
for
is.
the courts. I mean, the courts will be asking the same question, which is what was Congress's intent for that law? And that's the question we're asking.
What are you getting smoked on?
But what they're saying is courts will give less deference.
I mean,
to
I haven't been.
agencies,
I mean,
think.
so far,
Again,
I think
these-
this
these
last like 2 weeks of trades, I've done
decisions were
pretty
just
good, but I've
passed down. I was
traded
actually out of the country last
substantially
week.
less.
This is all
So,
happening.
I mean, again, this
I
is
had
why I've
no
been telling
time to
y'all:
be briefed on
either
any of that,
swing
so
the day
I'm
before,
kinda
sell
speculating.
premium, or fucking get a
One last
bond
question.
and bill and chill.
I asked this question yesterday of Secretary Yellen. What keeps you up at night? What is your biggest concern with regards
CVX
to your
proposes big
responsibilities
reimbursement
with
cut.
regards to the economy,
Says
with
can
regards to
accord.
the banking system? What is your biggest concern?
So for a long time, it's been cyber.
Oh, they're getting
and
clapped.
the reason is, we know about credit crises and things like that and financial crises, but we haven't really had something where there's a successful cyber attack on a major financial institution or financial market utility. That's always been my answer. I would actually say now, the number one thing that just does keep me awake at night is the balance that I talked about before, which is we're at the critical time of inflation's coming down, the labor market is
Oh,
cool,
that's a
and
different answer.
We want to get it right for the benefit of the
He
American
usually
people.
says
We wanna get
cybersecurity
inflation down
keeps
to
him up
2%,
at
but
night.
We want to keep a strong labor market too, and
Not the
trying
balance
to
of the
make
labor
decisions
market
that
deteriorating.
give that the best chance
That's
to
interesting.
happen. That is the thing that I think about in the wee hours.
We've talked about this before too. You really got a tough job from the standpoint, you're trying to drive down demand and administration by spending all this money, is trying to drive it up. It puts you in a really big box, doesn't it? Thank you, Mr. Chair. I yield back.
Gentleman yields back. Now we have the gentleman from the great state of Illinois.
Yeah, we'll do
Congressman
earnings
Foster is now
previews
recognized
after
for
the
5 minutes.
PHILO, if you could
Thank
wait.
you, Mr. Chairman and Chair Powell.
But I'm down. I got
I guess
Pepsi and
when
Delta
things are
for
going
you.
well, it's as they currently are. It's all of our duties to look around the curve and see it, the risks that keep you up at night. So I appreciate Representative Luetkemeier's question. Now, over the last few years, there have been increasing interest in synthetic risk transfers, SRTs, or credit-linked notes, which are often used by U.S. banks to shift risk away from the banking
This has been going for
system
2.5
and as a
hours,
means of
honestly.
managing
It's
regulatory
way
capital.
past
So
schedule.
I've been concerned by recent reports that the buyers of some of these SRTs may be investing in them using bank-provided leverage, in which case the risk could just boomerang right back into the banking system. Frankly, when I read about this, it triggered my PTSD from the AIG situation with credit default swaps during the financial crisis. Now, I understand the Federal Reserve plays a role in approving SRTs, in fact, issued guidance to U.S. banks regarding their issuance last fall. Could you say a little bit about the ways that these investments can be a safe way for banks to offload risk, and in what ways they could become a dangerous source of contagion?
Sure. So
I think this one's
breakdown
longer
in a
than
couple
what
of
it
places
needs to
in
be.
the chain, as you're obviously
Especially
aware.
after he got
One is
grilled by
just that the
Senate
risk
yesterday.
isn't really well and fully transferred to the buyer. And that's just the first step is that risk going away off the balance sheet in an unconditional kind of a way, in a way that the bank understands? And that's a good thing if banks are able to do that. Then the question is it coming back through the back door with financing? And so we're well aware of that. Banks do tend to bring these things to us, and we look at them carefully. We understand some of the ways it can go wrong. And but at the end of the day, if it works to reduce the risk on a bank's balance sheet, that's something we should be okay with.
Yeah, but there's if you could just say, what sort of insight and control does the Federal Reserve have into all the connections, particularly when the connection may go through businesses that you do not have direct, non-bank entities that you may not have direct oversight over?
My understanding is that this is a very active dialogue we're having with banks. They want to know how this is going to be treated. They don't want to do something that is going to come back on them or that we will deny the treatment on. So I think there's a pretty transparent set of exchanges around how these things work. We're very clear on what we think our requirements are. This is what I'm told, and so we saw what went wrong the last time. I think no one wants to repeat that, including the banks.
Mm-hmm.
So,
well, if you conclude, and as you're actively studying it, that you need more visibility into certain areas of particularly non-bank things that may be part of the chain of contagion, please let us know, because it's our job to avoid the next crisis. I think it's my personal goal to die before we have another financial crisis, and then I'll be doing my job well. Now, I understand also the value of SRTs in the U.S. are relatively small, and the bulk of these are offshore. Is the growth of this practice internationally something you're watching closely, and is there anything that might provide a sign of early trouble in terms of international contagion that might creep back in?
So I haven't heard that flavor of it, but I'll check on that and let you know.
Do you remember with AIG, you know, the real problem with AIG falling into bankruptcy is that it would immediately put a bazillion of the European banks into, you know, into violation of their capital requirements, which was major contagion.
Yeah.
Do you have a sense of the time scale for the liquidity proposal at this point?
I think, you know, the main thing is we have this very large, important project on Basel III, and I think we're pretty close to being able to move that out into the public view again.
Like
and I think once we've done that,
71.
we
It's
can
probably going to
move on
69.
the other things that are there, and one of them is the liquidity proposals, and I don't want to put a specific time frame on it, but you know, we're certainly working toward that sometime later this year, I would think.
Later this year, we'll have the first view of that.
I would think so.
Okay. Can you, I understand it's still under negotiation between
New
agencies,
high.
but can you say
Futures are going up here.
directionally, the Basel III, the new amended proposal, is it just going to be in the direction of sort of weakening it, watering things down toward the current capital requirements, or will there be areas where it's actually strengthening them?
Oh, no, there will be a capital requirement in it that is consistent with Basel III, and a capital increase that's consistent with
My
Basel.
question is, if you look at what the original proposal was compared to, you know, what you intend to put out, are you moving in the direction of more toward, you know, the current situation? And if so,
Hi,
if you can just
665, so
interpolate.
5,
Seems
6,
like
6,
if you have
7 on
comments
futures, that
the
could be
proposal
another
you
point,
put
or
out,
72.
You understand comments on the status quo.
Again, I'm
and
tempted
you're
to take a
somewhere
short for a
between
short-term play, but then I'm like,
maybe you don't need
it's still
another set of
early. I
comments
kind of
'cause
want to just
everything
wait
that
till
can be
the end
said
of the
has
day.
been said.
It's a little more complicated than that, but that's essentially right. You know, you have current levels of capital, you have the proposal, and you have, which is a lot of gold plating, and then you have
Apple
what's
finally
shaking
chilled out.
and that's,
Tesla new high.
But it's
So
more
I just was wondering why you need more comments.
there are many different pieces. The answer is there are many, many different pieces of that.
Thank you, and I'm over time.
Gentleman's time is up. Next, the gentlewoman from the great state of Indiana, Congresswoman Houchin.
Great state
is
of
now
Indiana.
recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you to the ranking member, and thank you, Chairman Powell, for coming to speak with us today. It's been a long day, so thank you for being here this entire time. One of the greatest strengths of our financial services industry is the diversity of our banking system. I know firsthand how important it is for us to maintain options and choice for Americans, whether it's somebody looking to open a savings account or take out a loan to start a small business. Increasingly, however, we have seen consolidation in the banking industry and increased difficulty for smaller financial institutions to survive. One of the reasons for this is an excessive regulatory burden that many of the smaller banks face. While this can come in the form of new proposals and adjustments to liquidity requirements or to things like Basel III Endgame, it can also be due to outdated technological capabilities at the agencies and inefficiencies in and within the examination
Bond auction is
process.
supposed to be at what?
Chairman Powell, could you
In
just
15
talk
minutes
about
too?
what steps the Fed is taking
I forgot
to
about that. You have a
upgrade
10-year bond
technology
auction.
and procurement procedures and update training practices to ensure that the banks that you regulate don't face unnecessary burdens?
So to your point, the number of banks in the country has been coming down for 40 years. And there's consolidation going on for a whole range of reasons. And we're not trying to foster that. We're not trying to push that. And we're aware that, you know, high fixed costs from regulation may be one of the reasons for that. So we do try to keep that in mind, particularly for the smaller institutions. On your question,
Yeah, 5, 56, 11. So you're above the 07, or it's either going to go up to 17.
I might take an opportunity to come back to you.
But
with
again,
something
I mean, you
closer
have your
to
big
the
tech and your chip
specific
names
supervisory
low-key helping all of this out.
That would be
Fair
great.
question.
That would be great. And just for reference, I was proud earlier this year to introduce a bill, the Fostering the Use of Technology to Uphold Regulatory Effectiveness in Supervision Act, or the Futures Act. It's an important bill that would require our federal bank regulators to conduct an assessment to ensure that the technology and training systems they are using will improve and reduce the burden on especially on our smaller financial institutions. At the same time, the bill will strengthen the safety and soundness of our financial system by keeping our regulators up to date on the latest fintech innovations. So I was glad to see that the Futures Act move through the markup earlier this year. I certainly hope to see it come to a floor vote soon. Chairman Powell, in your comments yesterday in the Senate, you said Basel III will need a, quote, meaningful revamp. Before we proceed toward finalization of that rule, I was glad to hear you say that. Considering 97% of public comments on Basel III were negative, with 86% of that negative feedback coming from outside the banking sector. Many of my colleagues here today have highlighted their own concerns with Basel III. Given the pressure that Americans are already facing with inflation and increased interest rates and housing market stalls, I would urge that you take a good long look at the cumulative effect of this rule in context with the broader economy, our small and mid-sized banks, not just the larger financial institutions. Will a meaningful revamp include consideration of the hardships that overregulations cause for smaller financial institutions like those that are essential to rural communities like mine in southern Indiana?
I think it will, yes.
And are you concerned about the consolidation that we are seeing in the banking sector? I know you said it's been going on for 40 years. Does consolidation in the banking sector concern you? And are you concerned that the broader effect of cumulative rules is potentially leading to a further consolidation in the banking sector?
Again, we don't want to be part of the reason for that consolidation. It seems to be happening, though, organically. We allowed interstate banking, for example. Also, I think for a long time, the learning was there weren't a lot of economies of scale in banking. I think with all the technology costs, that old learning is now not really true. And so I do think, in fact, I think a lot of the sort of smaller regionals do feel that they need to grow to be able to compete with the larger regionals. And also, the very largest banks are also present, as you well know, in many, many communities where they weren't 30 years ago. So I think people are seeing a need for scale from a business standpoint. And we don't want to push consolidation. I think we also don't want to stand in the way of it if that's what's necessary for banks to compete with the largest banks.
Thank you, Chairman Powell, again for your testimony. Our financial system is really the envy of the world. We need to make sure that small and growing institutions have the tools they need to innovate without any undue burden. I appreciate your emphasis on that in the meaningful revamp. Thank you, Mr. Chairman, and I yield back.
Thank you. Come on, last one.
Next, the gentleman who set a record for a mile run this morning in Washington, D.C., from Illinois, Mr.
Marion Reddit something.
5 minutes.
Thank you, Mr. Chairman. You looked much better.
Marion software?
Well-coiffed.
Damn, 23%.
This morning than I was.
Very illiquid.
Yeah.
So watch out for that one.
Nice to see
but
you
beginning to
again,
pop.
Chair Powell. Just briefly on the Basel III reforms, you and I have talked about the tax equity provisions and the fact that clean energy tax equity got a 4 times risk weighting relative to other tax equity in the last version. If there is a reproposal, can you give us any visibility on whether clean energy tax equity will go back to the 100% risk weighting that it's historically
I just got halted.
So I'm trying to.
So again, it's super literally $8,000, $10,000 traded on that, and there's nothing else.
So I don't want to get into what the specifics are. I'm hopeful that the 3 agencies can come out
integration with
pretty
Reddit,
soon
they
with
file
the whole package.
Ad data.
Well,
with other
sooner even something temporary, because there are a lot of banks that want to participate that are I think more cautious than they need to be right now. Appreciate that. In 2021,
Apple came right back
I think
down.
you were
That's
part of
crazy.
The FSOC
And then the
report on
SPY's
climate
still
related
rocketing,
financial
so that has
risk
to be
that for
the
the first
chips.
time identified climate change as an emerging threat to U.S. financial stability. Do you still agree with that conclusion?
The conclusion being that what again?
That climate change was an emerging threat to U.S. financial stability.
Yeah.
Okay. I raise that because I've been troubled, as you know from some of the letters we've written, by this April Bloomberg report that said, number one, that Fed officials were pressuring the Basel Committee to make disclosures of banks' transition plans optional, and that succeeded. Number two, that the Fed, OCC, and FDIC were pushing to limit implementation of the Basel Committee's climate risk management principles to remove financed emissions. And number three, that the U.S., unlike other countries, did not propose that any of its banks be subject to an analysis of how they incorporated climate in their credit risk assessments. Have any representatives from your agency attempted to weaken the Basel Committee's work on climate risk, including by expressing concern about the Basel Committee overstepping its mandate with respect to its climate work?
Well, I guess I would say it this way. The Fed does not have a mandate of fostering an energy transition or dealing with climate change. Some of the Northern European banks feel that they do. They actually have
like
that.
this.
It's in their mandate, either explicitly or implicitly, but we don't.
But if we agree that climate change is an emerging threat to the stability of the banking system, are you saying you're not acting on it because you don't have the authority, or you're not acting on it because you disagree with what you said in 2021?
When you say it's and I agree, there's an emerging threat to financial stability.
But not an
that's
emergency.
Over time. I think looking to the banking agencies to lead the fight on climate change is a big mistake. I think it's a job for elected people. We don't have that mandate in the United States. We can do a very limited thing, which is make sure that the institutions we supervise are aware of and can manage those risks. We are not going to be the ones who are forcing them to adopt plans to transition and that kind of thing. That's just not going to happen through the
I don't know why it's
through the
taking so
banking
long.
agencies without a law change.
So
They
then
started late,
if
but
it
this
is
is
the
way
view
more
of the rest
Powell
of the world
than
that climate
yesterday.
change is a financial risk and we're going to regulate our banks, is it the view of the Fed that the U.S. G-SIBs should not be required to report?
You know, again, we're not going to be climate policy makers at the Fed. We are not going to do that. We don't have that mandate. A key to our independence is that we stick to the job you've given us.
Bond auction in 5
And
minutes.
The
though.
idea that we should.
I'll see if it's not
discover
done by the
climate
end of the bond auction.
and
I'll
say,
cut
okay,
it.
we're going to lead the fight on climate. It just if we're
CNBC
gonna
cut
do
it
things
after
like
the
that, we
whole
should be part of the
decorum
Treasury
issue.
Department.
Well, so to be clear, no one's under the illusions that you're the EPA. But you know, I spoke with Janet Yellen about this yesterday. We have multiple states where the insurance industry is collapsing. Something like, as you know well, something like a third to 40% of U.S. wealth is tied up in real estate. And okay, U.S. homeowners are not G-SIBs, but in the 2008 financial crisis, we had risk that moved out of the G-SIBs onto other entities' balance sheets, and we said, well, we're not responsible because it's an insurance company. Well, we've fixed that. You do now have a mandate to, if there's systemic risk in the system.
Announcing
So the
AWS
question is,
App
if we
Studio is
know
the
that
fastest
risk is
way to
moving
build
through the system,
applications.
is the FSOC
that for AI?
monitoring that risk, or is the FSOC's view that if I'm not allowed to look at it, I'm not going to look at it, and it's somebody else's problem? Because somebody else is the person sitting here, right?
I mean-
we're going to be accountable if that risk comes when those chickens come home to roost.
Well, the banks know their risks pretty well, and you see the banks and the insurance companies pulling back from lending in coastal areas and things like that.
No, I agree, but where are they offloading that risk to? If they're we've seen them putting it onto Fannie and Freddie. We've seen Fannie and Freddie try to put it onto the reinsurance industry. The risk doesn't go away.
Time is up.
We don't regulate them.
Gentleman's time is up.
Yield back.
Next, the gentlewoman from the great state of Missouri, Congressman Wagner, is now recognized for 5 minutes.
I thank you, Mr. Chairman, and in keeping with baseball analogies here, I think I'm batting cleanup. Chairman Powell, welcome this afternoon to you. Chair Powell, in your testimony,
Finally
you
saw
stated that,
Idiocracy.
and I quote, longer-term inflation expectations
parent.
appear to remain
Child's been
well
taken by Carl Jr.
anchored.
Let's go, baby.
Would you
Shout out to
please
Law
expand
Tarb.
on that for us?
Sure.
Amen.
So in our thinking, and the thinking of
Hopefully it's the last
economists
question.
and central bankers,
There's bond auction in 5
what
minutes.
the public
so
expects
that'll
about
be our final
inflation is really
catalyst
important.
of the day, and then
because if you
CPI in
expect
the
for it
morning.
to be low inflation, then it probably will be low because you're gonna make sure that's true in your daily decisions. So we measure them. We survey individuals and businesses and market participants, and then we look at market-based. You can also derive market estimates of what inflation will be through various instruments in the markets, and all of those suggest that people expect inflation to be right around 2% over the longer term, and that's been very stable right through this.
Yeah, if you go to the community,
When you
I
say
need to
longer term, sir,
actually.
How many years would
I did make
you
some
be
trades.
estimating? 1 year, 3 year, 5 year? Is there any?
So we look at short and medium term inflation expectations too, and they tend to be more volatile because, you know, when inflation's high, people think that'll last.
And
a
there's
few
your
years.
new high,
One
2
standard
points off
thing
of
is
the
to look
fast
at
level.
5 year, which is between year 5 and year 10. That's a standard way to look, or longer term than that. If you just ask people in surveys over the longer term, you maybe don't specify, but they all give you the same answer, which is people kind of have faith that inflation will go back down to its 2% level.
There has been some reporting lately on shrinkflation. And for our viewers, I'll say this is when you pay the same price for something as yesterday, but get less of it than before, kind of like my bag of potato chips. Some have sought to direct attention away from the pain of runaway inflation that we've experienced and instead blame producers who themselves face rising costs pressures. Yet, I haven't seen any mention of shrinkflation as an inflation cause in any recent monetary policy report. Moreover, a Bureau of Labor Statistics article last year looked at shrinkflation and concluded that, and I quote again, it has a minuscule impact on overall inflation. Chair Powell, from the Fed's perspective and analysis, has shrinkflation been a significant casual or amplifying factor in the runaway inflation of the past several years that has imposed maybe greater pain on American workers and households?
I'd have to say no. I mean, I would say it this way, you know, packaging in the U.S. on food products and that kind of thing, you know, it's going to disclose the contents of the thing, and the price will be what it is, and consumers can make their choice to buy it or not. But we don't think that's a major driver of inflation. No.
I think from a producer standpoint, it probably is. If the cost of the item is exponentially higher.
It may reflect costs on the part of the producer. It probably does, but that doesn't mean it's a cause of inflation as such.
Okay, thank you. So, switching topics, the Federal Reserve has produced volumes of research over the last decade, highlighting the negative consequences of the debit interchange fee cap. Some of the economists who produced that research have even worked on this proposed rule, the Reg II. Chair Powell, was the previous Federal Reserve research demonstrating Regulation II's detrimental impacts to low-cost checking accounts flawed, or did it have incorrect conclusions? And if not, then why would the Fed propose this?
Yeah, I posted the
rulemaking
long term
when
on
all of
the
their
channel.
research demonstrated
So if you go to the community
detrimental
tab,
impacts.
you should be able to see it organized by biggest position to smallest.
I'm not entirely sure what research you're referring to. I'll be happy to follow up with you on that.
Yeah, I hope you are, because I know we're having this discussion about the interchange fee caps and Reg II, and I'm concerned about going forward on that when much of the research that we have seen from the Fed.
So just go to the
has been
community
pretty
tab,
steady
like go to this
over
channel,
the
Stock
last
Market
number of
Live,
years,
and then go to
says
community.
It has quite detrimental impacts. So please,
And
to
then
low
you should
cost
see
checking
big account,
So if you
the medium YouTube
wouldn't mind, I
account,
would
and
love
then
to get
Cold
some
Sister.
answers on that. And also, why hasn't the Fed taken into action
I think
the
you see
higher
the full
fraud
picture on
costs
mobile.
that debit
It's hella
card
weird on
issuers will
desktop.
incur as a result of the new dual routing
Yeah,
mandate
my bad.
for
Because
card,
again, I didn't update it after Intel.
not present
So we bought Intel like
transactions.
2 months ago,
I'm
and
over
then
my
a lot of
time.
Nike
If you
here
could also,
in the last couple of
answer
days.
in writing, I would be ever so grateful.
MO number 2, baby. We got some great pickups.
Bailey yields
Divvy
back, and I would like to
paying
thank
us
Chairman Powell for his
9%.
testimony
We got a
today.
gain. We
We'll
got like
get out of
30,
here,
40%
and
total
without
return
objection,
on
all
it.
members will have 5
Yeah,
legislative
MO has been
days
it's been
to
good,
submit
man. It's been
written
good for the
questions
fam.
the witness to the chair. Question will be forwarded to the witnesses for his response, and I ask you, Chairman Powell, to please respond no later
There it
than
is.
August
All right,
30th,
where's the when issued?
2024. With that in mind, this hearing is adjourned.
Thank you. Great timing. Perfect. So Powell is over now, and then we are going to get the bond auction now. I mean, in like 10 seconds, you should get it across the wire. There it is. It came in at 4.276. Whoa, whoa, whoa. And that was a 4.37. Wow. So I don't know when the when issued is. That didn't come across my screen there, but it seems like it's a good bond auction. Even then, remember I've been pointing this out to you. Like, usually the bonds don't come in below the coupon. So this bond pays 4.375. People were willing to pay more money for it, and it came down to 4.27. So obviously it depends on the when issued. 4.27 awards 1.16 of the bids at high. Bid to cover 2.58, so a little bit of covering there. Primary dealers take 11%. I think indirects were what? Where was it? 11% of the sale. Direct was 20, and then indirect 76. I think that's a lot of foreign demand there. Nice. About long on Intel, Baidu, Nike, Starbucks, Myrna. I like all of those except for Baidu. I think Baidu's more of a swing. But other than that, I'm not really, I think all of those, they're going down for specific reasons, but I could get behind them for different reasons. I think McDonald's has the most premium. And then actually Myrna, I wouldn't touch. I'd rather get Pfizer. So 5, 6, 6, 7. This is that other level I was waiting on. Bro, that bond auction, absolutely massive there. How come I still don't have the when issued? It looked like a good auction, though. My goodness. And then where is that bond play? Bond plays, I was up way more in the morning. Gold didn't react to that, ironically enough. Oh, yeah, wait a minute. Oh, man, how could I have forgotten? See if the bonds end up holding up, but watch for a quick rebound. But high-low ticker fully active right now. What? Wow. Chattadonia. Another pump it up of the year. Can you believe it? I know some of you can't believe it. You may be frustrated by it. I know. Isn't that wild? Isn't that wild, bro? Who would have thought? Who would have thought? All right. Don't you know? Pump it up. You got to pump it up. Okay. I took my short on the ES. I was waiting for this one. I still think it could go to 56.72, but I think from now, get a little bond auction hype. Bonds might keep running, but I feel like stocks will balance. I still think there's risk, though, because you did just pump it up, and we are in melt-up mode. But, yeah, remember that 56.17 I told you about? So, it's right. This is like the top end. I didn't take the other ones. So, we'll see. I'm only going to look for a flip. Ideally, I don't really want this play as much, though. Not a recommendation. And why I say that is because I think I feel more comfortable making a trade with the last, like, 10 minutes. Next pumping up in a month. I mean, shit, at this rate, we be pumping it up every day, you know what I'm saying? We could pump it up every single day, son. Bond auction mean for the housing market? Not much yet, and sadly, I don't think the housing market will respond until we get into, what's it called? Until we get into, how you say, the job market actually, you know, responding negatively. Until then, it might just chill. So watch out. That little pullback, though, it could turn into a green. Yeah, Snap is about to hit a 52-week high. Holy shit. Now, that's another one on there. It's crazy. That bond move, I'm very surprised that bond auction was that strong. You got to pump it up. All right, and then is Bunny here? He asked me a question about setting up his long term. I don't know if he's here right now. I thought it was a good question. We could go over it. You let me know. You got to pump it up. Bam, 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 bam. not Bad Bunny. His name is Bunny Voodoo. He might work with Bad Bunny. So here's what he asked me. He said, Josh, and can I talk about this on stream? Can I read your email if that's okay with you? I think it's a great question. You got to pump it up. Yeah, alrighty. So this is what he said to me. He said, Joshua. No, he didn't say that. He said, hey, Josh, I'd like to probe your brain as it relates to investing, specifically for doctors. I will be graduating from medical school next year at age of 25. I'm fortunate to be debt-free. However, I'll be earning a relatively low income during my 5 to 7 years of residency. Given that many of my peers have already started investing, I want to catch up and make the most of my financial situation. I am particularly interested in stocks and funds that I could contribute to Roth IRA and stuff like that. I've heard that investing 25% or 20% of my annual income would be considered aggressive, and I am willing to commit that. I'll be completely honest. My financial goal is to accumulate $5 million in total investments, which I can eventually live off of. Although I plan to continue working past that point, I just like the security. If I was to stop or something happens, I'm completely fine. I would describe my risk tolerance as aggressive, and I'm eager to take advantage of high growth opportunities. I have a good understanding of the tools used in the market, but less familiar with the underlying theories of investing, but the YouTube channel has helped me with that a lot. Could you recommend specific investment strategies of types of funds to use, not specifically stocks, but a plan that I could follow and scale as my career advances? Additionally, I would appreciate any advice of setting realistic financial goals and my resources, and any resources, books, courses, financial advisors that could help me build a solid investment plan. So, yeah, very well. He's a doctor. It better be a well-written email, just in bad handwriting. You know what I'm saying? But congratulations, bro. First of all, I think I could start off with that. And the second thing I will say is I am not a registered financial advisor, so none of this is a recommendation. You can and lose money, and you should consult with a financial advisor because they have structured the laws like a mafia where I have to even tell you that disclaimer. So do I believe you could do it yourself? Yes, but I'm not a financial advisor. That's not a recommendation. So here's the deal. Here's the beauty of all of it. Congratulations on being a doctor or being on that path, but it doesn't matter what your profession is. You know, this is, and I mean this, like, and I hope you guys could understand the beauty of the long term. It is scalable, like, and here's the base thing. Whatever you watch me do in the long term, you could use that as a very broad model. So if you're like, what type of investment strategy should I go after? Can you do it safer with less upside? You can. And all you need to do is just buy the SPY or go buy VOO, and put your money in a mutual fund or literally a Vanguard fund or S&P. And literally, if you want to have a good balance, you could do half in Vanguard and SPY, and the other half by picking a la carte no more than 10, 12 names a year and really just focusing on it. You know, I was thinking about this yesterday because when we had the young guys and I was telling them, bro, save your money and just put it there. Like literally, you could just pick 10 stocks, half growth or 3/4 growth, 3 of them value dividend names, and then just add to that for the next 10 years, you'll be good. So, but the beauty is the long term, you could use this as a very, very broad model for what you're trying to do. And it doesn't matter where you're at. If I could give you one warning, are you ready? And it kind of, honestly, it's funny you asked this question because it might even relate to the PHILO here a little bit, but it doesn't matter. I encourage you right now, this idea of being behind your peers, it's going to be tough. It's going to be tough, but I encourage you to kill this idea. Stop looking at everybody else. You don't know everybody's financial position. And quite frankly, to be starting your residency at 25, I would argue that you are ahead of your peers. I know a lot of 25-year-olds, and they are not going to medical school or graduating and getting into their practice. So if anything is going to hurt you, it will be making poor decisions because you believe that you are running out of time, because you are staring at the clock rather than understanding what you're doing right now. You did the right thing. You're like, hey, I want to save money and I want to make a plan. Holy shit. If you do that for the next 10 years while you're working, I do think your goals will be attainable. 5 million, 10 million, 1 million. It obviously depends on how much money you end up bringing in. But the fact is, as long as you are doing those two things, my brother, you have no idea. That is the hardest thing to do. Literally, save and then make a plan and stick with it. So if you can make a plan right now saying, I'm going to save 20%, which is aggressive, and you're not going to gamble away half of it on options, and then you're going to put it into both growth names and value. And like I'm saying, if you don't want to focus and like you may be, until you get the experience and you don't want to get bogged down by like picking and choosing, literally just go and buy this SPY. Every month you deposit, you buy, you average into it, and then maybe after a year or two, you might want to buy some cheap stocks. And that's something I would do right now. I would maybe put 75% on SPY and VU if you really want to be like, fiscally conservative, and then take 25% of that 20% savings and then just go buy some of the names that are at 20-year lows right now. Pfizer, Nike, Starbucks. I mean, shit, you could even go for a McDonald's, which is a little higher if you wanted to. But do you get the idea of what I'm saying here? So, but when it's all said and done, I really think if you make this plan today, start saving the money and start allocating it to this, then you're going to be good to go. And I think it's really, and like I'm saying, use my portfolio as a model, but you could do it really safe. You don't have to pick and choose. You're studying for college. You know what I'm saying? You're about to be a resident. So it's like, just buy the SPY. Go buy SPX or VU. Again, until you get that. Or maybe if you see me buying an extreme value play, I wouldn't hesitate to buy a little bit of it. You know what I'm saying? Like some of these plays that I'm going after, there's a reason. I'm buying Nike at a 10-year low. Pfizer is at a 20-year low. Even Intel, when we bought it, was at a 20-year low. You know what I'm saying? So I wouldn't be too scared of those. But to make sure you get the ball rolling and rolling safely and compounding, you could put a majority on VU and the SPY and call it a day, and that's it. But as far as like understanding the market and stuff, I really think if you've been here and if you have the time while you're doing it, it will come to you. But the thing you need to understand is that simply being 25 years old and attaching yourself to the greatest market in the world, in the next 10 years, you're going to benefit off of it. That's literally how I am here today. And then again, we're going to move you into real estate as well. And then before you know it, you're going to have your job, your career, an investment portfolio, and a real estate portfolio as well. So that's I hope that answer is not too simple, but like I'm saying, the beauty is it doesn't matter what you do. It is all very, very scalable. So do you have any follow-ups to that? So please, whether it was motivational and you liked it or not, if you do have these questions, like what do I buy? What do I do? Let me know. We could explore it more, because I realized that yesterday. I had that talk with those 18-year-olds and the 15-year-old, and I was just saying, like, yo, if you listen to me, you're going to become a millionaire. And honestly, I know some people are like, well, what do I do? You have to follow the broad plan, but like for real, pick 10 damn stocks or go pick the SPY if you don't want to think about it, and then that's it, and just heavy into those. And average over the years, you're going to do well. And these stocks are a mix of growth and then a mix of value. Go get a couple of the names that are at these 10, 20-year lows, and then find a couple of growth names that are already doing well, that have some more upside as well and not too expensive. So, yeah, I hope that helps. Applying yourself and trusting. Well, let's do it, man. Let's do it today. You know what I'm saying? Whatever you have, and like, bro, congratulations. You're doing fucking good. You're about to be a doctor. Maybe one day I'll need you, and instead of buying me a house, you could be my physician. But then I will look at your Chad facts before deciding to go with you as my medical provider. But when it's all said and done, do it today. The best time to plant a tree was 20 years ago. The second best time is today. And I'm telling you, anybody in here, we've gone through the best and the worst markets. You have to just do it. You know what I'm saying? So, like, I really strongly encourage save today and start, whether it's the SPY, VU, buying the names that are cheap, but just get in the habit of actively doing it on a day-to-day. DJ T on the low. Just do it. Nike. I want to do PHILO now, but I have a short on the SPY, so I don't want to pump up the market. You know what I'm saying? Damn, this is odd. We'll give it like two to 5 more minutes. We'll see where we're at. I'd probably take McDonald's long term. I don't know where Deere's at price-wise. McDonald's is still expensive, but at the very least, it's at a 52-week low. But I think McDonald's is going to be around. You got to pump it up. Plant the tree, prune the branches. I agree. I 100% agree. And I know a lot of people, when, the fact that I say, don't sell, you guys got to realize I'm telling you to do something for 10 years and then move around your money. My idea here is get longevity, because after 10 years, you'll know what's good or not. Then you could start trimming and then you could do it. But I'm telling you, if you could commit to something for that long and let your money save and grow and compound over that time frame, that is where you could start making real good decisions. Unfortunately, that's kind of our planting and harvest time. So I agree, and I hope you guys keep that in mind. That's why the key here is getting time in the market. You need to plant more seeds for fear. Are you calling me the Führer? What? Sorry to see the account snowball and grow. It does, man. And you guys, I think some of you will be shocked at how fast it does it. Even though it still takes time. It's just one of those things. It works passively. And then again, you also see, you'll see downside, but don't be scared of it. You know what I'm saying? And why do I say that? I was thinking about this the other day. Do you guys not realize how crazy this is? Let me show you. Good old long term, bro. Bro, literally. At the end of last year, this thing was at $80,000. That's insane. And that's why I'm saying, dude, before you know it, this thing is going to add up. Where's there a fruit fly? It's going to add up. But then again, it went to 80,000 because we put money in and we were losing. It went down for a little bit. Again, granted, you got to witness some of the craziest things, but just one crazy wave and things continuing. And then again, you may not even know what's going to happen. And that's the whole point. Dude, to go from, I didn't add 100K to this. You know what I'm saying? We made all of our money back and we got a profit. But dude, the way this will roll into something, again, I'm telling you, we're even looking at different houses. I'm giving you guys some of those examples. Even when we go look at the YouTube account, that big account is mind blowing just because I'm dude, 80,000 into 190,000 in under 12 months is ridiculous. Doing nothing. All we did was buy and hold. You know what I'm saying? That's insane. But same thing, bro. You know what that means? This account was at $8,000 or whatever it was. Even at end of November, it was at 13 grand. You know what I'm saying? You might be like, oh, $13,000, nothing. Well, now you got 20. You know what I'm saying? Bro, it's insane. So it will snowball and grow, but the point is you got to start adding and build that foundation and build it up. And that's why I'm saying just start now, because before you know it, it's going to do its thing, and I'm sure you will appreciate it greatly. You have 200 shares of NVIDIA in my Roth that you got at $78. Should I take some off the table thinking of selling 50? So in my opinion, no, I don't think you should. Not a recommendation. Again, I'm not a financial advisor, but I would use that opportunity, the fact that you have NVIDIA killing it, I would go and buy with all your other Roth and savings contributions. I would just go buy the dividend stocks now. So now you can let growth run and let it ride. One of the best in the world right now. and you got in at a great time, I would just let that thing grow. You get what I'm saying? I wouldn't even worry about it. And then I would go buy Pfizer. I would go buy Nike. I would even maybe get a little bit of Intel. I would go buy the things now. And then that way, you could just slowly build up all of everything else while the NVIDIA is either going to double again, or even if it comes down, you're going to be like, oh, I could have made money. I could have took profits. But then hopefully all that stuff you bought at the lows, it's able to start going up as well too. I don't know if you feel me, man. PHILO time, yeah, I guess. Yeah, long-term 10-year, and then build the other shit. I'm telling you, a lot of people fail to realize how great of an opportunity that is. Once you get a big winner, you're going to make lots of money by letting your big winner go nuts. That's literally how I did it. Again, I got the good tech names early, but I held them. And I got to benefit off of all of the craziness, but then I'm able to buy everything else. I don't need to keep adding to it once it's working. Unless you're going to go buy a house with the money, I wouldn't sell it. And then go buy your dividend names now. Go buy your big name. Even then, even if it's not about the dividend, there's some names like UPS, Nike, they pay dividends, Starbucks even, but they're good companies. Low-ass dividends, you could still get growth from those shares. But now you could start building and get higher quality names in your portfolio, and you'll never miss out on the growth because you literally have the leader. You know what I'm saying? We had Meta, and that's where I'm like, I wish it was NVIDIA to a degree, but even Meta, think about it, we bought all the other stuff. We were able to get MO, we were able to get a lot of other things that were able to help us out. This one was off of the bond auction. Everything just started ripping, though, for no damn reason. There was Apple news and other things that, like, again, your tech names and Apple and big tech were getting driven up. You got $2K to start your long-term. Any tips? Start it now. And again, that YouTube account I showed you with 20 grand, we started that with $2,000. And then we added $200 a month until we moved up to 300. So if you could save and keep adding, I think a great place to start. Go buy 4 or 5 names, or maybe 4 names with $500 each, and then build out from there, and then little by little add to it, and then ride it out. And then again, depending on how young or risk aggressive, you go more growth and then less dividend, or you could go 50-50. Just don't go more than 70% of anything. TLT for 2 years. I don't think you should buy TLT for 2 years. I've made a lot of videos on this, and we've talked about it. I think a lot of people need to, if you want to really buy a bond for 2 years, just go buy a damn 2-year bond. It pays a higher yield. And then that way it's protected and there's zero chance of losing. If you are trying to buy TLT and hold it, you are trying to gamble. If you do not want fixed income. It's simple. You're just buying TLT to leverage it, hoping you could get the rate cut and call it a day. And I'm no shame in that, but understand what it is. I see a lot of people try to trick themselves or trick me into justifying it. And when it's all said and done, you're gambling with leverage. If you really wanted to hold a bond for 2 years, you would go buy a 2-year bond play. I can't show the 3 years on the account because we started with TD Ameritrade and then it shifted. I have an old screenshot. That's what I'm saying. I have the old screenshot when the long-term, it was at $80,000. So unfortunately, though, since we had to switch between Schwab and then Fidelity, it has limited my history. But I think if I go to let me go to my screenshot archive. Shouldn't be tough to find. Let's see. Okay, there it is. Wow. Okay, so it was end of last year. So never mind, it wasn't in a year. It was end of 2022. Look at that. This is just the big account. Here's the crazy part. This was both accounts combined. So if you took the YouTube one and you took the big one, like October of 23, it had 140 combined, 120, and then it was end of December 22. That's where, look at this. This was both accounts combined fell below 100K. And then the big account at one point, literally, this was 100K. You were at $80,000. So it was leading into 23. Then all of 23, it did good. Didn't go that crazy. And then it was after 23, you got a nice double return on that. Bonds came down too. Interesting. I would do some REITs, but just don't go overboard, especially in this environment. You got to really get the good ones. On the TTF real estate website. No, I just started posting them on the YouTube channel. It's a lot easier. But shout out the long term, baby. And good work, man, if you guys are starting it. I know it's not sexy all the time, but I do think a lot of you will be rewarded. And, again, there's a reason why every day I say it. And I know a lot of, again, don't underestimate, bro. You know, there's a lot of people who have benefited off of it. Like, you know, and that's why it's such a beauty to see all the chads. But I'm telling you, man, just start it, bro. It's going to be slow. It's going to feel like you're doing nothing. You could ask my sister about it, too. But it's going to turn into something. Little by little. Long-term gang. Ooh. Man, bonds flushed after. That was a great auction, too. Very surprising. Long-term has changed my life. He rep long-term because he got them braids. 700 likes on his MySpace page. Was it Stack That Cheese at 700 plays? You guys remember that song, though? Hip-hop has saved my life. It's a good song. It's a good song. Something, something, something. Stack that cheese. Let me get the digits for my sister so I could ask. Man, weren't you just in here with your mom yesterday asking me questions? But I'm down. You give me your mom's number. I'll give you my sister's. I know that. Damn. Is that crazy? My bad. My bad. It's because you got a memorable name, man. Yeah, Oprah Winfrey. My mom's single. Hey, man, that'd be weird if we had double dates. You and my sister and me and your mom. That'd be weird. It'd be hella weird, too, because my girlfriend would be like, what the fuck are you doing? That violates decorum. Strike that from the record. We're about to start PHILO. Strike that from the record. Strike it from the record. Decorum. Ladies and gentlemen, LYB flushing just as we start PHILO, and Dow Chemicals. I think they're similar. Yo, check Dow and LYB. Yep, both of them. There has to be news on that. Dow, I think Dow is going to buy part of them. Yeah, Dow and LYB. Remember, I think there was news related to them. You are here for PHILO. Well, Chattadonia, God bless you. I got you some call-outs here to start PHILO. Those are big drops on Dow and LYB. But here's the deal. It is now time for PHILO. I'm excited about this PHILO, honestly. I think it's a very, very good PHILO. Just because I think we talked about this. We talked about this a little bit with that question on the long term. So I'm very excited to share this with you. And honestly, I mean, what I am grateful for, remember I've been telling y'all, man, the fact that we have this communion together. And honestly, man, even every day, the fact that some of y'all ask very good questions and you're very curious on how to better your life, and we could have real good discussions, bro. I'm very grateful for it, bro, and I hope all of you do something with it. And that's kind of, I want to applaud some of you guys who have done what this PHILO that I'm going to talk about says. And if you haven't, here's the deal, bro. I encourage all of you to make an action today. I don't literally, bro. I know it's PHILO. You may hear me talk about the Bible, but like, yo, for real, this be an altar call every single day. I don't care if you like me or not. I don't care who you are. I don't care what your life is right now. I don't give a shit. I really don't. You know why? Because your next move is more important. Oh, my. So I know you may think I'm an insensitive prick, but do you hear what I'm saying? You could be dying right now, but what you do next could define the rest of your life more than the other 10, 20, 30, 40 years. It doesn't matter. The whole thing about life is always your next move, bro. You have it. You know how many crazy plays I've hit in my life? Guess what? It don't matter. You asking me what's the next play. Oh. So let's go. Apply that to your life, bro. And that's what I'm saying. For all of y'all, man, I really hope y'all keep that right mindset and are thinking about that. And I applaud you of doing that. So, amen. Amen, baby. But you can act today is what I'm telling you, baby. You can make a move today. Wow. So, Chattadonia. Here's the deal. Are you ready for this, PHILO? I can't believe homie asked me that question earlier. And even then, the fact, I love it, Bunny. God bless you, man. And thank you for even asking that question and allowing it to be shared with the chat, bro. Because I think it's very important, a lot of what you said. But then you said you're behind and comparing and looking at your peers. And I'm this age. Oh, man. Are you ready, Chad? I could give you one thing right here, right now. You could write this down and be done with it. Tesla's ripping right now. New high. Oh, are you ready? Measure your life by a compass, not by a clock. I'm saying, you can write this down, put this on your screen, and be done with it, man. Oh, it's a great one. I know. I know, man. This one's beautiful. Measure your life by a compass, not by a clock. But I don't know if y'all really feeling me on this. You know why? Because I am not just talking to the old people. Or you feel like I'm talking both sides. Abraham thought he was too old. But go look, there's other stories in the Bible. Timothy thought he was too young. You know, don't despise the days of your youth. I'm talking to the people who think they're too young and think they're too late. Oh, y'all don't feel me. Because there's some people in here now. You think you're too young. You think it's too early. Oh, I don't have this. I don't have that. Why would I do this? Oh, I won't know enough. Oh, man. Man, do you know what people told me when I was young getting into stocks? No? And then on the reverse, you're going to look at other people and be like, oh, I'm too old. Oh, it's too behind. Oh, the market already did this. Oh. This is for both, man. Too young, too old. It doesn't matter. Stop looking at the clock. I'm more curious about the compass. What direction are you going in? Oh. Do you hear me? I'm more interested in the direction that you're going. Guess what? You're going to fail. You're not going to do good. Honestly, bro, some of y'all get mad I be banning you. Guess what? I don't care what you say. Even if you said and done the worst things to me. I don't care. But I do care about the direction you're going in. Does that make sense? Do you not get where my lack of tolerance comes from? If you are constantly going in the wrong direction, I don't have tolerance. Especially if it's constant and consistent. It doesn't matter what you did or what you didn't do. It's the direction you're going in. And the things I'm telling you, the chat, all of it. And vice versa. I've seen some of y'all get banned. And I've seen y'all improve so well. You know why? Your direction. You're like, okay, maybe I'm going to treat this a little differently. Okay, maybe I'm going to approach this a little differently. You know, I actually do want to move forward. I want to aim for something. All right, I get it. Oh, man. Do y'all feel me? But this ain't just about the chat room, bro. This is everything. Dude, you're going to gamble, you lose your money, you made a mistake, great. But you know why they call it a slippery slope? Because it's easy to aim in that direction and then keep going in that direction. Versus, are you going to change the compass? Again, you think, oh, I don't have enough money to do this. Yeah, I get it. But I know if you point yourself in that direction, you're going to get the money. You don't need a lot of money to start a long term, but I know if you go on that direction, you'll end up having a lot of money. That's your compass, bro. Are you moving in the right direction? That's what matters. It's crazy because I'm telling you a lot of long term right now. But this is both financially and spiritual. I hope you realize this. What direction are you going financially? I care about that for a lot of you. Again, having a long-term versus not. Again, you could tell me a lot of things. You could tell me how long you've known me. That's why I'm saying when I'm like, dude, you've known me for how long? And you're not doing the long-term. Like, why are you not pointing yourself in that direction? I get it. You want to trade. You want to do these things. And I'm not saying not to. But you need to set that compass in a direction that is thinking about your financial future forever. Guess what? Spiritually. Bro, it's hard. I told you this. I've been telling you. Man, even the effort of becoming a better person, living up to whatever standard you want to live to, that's difficult. And guess what? You're not going to always do it. I know I don't. Why do you think I get, oh, you did this, Josh, you said this, you did that, oh, yeah, and then I've still got a PHILO every day. You know why? I don't know why I have this certain calling that I do. I don't want it. I really don't. But something has pointed me in that direction, and I've always gone after it. That's what matters. shortcomings financially, spiritually. It doesn't matter where you failed. What matters is where did the compass point both before and after. I hope you feel me, man. The compass is your calling. I didn't have, dude, I got into my long term, I was 14 years old. 14, bro, a child. I didn't have money, but I had that calling. I had the compass. I said, yo, this is what all the rich people are. I want to get like that. The money eventually came, but the direction I pointed in, that was the key. Again, real estate, bro. I was just telling this. You guys are, again, the co-real estate guys, I think I brought it up in the chat. I was saying, like, you guys don't do deals with people. You don't need to. And like, but I was explaining how when I was in the beginning, I didn't have money. I had to do a joint venture. I had to work with people. Again, I didn't have the money, but I had the compass. I saw my parents fail in it massively. Why? Again, the compass aimed. Oh, man. I'm telling you, I don't understand. I don't know why. There's this spiritual stuff, bro, for real. Especially, bro, I look back and I'm like, bro, my life would be easier if I didn't, literally, if I'm not yelling Jesus all the time, bro. If I didn't have this burden in the back of my mind telling me, oh, that's not right. Oh, I could have made a lot more money. I would be on a yacht. I'd be doing a lot of other things. But why? I've been asking you that. Why? Again, the compass. So, Chad, I'm here to ask you today, financially, spiritually, what direction are you pointing your heart in? Seriously. Where is your compass pointed? Stop looking at the clock. The clock doesn't matter. There's no shot clock on your heart and where it's guiding you. Where is your compass pointing? I don't care about your failures. Are you still heading in the right direction? That is all that matters. You can measure your life by asking yourself that, oh, I feel like it's slow. I feel this. Are you on the right path? Don't tell me it's the wrong path because it took too long, because, again, the clock shows up. You'll be a lot more clear-headed when you give the benefit of the doubt to the compass rather than the clock. The clock is always going to run out. The clock is always going to tell you you're behind. The clock is always going to give you pressure. If I'm in the middle of a desert, I don't care how long I've been there. Especially if I have a compass. I care, is this going to get me out of that? Oh, You feel me, Chad? I was just telling you yesterday, man, don't get depressed in the waiting. I'm not here to tell you to wait. I'm not telling you here to be content. I'm telling you what's the direction. And even like I told you there, man, earlier, your next move is more important than anything. That's why I'm even saying, bro, an altar call right now. You have an opportunity to ask yourself, are you going in the right direction? And if you're not, you have an opportunity to point it there. You could put down whatever is, again, whether it's the phone, the option, the drinking, whatever. Go down the damn list. I don't care. But are you going to keep doing it? Or are you going to say, no, actually, okay, yeah, this is what I want. This is the direction. You could take little steps or big steps and get yourself in the right direction. So, Chad, don't measure your life by the clock. Measure it by a compass. and see. And if you are on there, man, keep going. And that's what I'm saying, man. I'm proud of you guys who are staying with the right guided compass. And those of you who have it, I am encouraging you to go. Bro, that's what matters. Doesn't matter how old you are. Oh, I'm too young. I'm too old. Oh, look at all these people. Man, what matters is the direction. Everything else will come. But that direction, that is what you control. And if you keep pointing it the other way, then that's it. Your purpose, bro. No one could ever take it from you. You know that. All that happens is it could get delayed. That's the game of life, bro. Cigna and CVS dying. Yo, Cigna, CVS. Cigna, CVS, Caremark, Optum. Whoa. FTC to sue drug managers over insulin. Changes PBM pricing. Optum, RX, Express, and CVX targets of lawsuits. Mid-PHILO exclusive news drop. I think we got that one early. They're already 480ing the options. Whew. Trying to see if they're dumb enough to sell it to me. I don't think they are. I took it. Oh, yeah, I don't think you could snake it. That one's not bad at 15. That one's still negative, but you're $10 out the money. Oh, that might be able to hit. But that's only for like 2 more days. Someone bought that for 50? That's crazy. Yeah, literally FTC to sue drug makers over insulin. So, where was I? Mid-PHILO. Mid-PHILO news drop. But Chattadonia, for real. Old, young, it does not matter. It matters if you are pointing yourself in the right direction. And I know you might spend a lot of time. You could spend a lot of time going back and forth. But for real, man, you are going to waste your time looking at others instead of looking at your direction yourself. So, I had one more thing, but it just slipped my mind. That news drop got me. But Chattadonia, measure your life by the compass and not the clock. It's game time, baby. Okay? And all of y'all could do that right here, right now. And just start thinking about it. Whatever failure or success, the answer is what direction is the compass going in. You feel me? Good. Take that to the bank. That is your philosophy, ladies and gentlemen. Make sure you guys are subscribed. We're live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. You're on mobile, press hot chat. X out the chat. Hit the thumbs up button. Second link for the nightly Watchlist and main channel. First link for the Scream Alerts boot camp and real estate costs.
To the people, I'm penning it like I'm Paul. It don't matter about the evil, it matter about the God. It don't matter about the weapons, it matter about how you armed. All that matters is the weather, when weather to bet the farm. I ain't gotta see it to believe it. If it's signing, then it's needed. And my eyes don't need a reason. I won't even try to explain it. Let's just say I got a feeling. I'm gonna sing my praise like David, but the king is still a killer. Listen up and go and get the tropes. Hope you know you ain't scared of them, they scared of you. And I know you might be scared to take that point of view. You see them arrows in my back? Yep, son, that's gonna happen too. But the harvest on the way, you gon' barter every day. That means you have to make a trade, either life or it's the grave. The result will not remain, every day will bring a change. Kinda funny and it's strange how the hope will pave the way. You hearing what I say? The only difference between you and them comes down to faith. There's a difference in the man who believes in a better day. Cause once you believe it's past, you willing to wilt away. We was never willing to be the same. We want it all in the long run, they want it all today. My father is really awesome, don't bother with giving snakes. Regardless, I can't control it, so either way, giving thanks. Yep, you could take that one to the bank. A leader without a rank, a speaker without a face, a people without a race. They eating without a taste, they scheming without a safe. The meanings have been replaced. Another time, another place, we could talk about it. Keep some oil in them lamps, don't get caught without it. Want them once, want them twice, they never talk about it. If you never get a second chance, then that ain't meant to happen. What I understand is you ain't trying to understand. Take 100 grand, then 100 undergrads. Pay them all to make a plan, but they couldn't comprehend what it means to never die, but somehow still be born again. It's a letter to the people, I'm penning it like I'm Paul. It don't matter about the evil, it matter about the God. It don't matter about the weapons, it matter about how you armed. All that matters is the weather, when weather to bet the farm. It's a coat.
It's a coat.
2020, baby. Yeah. Got the color, got the put, I can make the money both ways. Always, how about the whole chain, go away. Got a lot of love and throwing on shit.
I'm getting the earnings previews.
I just made my own band. Probably trading stats where you still at the snoring. Morning, scoring, I'm just bringing more in. Hissing the DeLorean, sourcing. You could throw your own in. Drop it like a ball when you holding, I'm shorting. Skinny motherfucker, but I'm eating, seeking, scheming. I get paid for sleeping, dreaming. Hating for no reason, you a demon. Leeching, healing. Wishing you could be me, ain't easy. I told you I'ma do this, don't forget this shit a marathon. You make a move but stay in the same place, or West a Peloton. Make 100 off a phone call, now that's a telethon. Benjamin's, Jefferson, YOLO to a ghetto spread. Yeah, you know I invented that. Who's been like a Trinidad? I'm moving like a president, can kill me like a Kennedy. I'm trying to be a better me, but they just keep on tempting me. Release the demon, set him free, he come back, bring me 50 G's. Nowadays it's hella smoky, game like I'm from Babylon. My capital got stamina, I wrap it up in lamina. Talking in new blabbering, but I'm not understanding, bro. You hating and complaining, but you still watching the channel, bro. I do this for the real ones, but the hate is still involved. I just closed another building, I'ma give it to my bros. It just took a little patience and it took a little hope. Yeah,
the faith is never wasted if you reaching for a goal.
Do this for the real ones, but the hate is still involved.
The faith is never wasted.
I'ma give it to my bros. It just took a little patience and it took a little hope. Yeah, the faith is never wasted if you reaching for a goal. Chicago, 2020, baby. Who the fuck you? I did what they said I wanted to do. And where the fuck?
Now, who the are you? All right. So CPI, we could talk about that a little bit later. But honestly, I think CPI is just going to be the biggest event. So there's actually a little bit of drama packed in. It's supposed to come down. So based on all of the summer trends and how it's been, and even the I think year-over-year comps are going to be a little tougher. But for the most part, it's not going to be what's it called? I don't think it's going to be like it's simple. I mean, honestly, if you get a surprise, then we're going to move outside of 1%. If not, there's a good chance we either move that 1% and then or we actually go underneath it, considering how much you're moving right now. I will be live tomorrow morning for the CPI, yes. Well, yeah, you are hitting a new all-time high every single day, so you should kind of have an assumption that it is all priced in. I mean, I could get behind that. But then again, a lot of people are waiting. Baxter had a recall. And then Cigna came back up after that news. What do you mean priced in? That everybody already expects it to happen. So based on the price, it's pricing in potential events. So if people are like, oh, inflation's going to come down, some could argue based on the rate cut odds as well as the SPY price that that's already priced into the market. Disney's on the low. Yeah, Snapchat's running, bro. 1730. That's actually wicked. Because, again, their earnings haven't even been that hot. I guess last time it kind of was. I don't know if they could do 2 good earnings in a row. But, yeah, they didn't even get this high in 2023. They're like 50 cents above it. And then they could start filling that 20-something gap. All right, earnings previews. So we have earnings, 2 big earnings tomorrow morning, Pepsi and Delta. Why are we hitting all-time highs? Because the economy is not crashing, and as people are anticipating rate cuts, they're assuming we are entering into a soft landing or no landing scenario, meaning that economic activity has only increased and did not decline, even though inflation is declining. All right. Pepsi. Did we ever hit a Pepsi? I don't know if we have, but Pepsi, they're expecting revenue growth of 2.8%. Net revenue $22.62 billion, non-GAAP operating income $3.97, EPS $2.16. Since last quarter, April 22nd, Pepsi is down by 8.1, SPY is up by 11.5, XLP is up by 2.8. Near-term options imply 2.9% move. Last 4 quarters, loss of 3, loss of 4, gain of 2, and gain of 2. Revenue has beaten 17 of the last 20 quarters with 2 in line. EPS has beaten 20 of the last 20 quarters. So low-key, I mean, it just moved. It's underperforming. That's the only thing I like about it. But they're not really a big earnings mover. So literally, I mean, they're down compared to the SPY. This thing's down almost 20% in the quarter. And then compared to XLP, it's down 10%. Okay. Let's see. I think so. Again, if it's pricing in 4, that'll tell you a lot. Where is it? Pepsi. It's about like what? 533? 540? This is 560. We'll go with 540. So $5.40 is priced in. %, not bad. So 6% would be 2 standard deviations. That'd be like 1080. It just sucks because Pepsi does not move. They're not bad, though. 6% both ways. I mean, it's not really the worst. Let me see how those... And then what would be to the downside? Oh, I put Nike. Yeah, I'm down for it. It's not supposed to move, but I think it's a consumer-related play. Yeah, I did 2 standard deviations, both ways, $50. I think. No, yeah, $59. Not a recommendation. I just think Pepsi, because look at it. It's either going to, if it does die, I do think more than, if it has a really bad earnings at the bottom, I mean, it might move 6%. And then if they could recover, I mean, they have a lot of opportunity. The only real risk is that it cucks and there's literally like nothing out of it. So let's see. Okay, the next one is Delta. We hit Delta last time. Oh, it kind of came down here. No way. All right, Delta, they're expecting total revenue adjusted $15.46 billion versus guidance of $15.3 to $15.6. Adjusted operating income $2.28 billion. Adjusted operating margin 14.8 versus guidance of 14 to 15. Adjusted pre-tax income of $2.02 billion. Adjusted pre-tax margin 13.1. EPS $2.38 versus guidance of 2.20 to 2.50. Load factor 87.9. Next quarter, expecting revenue of $15.37 billion, adjusted operating income $2.01 billion, adjusted operating profit or margin 13.2, adjusted pre-tax income $1.75 billion, adjusted pre-tax margin 11.5, EPS of $2.08, and a load factor of 87.7. Full year guidance December 24, EPS of $6 to $7, free cash flow of 3.4, and adjusted debt to EBITDA of 2 to 3 times. Since last quarter, Delta is down 2. SPY is down 7, and XLI is down by 3. Near-term options imply 6.2% move. Last 4 quarters, loss of 2, loss of 9, loss of 2, loss of 1. Revenue has beaten 11 of the last 20 with 6 in line. EPS has beaten 12 of the last 20. And forward quarter revenue has beaten 3 of the last 6. So, honestly, it's kind of in line with industry. Trading below SPY, but I don't like what it's pricing in. If it's pricing in like 6 or 12%, I'm not down. Or 6 to 7. What is that? I'm getting 330. Divided by 46. 7%, yeah, I'm not down. It'll probably be cheap, but 14, you'll need like a $7 move. Should be like, what, 52 or 39? It's literally more expensive than Pepsi. And Pepsi's a $175 price. The pricing, yeah. He made it free, so I'm glad he listened to that yesterday. He made the Delta trade free already, which is good considering the stock dropped today. But yeah, I think punt, play Pepsi, Delta, that's up to you. But yeah, that's it. And then we'll do the banks tomorrow. So not a recommendation. Ta-da! Can I play 2K now? I've killed all my trades today, except I have an ES short still. And then we got long terms. We got good PHILO. I don't know, is that... Pepsi's tomorrow morning. So we get both CPI and Pepsi earnings. Pepsi's quite intriguing. My chores are done. I could play 2K. Yeah! No, I'm not going to hold the ES overnight. All of these, I want to do them quickly. Like I said, I should have just waited till the end of the day. It just hit my level that I was talking about, and then it hit the like high one. So I was like, all right, fuck it. But ideally, I think because again, like I was up on it for like $200. Now I'm up like 50. It went down like $100, but at the end of the day, it's just like I'll be stuck in here for a couple of hours now until the end of the day. Bears need Snap. Snap, I don't know, bro. If Snap could do 2 good earnings in a row, though, I hope so, because I want to sell some covered calls. And as a reminder, I've not bought Snap in 2 years, or 4 years, actually. Shit. But it is up 40% on the small account, and then you're up on the other one. Made it to 100K? No way. Really? Good work, baby. That's very exciting. No fucking way. The first honey, baby. I do like Nike over Starbucks, but I do think Starbucks is good the cheaper it gets. But then again, you are going to be, at least with Nike, I already had the bad earnings. Starbucks, you still got to deal with that. But I'm not, Starbucks I think pays a little bit of a higher divvy, but both of them are good. I like Nike. And I had the money when it dropped. Again, Starbucks was $10 higher by the time I was buying Nike, and then it dropped in the last like 2-3 days. Well, yeah, the earnings are going to be weird because the consumer theme is important, but like I've told you guys, in a weird way, people, just like CPI, people don't think anything meaningful is going to happen during these earnings. You're not supposed to get any meaningful declines or run-ups, but if they do, then that will be the case. That's where you'll get your surprises. Commercial real estate tsunami soon? I don't know. I don't think. I think it'll eventually happen once things start cracking more, but like low key, it's been a slow motion crash for the last like 2 years. And like there is deals out there and there is people struggling, but it's not cratering. Snap. Oh, well, snap either way. It might be nuts. And bonds, that's crazy, though. That was a good auction. They're at the same level. Yeah, we just did the Pepsi earnings. We made a 2 standard deviation play on it, and then not playing Delta. I believe Pepsi's pricing in 3%, Delta pricing in 7%. And Delta is moving in line with travel, and then Pepsi is underperforming Staples and the SPY. That's the quick summary. Commercial real estate at all-time high here due to smoking. Depends where you are, but I even say that tentatively. I don't think any commercial real estate's at all-time highs. Unless it's residential. That may be the only thing, but if it's non-residential commercial, then it's not there. I did 2 standard deviation, Nike both ways. Not a recommendation. And as a reminder, all plays, previews, and everything, this is because we hit our likes, okay? So just as a reminder, the likes are our currency of the Chad. So make sure y'all hold it down, baby. You see? Did I say Nike? I meant Pepsi if I said Nike. Chicago, you own bakeries. The building was on sale for 1.8 2 years ago and on sale for 3.2. We'll see. Let me know what it sells at, but that's very surprising if it's not residential, because most places you're not, unless it's like really high quality property, A-class. I haven't really seen too much commercial real estate at highs. Summer is slower. Why not less likes needed? Because it's the same group of people every morning. It's still the same amounts. So, yeah, man. It's all I ask. You know what I'm saying? I know you guys, some of you like it and don't, but like I'm saying, it's very easy to just put everything behind a paywall and just give it to the people who pay for it. You know what I'm saying? And then just call it a day. And that just like every other person in this industry does. So, it is in line, I think. I think it's a good. I give you your currency by throwing likes. State Farm? I mean, all the insurance companies, they did good last time, but then some of them have been struggling. It's weird in the insurance land. It's very, very weird. All right. Let's see. We got an hour and 45. Anthony Blinken addresses NATO forum. Are we going to get your girl today, Jen? Or Corinne? Soundhound? I don't know. I think Soundhound is like an AI trade. I would not add it to my long term. I know some people were adding it to their long term, but you know, it goes crazy and then gets clapped and they sell money, you know, they sell shares and all of that. So I don't know. I'm not really the biggest fan of that. PHILO hit me deep. I appreciate it, baby. Double checking the compass. I love to hear it, man. Let's go. Make a move, baby. Make a move. Plays were Nike both ways. And then I've done some ES and NQ flips today. And I'm still in an ES short, but that's about it. Yeah, I got Bowman and... Are they both at the same time? You're new here. A Canadian chick told you to listen all day? That's good. Was she hot? Because all Canadian girls are hot. Okay? Even I tell this to my girlfriend, too. Well, that's good, bro. Get a long term if you want to impress her. Okay? But the PHILO is just... it's a time we take... We take about like 30 minutes out of the day, and then we just talk about life, like low key. I think that's the easiest way to put it. So that's what PHILO is. Some people like it, some people don't. You're the Canadian chick. You're probably hot. You know, it's still my theory still applies. So amen. Shout out all the hot Canadian girls. Okay. And all the hot Swiss girls, too. You know what I'm saying? Like, I love you, baby. It's okay. Hubs on the low. Remember, they had some Google buy. Yo, Hubs just died. Yo, $30 in one candle. Google said to shelf interest in Hubs. Oh, my gosh. Yo, bro. That's crazy. That's a huge decline. Did they halt it? They're not even letting these options go through, bro. Oh, whoever got that at 10, you might get lucky on that. Yeah, bro, $30 in one candle. All the contracts are tweaking. It just bounced $15 off of that. But that's insane. Let's see. Yeah, there's no cheap ones you could get. I saw one with 10, but that's like really, really low. Yeah, one of you bought that one right there. Good luck. Oh, is CRM gassing off of that? Interesting. That could be a sympathy. Yo, CRM, big pop. And then Dana White to speak right before Trump at RNC. So, yeah, Hubs down literally 30 in one candle. And then CRM to the upside. That may be a better play if you can't get your hands on the other one. Oh, the CRMs are kind of cheap there. They're already jacking them up. All right, I grabbed the one for 15. It's 150 up, but maybe we get lucky because none of the other ones are that cheap. These are for 30. They're like 20 bucks close. I don't know. That play's kind of shit. You need another pop on CRM. That one you either get really lucky on or not. But Hubs is still dying. Let's see what CRM. You couldn't get a Hubs put. I didn't even want to short the shares. Oh, yeah, those contracts dropped to 30. Yeah, I top-ticked that. But I added some liquidity if you want a better price. But low-key, CRM's not tweaking the same way. CRM needs to get back up to that. Otherwise, it'll be a dud. Yeah, bro, bro, honestly, I think that Hubs might hit on that one. Remember homie who grabbed that other one for 10 cents? It hasn't got a bid yet, but there's no cheap contracts, unfortunately. Do not buy this one. That one's bought for 5 cents going for 40. Yep, somebody bought it. You got scammed. They got caught into the hype. That one's on Friday, bro. I guess you got another week. Hubs is Google backing out of the deal. So I saw that on the load ticker and assumed it. Troy was able to confirm that right away. But yeah, that just died immediately. Because remember, it had that pop on Google trying to buy them. It was near here, but now that they're backing out, I think even just with the comeback, I brought it down 13% in 3 minutes. That's huge. Again, you had CRM sympathy, but it's not juicing the same way. You only had a couple minutes. A couple people got lucky on that chain. Could be an over. I mean, honestly, there could be a bounce in there. But I'm sure the options are expensive to the upside, too. Halted? Okay, it's going to bounce then. It's going to set a range and then come up. Damn. That's going to be fun. Got screwed, yeah. I only put in $15 on it. That one was just because that pop was huge. Where's Marvel and Intel? Reload it. Intel just chilling. Tesla's trying to go up again, and Apple. And then Hubs halted on the upside. I think because it just, dude, that was a fat drop. That's $50 in 3 minutes. So whatever, all the premiums are going to be juiced, and then we'll see. It'll probably make a little popper once it gets unhalted. All right. Okay. It's fun. It's kind of actually exciting here, but I feel like the headlines are going to slow down. And then we have Bowman in 17 minutes, I think, in Goolsby. They should be actually right around the corner. Google might be looking for a merger, but then again, I mean, all these companies like Google and Apple, they like to buy the no-name companies. They don't like to buy public names. I can't believe it's already July 10th, bro. Fed listens. Starts in 5 minutes and 30 seconds. Nothing to do with Palantir. I don't think so. No, I'm still in my short. I'm probably going to be in that one till the end of the day now because I went early. I got a good price. I think it topped out exactly at the range I thought it would, but I'm still holding that one. I don't know why we're up so much. I mean, I think it's just some of the pre-earnings shit and getting ready for it all, or pricing even in lower inflation. This could be some cushion for tomorrow. But no matter what happens today, I mean, this is just going to be part of the range we set off after the data. But we are doing the streak again. Not only is it July, but we are streaking again. If you guys aren't familiar, you guys remember in the beginning of the year when it was like X amount of days and weeks positive? We're doing that again. So you've hit 37 record highs now this year. And then I think you're on day number 7 of straight up. And then even like Tesla's 11 days in a row of green, but you're doing that again. It's just, unfortunately, it's just kind of a melt up as we are following the path. And we're going to get to hear from Mr. Golden Path in about 4 minutes. And then you know what I'm going to do? I'm going to play me a game of 2K. Fuck yeah, I am. That's it. At this point, I feel, because we just got a bunch of headlines. I don't know if it's going to keep being that quick. But I think it's a 2K moment while Goolsby is talking. This is like a weird most hated rally. It is kind of reminiscent of that. Okay, one game, Dad. One game. That's it. One game, and then we'll have Power Hour. CPI could bring us down, or we could run up, but you need a big surprise out of CPI tomorrow. Otherwise, I don't think it's going to be that crazy. News on Hubs. Yeah, Google dropping interest. Troy posted the full headline there earlier. Price precedes news. Said it earlier. CPI don't matter. In theory, for this one, I can agree with you. You know, at other times it has had more of an impact. But right now, I mean, I just think everybody is just, they've been locked in from the summer that nothing is going to happen. And then if you guys are going to play with me, you got to get on right now. Otherwise, I'm going to just run in solo. You're here at work alone because of the bees? What do you mean? I'm scared of bees. I don't like bees. How do you get in? You just got to add me. But if you're, like, you see that guy right there? You see how his plate is black? Don't add me. Okay? So if you can't get, like, 2 wins, just don't add me until you get that. All right, I'm just going to run. Hub's unhalted. It's actually dropping a little bit more. I don't know, man. I kind of want to call. These are just really expensive, though. Yeah, I don't know. They're not letting them. You want something near the 600s where it was, because all the other ones you'll still get smacked on. Does that make sense? Yeah, I don't know. It's tough. I think shares, but I wouldn't want to take the risk. 6.4. These ones aren't bad. 60 cents, but they're selling a lot. Damn, someone just got those for 20. That might be a better one. Oh, wow. Nope, someone already going up to 40. That $20, I like that one. That's weird that has a bid that high. So these ones, 630s, 640s, those are leveling out. You got liquidity on it. So there it is. It's bound. That's the only one that's decent, but then again, it might not. I would only take that at 20, 25 cents. I think you're taking more risk at $60. That's still expensive. But these are the only ones showing some life. And again, like I said, 550 to 590, that's the sweet spot where you'd want to be for a bounce. Because again, the shit's at 460, bro. It's crazy. So watch your speakers. It's supposed to be starting right now. Scan the QR code to join the Q&A session. All right, not bad. You sold the two 460s at 194 for 10, baby. Oh, cheers to this. Shout out. Good work, Boski. Amen. Amen. You say, how do I play video games? You thought I'm always locked in? I am locked in, man. That's kind of even the whole idea here is that I have the news and the headlines and the movement. That part's easy, to be honest with you. And then now that I'm not trying to take a lot of plays. I still have a play in motion right now, and even then, but it all has to do with beginning of the day, end of the day. And like I'm just telling you, in this market, ironically enough, I hope you realize if you're forcing certain day trades, you're playing a video game too. I don't know if y'all feel me on that, but that's what I'm saying. My strategy right now is very time oriented. That's it. All that matters is beginning of the market, end of the market. Unfortunately, I took another trade that I'm in now, but then again, it's doing exactly as I thought in the sense of it's probably only going to get active towards the end of the day. And then after that, again, the long term's hitting new all-time highs every day alongside the market, but I don't want to get caught up into I don't want to get caught up in the middle of the day. I think the middle of the day trades can really trap you, and that's why I'm just focusing beginning. I did an NQ, shorted it, got out after 20 minutes, and then I took this one with a little bit more than a time than I thought. But like I'm saying, I think end of the day, this trade will work itself out, and then we get out, and then that's it. Let me see. Down. So Hub's coming back up. What did those options go to? Those still stayed the same. You see what I'm saying? So I do think that price, if you got them at 20, you tripled up. And then bonds climbing here too. So you're getting ready again. 30 minutes till power hour. We should have Goolsby should be on any minute now. You might get a Michelle Bowman comment, but we heard her yesterday. Dell running. They were down earlier. Again, the headlines today, Apple and TSM, very, very good headlines. The Nikkei is the reason. No, well, the Nikkei's only going up because of the yen, and then the yen's only going up because of the dollar. So, it's part of it, but I don't think
okay,
it's...
good
oh,
afternoon,
shit.
everyone, and welcome. Ooh, the lights go down. What was that? That was fancy.
Is it quiet?
I am Austin Goolsby, President and CEO
He's so
of the
hype.
Federal Reserve Bank of Chicago.
Yeah, watch your
It is
speakers.
my
It's super
pleasure to
quiet. I'm going to
welcome
turn this up.
Everyone here in the room and the many people that I understand are attending virtually for this Fed Listens event.
So watch your
Today
speakers.
we are going to explore the challenges that are facing both the child care industry and working parents and employers. And I am extremely excited, and we are excited to have my colleague and friend, Governor Michelle Bowman.
Yeah, Bowman's with him. No way.
She was
Leo.
here last year.
What's up,
That's
baby?
the curse of doing a good job. We're just going to keep asking you until you say no. So
Well, I turned it up 12
we have
decibels, so I don't want to do it
fabulous
any louder.
panels from all across the 7th District, and thank you again for participating. Before I say a
NBA
couple of words
finalizes deal
about
with ESPN,
the
NBC,
Fed's
and Amazon.
interest in child care and the labor market, I wanted to just give a slight background framing about Fed Listens and why this
Check Disney and Amazon if
activity
they
is
move.
important to us. The Fed Listens.
Throw back Hubs up here.
Is it an activity? It's a movement. The Fed Listens movement stands as an important tool for us and an opportunity for Fed policymakers to engage
And SPY about to hit a new
directly
high.
with the American people and hear firsthand from the people that we serve. My colleagues and I at the Fed often speak about the Federal Reserve Act and the dual mandate that it puts to us to stabilize prices and maximize employment. And so you know that as we decide monetary policy, we're constantly poring over the economic data sets and unpacking the weekly and the monthly and the quarterly numbers. But all of those come with a lag. The quantitative data are all looking backward, and they do not provide a full view about the current state of the economy. And for that, we rely on you, the people who are out in it. And our dialogue with the public is critical to our success as policymakers. And that is the origin of federalism.
Yeah, WBD did get clapped off that.
You get to see
Dell's going green.
but we get unfettered real-time, real-life data. That's essential for setting our monetary policy.
Even watch
decisions.
another Apple popper
And
drop. If the chips
how
don't
the
move, that'll
economy
move
is
things.
affecting people's daily lives and livelihoods, whether that's collected through our
You'll get the not bad
visits
weather,
around the
just bad
district,
clothes. He'll
our
say it. That
business
and data dogs.
roundtables, or holding conversations like the ones we have here today. They're extremely important for us. Fed Listens in Chicago actually kicked off in 2019 when we examined disadvantaged workers' experiences in the labor market and the challenges of building wealth in low and moderate income communities. We gathered again immediately after the pandemic in March of 22, where we discussed the impact of the pandemic on young people as they experienced a frightening, challenging, disrupted educational environment and the ways that had made for difficult transitions into the labor market. A year ago, we dove deeper into the critical group of young people to understand youth employment and entry into the labor force. And today, we gather again.
Bro, high ticker's
to discuss
gassing.
Critical issue that I don't have to tell you. You tell us how important it is in the economy, which is how the challenges to accessing childcare can affect employment, labor market participation, and the challenges faced by parents, employers, and the people who are themselves working in the childcare industry. At the start of this year, we have heard about this topic, as I said at lunch, everywhere we go, from the business people saying, well, we need to hire people, but it's hard to hire people because we can't get the childcare, from the childcare providers and from the parents. At the start of this year, I visited Children of the Rising Sun Child Care Center in Detroit.
The Rising
and the
Sun.
owner of that center, Zena Davis,
Cuervo
you
on the
could
high.
see her passion in her
High ticker's
work,
just showing you what's moving, hitting
but
a new
you could
high,
also
and how
hear
many times
the
he's done it.
significant challenges that
Even to
she
the low
faces
side as well.
as the owner
It's good
and
because a lot of
leader
times, even when
of
we
a
don't get
childcare
a
operation.
headline,
And
we
I
could find the stock
distinctly
moving
remember Zena
even before that.
explaining that
NVEE
she's got
patent.
a fully equipped classroom.
And then
It's a lovely
RGTI
facility
Citron.
with multiple
So
classrooms.
new,
one of
that
which
one's a smaller
fully
cap.
equipped with a
Be careful.
waiting
Again, that's not a
list
lot of
of
money,
demand
200,000
of
at
people
60
wanting
cents.
childcare, but the lights are off. It's dark. They
And
can't
Rigetti Compute.
open
Oh,
it
wasn't this one like
because
an
they
AI
can't
one?
Find enough teachers
I feel like I've seen this one in the
at
past.
the right wage to allow keeping the lights on and
The market is chill. I think it is. It's
the
about to chill here
regulations.
until
Now,
power
it
hour,
wasn't
the last
easy to
30,
hear that
or
story.
unless we
You could
break a new
sense the
high, but
frustration.
I'm not really
But it was
expecting much more.
real-time
And then
information
computers
that
might be
we
focusing
needed
on
to
these headlines.
hear. This challenge of how to balance off the regulations, the cost, the employment, and the impact for the labor market.
The
is what
Pepsi,
we're
if that
trying
was
to do.
2 standard
So,
deviations,
without
I
further
give or take
ado,
around there.
Let me introduce Governor Bowman and just say
You
a
guys
couple
hear that in the
words to
back?
kick
There's a
off
jackhammer.
before we start the panels.
I don't know if y'all
Governor
hear that.
Bowman has been a member of the Board of Governors of the Federal Reserve since 2018. Before joining the Board of Governors, she served as the State Bank Commissioner of Kansas, and prior to that, as Vice President of Farmers and Drovers Bank in
Y'all
Kansas.
hear that?
Since Fed Listens launched in 2019, Governor Bowman has absolutely been a passionate leader and driving force behind that program. It's not an insult to anyone else to say the Washington Board of Governors is not overly known for its participation of going out and talking to everyday people in the economy, but Governor Bowman is known for that. She's been out to, I don't even know how many places.
I am looking. I just even looking at the cameras. It looks good though.
Behind that program, and contributed to sessions like ours today across the nation and over the years. I have enjoyed getting to know Mickey and learned a great deal from her.
Mickey, you're so
I am
fun.
super grateful for her commitment to Fed Listens, and please join me in welcoming the governor to kick us
Mickey Bowman, thank you. Snaps. RGTI still on the high. That's the Citron one. Then Brent is settled.
It's a little bit tricky getting up here, but Austin, thank you so much.
It's so quiet. I'm sorry, guy. I have the volume. I'm trying to even whisper
Such a warm welcome
so that
to
I
come
don't
back
make it
to
too loud.
Chicago. So the first event that you talked about with Fed Listens, we had to do that remotely because it was during COVID. So we had all of our participants in little Zoom rectangles, and it was a really great start to Chicago's legacy for our Fed Listens programs. And then last year was just a really phenomenally inspirational event where we could see the progress of young people and their entry or their graduation from from high schools into the labor force. Really just incredible content that you all provided, and I can't wait to hear from our participants today. So it's really a pleasure for me to be able to join you here in person again in Chicago for this Fed Listens event. When we started Fed Listens back in 2019, the initiative was part of a broad, comprehensive review of the decision-making framework we use to pursue our monetary policy goals of maximum employment and price stability. In the years that followed, we've met with people from across the country and from a wide variety of backgrounds and experiences to learn about how the economy has been recovering from the COVID experience. Each Fed Listens event created a wonderful opportunity to take a step back, to ask questions of those who are directly impacted by our policies and the prevailing economic conditions, and then to really listen to their feedback. I'm extremely proud that Fed Listens has grown and developed into an ongoing venue for the Federal Reserve Board and the reserve banks to foster an ongoing conversation.
Yeah, GME, I think Chewy's on the high. I saw that
moving.
moving.
Directly experiencing current economic
You did miss the PHILO today, huh?
As many of you recall, or you may recall, last year's Fed Listens event here in Chicago, where we discussed youth employment and joining the labor force following the pandemic, was especially inspiring, as I noted just a moment ago. So in that spirit, today is a wonderful opportunity to continue this important conversation in the 7th District.
Man, I'm missing
but it's
everything.
also an opportunity to dig deeper into the issues that affect local families through the childcare industry for working parents and employers. Austin and I enjoyed getting to know our panelists.
Amazon and
today,
NBA, yeah,
and I'm
they
looking
finalized
forward
the deal.
to learning more about their
Amazon,
experiences
Disney,
through our
ESPN, and then somebody else. WBD
I'm
dropped
also
on it.
very pleased to welcome our audience, both in person and online, to our event today. I view Fed Listens as an excellent example of the board and system convenings that enable us to gain important insights about economic conditions by engaging directly with those who are experiencing them.
Did Google go up after the HubSpot?
As you all know,
'Cause I think we
Fed
kept
officials
looking
and
at Hubs,
economists
but I don't think we
review
saw
a
Google.
vast amount of economic data on a regular basis, as Austin mentioned earlier. So discussions like these and these that we will engage in today provide color and context to supplement the other economic data.
SoFi, I get asked this one every day. I like the bigger banks rather than SoFi, to be honest.
Help us to gain deeper insights.
That's my easy
into
answer.
how we're meeting our dual mandate of maintaining maximum employment and stable prices. A better understanding
New high on this SPY, so
of this type
see
of
how much
data
higher it goes.
from
Like
the
I said, I think
considerations that
572,
in making
and then we're
spending
like
decisions,
560ish. Might be
including
there.
those that relate to the cost of childcare,
Or no,
Factors
580,
weighed by
but I think
business
that's really
owners
high.
in
I'm talking about the
applying for
futures.
loans and offering benefits to their employees to help
Yeah,
attract
5618,
top
so
talent.
56125.
All of this information helps us to provide better insight.
And
into our
Google is
data
hitting a
collection and
52-week high.
decision-making. These conversations help us gain perspective
Sorry,
on how
I need a
Americans in
whisper.
different areas of the country are faring. Some of the issues that will be discussed today may be unique to the 7th District, but certainly many of these themes and dynamics are present throughout the country and across all 12 of our Federal Reserve districts. Seeking out local
Yeah, Meta is even hitting a 52-week high
one of the
too.
great advantages of the Federal Reserve System's regional structure and of the Fed Listens initiative in particular. So earlier, as I mentioned, we had the opportunity and the pleasure to meet each of our panelists that you'll hear from later this
No,
afternoon.
everything. Look at every single
Their varied
high ticker right now.
experiences and
It's all tech,
backgrounds
Amazon,
across sectors
Apple, all your
lay
big
an
names.
important foundation for today's discussion. And we hope that our attendees here in the room today will also join in to share your own observations as you experience these issues in your own lives, businesses, and communities.
Oh my gosh, yalla. Dude, it's doing it again.
Your
It is melting up.
perspective will help to
I mean, you're already
inform
above
our work
5,600
as
on
policymakers
SPX.
with the
So
responsibility
literally,
to
that's why I was
promote
saying
strong
58
and
or
vibrant
5280 or
economy
something.
for all
I forgot it was
Americans.
5,600.
So with that, I'd like to say thank you again to Austin, and especially to
Thank you to
recognize
Austin.
your entire Fed team, Chicago Fed team, for hosting the Fed Listens event today, and for the opportunity for me to be a part of this discussion. So without further ado, I'm delighted
can't make
to get our conversation started by turning things over to Robin Newberger, who is a policy advisor here at the Chicago Fed. So Robin, it's up to you.
We got another Fed. Who is this? Bowman?
I think I want to also invite up
Bowman,
our
Goolsby, and then the
panelists,
other
Kelly
guy,
and
whoever this
Dan.
is.
And that's because I'm going to do a kind of a seamless transition into the panel discussion and seat myself here with them. And so I want to thank you. Thank you, Governor Bowman. Thank you, President Goolsby.
Well, remember, whatever
Thank
puts
you for
play, you're going to get a
welcoming
move
everybody. I
final
too
end of
wanna
the
welcome
day,
everybody,
and then whatever happens here and
that's
however it
tuning
looks
in from
for
wherever you
today,
are.
that will all change by 5:30
And
tomorrow
because
morning.
This is a panel that we're also going to hear more about how access to childcare is affecting
Intel gassing, I haven't looked at that one in a minute.
My name is Robin Newberger. I'm a policy advisor in the Community Development.
We already pumped it
Policy
up today.
Engagement
Can you believe it?
Department, which has been part of this project team. And I'm very happy to be sitting here with my distinguished colleagues. And very briefly, I'd also like to acknowledge that there's a lot of people who have participated in this effort, working from positions
what?
of outreach
You just
into
lagged
the
me out?
communities in our district, and also from positions of research. And they've been looking at data and sometimes new data
that was annoying.
to understand this issue better. So we have both the outreach and the research that have been brought together in this conversation, and that's kind of a wonderful aspect of this whole project. So in this panel, we are hearing from two people who are looking at the data. That's Kelly Marquardt, an economist.
LT just sent me a hoarder
Dan
house.
Hartley, an economist in the regional department. And we're going to hear about some of the research that they've done, looking at factors that affect access to childcare. And if the timing goes as planned, we'll have a chance for a few questions. And my understanding is that you can ask those questions by scanning the QR code on the table or perhaps on the screen that some of you may be seeing. So let's get started, please, with Kelly's presentation. Thank you.
Yeah, NASDAQ extends gain to 1%. Jeez.
Okay.
So remember, you're pricing in
Thank you.
1.3
So,
yesterday, and you've already moved half of that today.
I'm going to be starting
I don't know
off
what the
this
NASDAQ was.
presentation, which
Oh, why is she so much
basically
louder?
summarizing some of the research and articles that are now posted on the Child Care Spotlight.
Many dumpster loads. No, this house looks crazy. It's in a very good
In particular,
area.
we're going to be talking about child care and the
But I
labor
didn't think it'd
market.
be this bad. There's like a crushed moped in the backyard.
Okay, yes, okay. So what I'm going to be talking about is all of the different data sets that we have used. to
Intel
decipher
is
the
running up
problem.
again. I don't know where the
And we
premiums, the
have
first
faced
plays
this
we got
puzzle
were
where
good.
Despite people reporting child care difficulties, we see that women with young kids are more likely to work now more than ever. So we've really dug into the data and taking a closer look at the underlying challenges. I'm going to talk about some of the findings we have on the arrangements and the cost of childcare as a barrier. And I'm going to spend some time showing you about the childcare, the labor market for childcare workers. And then I'm going to pass it over to Dan, who's going to show you what we can learn from geolocation data to think about access to childcare as a barrier.
All right, yeah. And then that's it. Lag me at the game. I don't have time to play one before Power Hour now.
We're going to work on the clicker as we go.
The clicker.
That's better, thanks. So looking at the CPS, which is the current population survey, there's a question asking what is the reason for why you are not working part-time, or being absent from work. And we see this stark but maybe not unexpected difference in male versus female, the share of 25 to 54-year-olds who list children or childcare as a reason for not working. So this shows that about 15.2% of females aged 25 to 54-year-olds report this as a reason for not working, whereas only 2.1% of males. Now, of course, some of these people might not have children, so they would not list this as a reason for not working. But we can look at the difference based off of whether the individual has a young child under 5 or children between 5 to 7. And we still see this difference in the share that report children as being not able to work. Of course, the difference is not as pronounced between males with the young kids and the older kids, but much more for the females with the young kids. About 31.5% of females with age 25 to 54 years old with a child under 5 list children as a reason for not working. It's totally plausible that they do not want to be working. They want to be at home taking care of the child.
I haven't looked at the Intel
What's
leaps.
interesting is in another
Again, I like
article
the
that
Intel
I think
shares.
is either posted today or sometime this week today, is looking at the labor force participation rate for this group, and we find that women aged 25 to 54 with a young child have seen it was a steady labor force participation rate, a slight increase before the pandemic, a little bit of a decrease during the pandemic, but then it's kind of skyrocketed up. Now, female labor force participation rate has gone up broadly, but the big increase over trend is especially true for this group of young women, or women with young children under 5. So the question is this increasing the demand for childcare? Now, we want to note that there has been a decline in the population of individuals aged 0 to 4, so fertility has gone down. However, despite that, the facts that I've shown you on the last couple of slides, so that even those that conditional on having a young child are entering the labor force more. So we're trying to think, are remote or hybrid work arrangements helping families meet these childcare needs? Are we further increasing the squeeze on childcare resources? The first obvious question is, well, if moms are working and reporting childcare as an issue, who is minding the kids of the 7th District? And so Dan Hartley and Leslie McGranahan have done some work on this using the Census Bureau's Household Pulse Survey, which asks questions about childcare arrangements. We're going to look at just in the 7th District, what are the different types of childcare that are being used? So what this figure is showing is the percent of households where the respondent is a working female, again with these young children under 5. What percent of those households use these different kinds of facilities, or these different kinds of arrangements?
Playing
So you can
b-ball,
see
I
that the
played
most
like
common are
a quarter, then
childcare
it lagged me
facilities,
out, but
as well as
it
using
just, Power Hour's in 5 minutes. I had enough time to
The
play
next
one till
highest is-
Power
or the
Hour, but it's
next,
cool.
Highest is none.
No,
So there's a fair
I actually got a
amount, about
real estate
19%
thing
that
right
report
now.
not
That's why I'm
having
still
access to
letting this run
childcare
for a little
despite
bit.
working with a young kid under 5. Other non-relatives that you can think about this as including nannies, and about 2% use Head Start. I don't have this on the slide, but some interesting things pop out about the differences in the 7th District. In particular, Iowa is families from Iowa are much more likely to use childcare facilities, and households from Detroit are much more likely to use relatives for care. One thing I'll note is if you've done the math quickly, this does not add up to 100%, and that is because people can use multiple types of care. So about 28 to 30% of households actually use more than one type of arrangement during the last week for childcare. So that can kind of even give you a hint about kind of balancing access. One reason, of course, why these maze differ is because they have different costs. And so what we can look at is the variation in the utilization of these different types of arrangements based on the household's income. So what this is showing is the percent of households, again, with that working female with a child under 5, based on the total household income. So blue is going to be those with less than $50,000 a year. All the way over to the orange is those with more than $200,000 a year. Some striking differences pop out here. Looking at the child care facilities, high-income households are much more likely to use child care facilities than low-income households. On the other extreme, those that report not using or not having access to or not using any type of child care during the last week, much more likely for low-income households to report this than high-income households. Same with relatives for care. Low-income households are more likely to rely on relatives than high-income households. These other non-relatives might, as you would expect, those that are using nannies are oftentimes more high-income. And then I want to note that those that are utilizing the Head Start, kind of as it was intended, is this low-income households that rely on this. So how much does it cost? Is this difference in income totally related to the cost of these different arrangements? One thing that was kind of striking is that 41% of households with a young child under 5 report not paying for childcare. Now this differs based on the type of arrangements that they have. As you might expect, those that use Head Start or a relative for care are much less likely to pay for childcare. If you're getting care from a child care facility, about 10% don't pay, so the majority are paying for the service, as well as the other non-relatives, so the nannies, much more likely to pay. Now, conditional on paying for childcare for just one child, because the authors here were interested in what's the per child price. So conditional on paying, the average weekly cost in the 7th district is about $267, so a little under $14,000 a year. This is lower than the US average, which is about $325 per week. The one exception, of course, as you might expect, would be Chicago, which is much more expensive, so about $397 per week for childcare, conditional on paying. So next, what we're going to look at is another article which kind of changes gears and focus on the paid childcare labor market. So who are these childcare workers that are being paid? And in particular, we want to think about those that are working in these childcare facilities or these other non-relatives for care. So childcare is a very labor-intensive sector. We don't have robots, and so the size and the composition of the workforce is important. We're going to use several different data sources to examine the paid childcare labor market. We're going to look at how many there are, who they are, where they work, their wages, and at what rate are they leaving the childcare sector. So in 2019, there were approximately 1.7 million childcare workers.
Yeah, we're not doing
about
that.
1% of the overall employed population. Broadly defined.
We're not reviewing all of this. We're not. They are, but we're not going to do that. Again, I think they suckered us in there with 2 Fed speakers, but all they did was give intros. Yeah, at least the Fed stuff. I mean, you got to hear from Powell and everyone else, you know what I'm saying? At least there's somewhat there, but this is a Fed Listens event, but I don't think you're going to get any comments out of any of them. So, good news, power hour is in 45 minutes, so markets should start moving up, and then I think that final 10 to 5 minutes, you'll probably get a counter move, or that'll just be the real decider of where we're going to close here. So I hope you're ready for it, Chattadonia, and good morning. We do have CPI tomorrow morning, and everything is expected to come down. So I'll cover this on the watch list tonight. Second link, youtube.com/the trading fraternity, but where is it priced in? Yeah, we're looking for 0.2 on the core, headline to come in at 0 or 0.1, and it'd be 3.3 to 3.1, and then core is going to be sticky. But remember, last time we got excited, and again, I don't know if you guys recall, this is the thing I will tell you. Last time CPI was bigger than Powell. Where was it? Right here. So this was your last CPI. Remember, CPI was so good, and then you had Powell, but you danced around with Powell around here, and then lately you've been kind of bouncing off that Powell level for the last week or so. That was the start of last week, but remember, that CPI was refreshingly positive last time. Oh, shit. It might be. No, yeah, I think it's going to come down tomorrow. You're even comparing it. Even the year-over-year comps. June was low. Headline might come up, but core is going to come down tomorrow. I wouldn't be surprised if that happened. So, either way, though, it should end up all roses, I think. I mean, if CPI it has to be really hot. I think headline is going to come in hotter, but I think you're going to get hot headline and then slower core. And then everyone's be like, well, core came down. Other than that, if they both surprise to the upside, then yeah, you'll have a bad day. But if that doesn't occur, if one good, one bad, especially core good, I think you're going to have that. I'm not saying straight up. I think you could just hold. Again, bro, we've done every other week. It's been 100 points higher. So, I mean, it's not really, if everything comes in line, can the market go higher? Yeah. But I think you're just justifying the last 200 points after justifying the other 300 points. This is just fucking April, man. So, yeah, does that make sense? I hope it does. I hope it does. We were 360 in 2022. Well, yeah, we were just looking at the long term from 2022, and that was wild. But even then, I mean, this year and some of the, like, again, going back to April was a 600-point move. So from April 17th to today, you moved up 600 points, and that's after climbing 700 points from January to April and then coming down. But like I'm saying, for the short run, just comparing like what you're going to get into tomorrow, don't forget the last CPI was very positive. It wasn't sticky. The core finally dropped to a new low, and everybody got really excited by it. So now, whatever you're going through now, I mean, it's going to be borderline. Can you justify that move or not? How the Pepsi call put both call and put green. Implied volatility ahead of earnings, and then, I mean, at the same respect, the play was only pricing in 3%, so they could probably go up as people buy it and then anticipate more. That's why I bought them. I thought they were cheap on both sides. When reality catches up, it's going to be apocalyptic. Well, that's kind of the problem, is that until the policy and the path actually change, nothing is going to happen. And that's why, as nothing's been happening, we have just been melting up. The parabolic. Bro, we've been setting. I was saying it today. We're streaking. The last time we did, we're back to the beginning of the year where we've done X amount of days and weeks all green. Lester Holt to interview Biden on Monday. To get everybody. I'm fucking fine. Set up another interview. I promise, just before 8 p.m. Just set another one up. I'll show you. I'll know of it, and I'll remember if I watch the other one. Yeah. Not going to lie, the long term loves it so much. I can't hate it, but I feel like there has to be sanity for the gains for them to feel solid. Well, yeah, I feel you. It would be, you'd feel stable and be like, oh, wow, it makes sense why it went up. I feel comfortable with it. But at the end of the day, I would be lying if I said I was comfortable with every move that made me rich, if that makes any sense. You know, like it feels like this, unfortunately. That's why you make your money on the buy. It sets you up with your cushion, but it's never going to feel like, it will never feel stable. And honestly, if it does, those are usually the moments where it really gets wiped out. But then it's just like, this is just setting us up a big range. So now when there is a big drop, you're not going to be as low as you once were, but then it could still give up a lot of it. You feel bad for the bear. Are you even listening, Ivan, or are you just talking shit again? And I say again, you weren't talking shit last time, but it seems like you throwing shade at the Bears, and then you weren't. I don't even know if you hear me right now. I offered you $1,000. Where do we go if CPI is clean? I mean, I think it'll either go up a little bit or it'll just hold whatever we have right now. And then SPY. I'm down $50 on that short, though. I got a good price on that one from earlier. Yeah, he's still not listening. He's just talking shit to y'all. Isn't that wild? You missed the Friday mini games so much. Yeah, they were fun, but it's good. I've saved a lot of money. It saved me a lot of money, and without a without a Bloomberg terminal, I'm saving even more. So I might go buy me a Ferrari, but in the meantime, let's focus on getting the likes before I think we talk about any games. You know what I'm saying? We've been struggling with that lately. Thank you. Thank you, Wendy. I hope you got a long-term. We've had good long-term discussions today. I mean, even some decent trades, but I'm excited for earnings. I think things will get a little bit more active then. Why do you think we struggle with the likes? I don't know. But I do know that familiarity breeds contempt. So, just make sure you don't take anything for granted. I think the TSM numbers are great. I don't know if you noticed the trend today. If all the Apple stuff comes true and then TSM is up by 30%, I mean, it just seems like you're kind of witnessing AI ramp on, at least in some level, which beyond just NVIDIA. You did miss the Delta preview. Yeah, we didn't make a play on it, only made a play on Pepsi. SQQ. I think you're better off tomorrow waiting till, unless you're going to do it now, I would just literally wait until the data comes out and then play whatever direction the data is. You may be a little late, but I think you'll be better off. But I don't know, even then, even if it is like, unless the data is really good, like better than expected, if it just comes in good, it may not even go up that much. If that makes, so maybe you could, I think the risk to reward to the downside's a little better, but even then I would feel more comfortable waiting. you may miss out on like a 0.5%, 1/4% move, but then if I really think the follow through and all of that, if you just play it after the data, you'll be good. You still think there'll be a big TLT move around September? I don't know if I ever said like September. I mean, I've given a couple of areas where we could see it happen, but if you go watch the video that I put out, and a lot of people liked it. You guys actually showed love, and I think a lot of you listened to it, but I made a video called Exactly When to Buy TLT, and I said it could happen in 2 weeks, it could happen in 2 years. So I'm open with either or, but depending on how that plays out, I mean, that's going to be your window, but it's more or less, why get caught up with the time when all you have to do is just wait until the yield curve actually uninverts. Because in the meantime, it's going to be very, like, you could spend a lot of time waiting. It could be very slow trying to wait for the boat crash, even if you see it crashing. Could he be waiting for Jackson Hole to announce rate cuts? That's where he announced rate. Maybe. But honestly, though, the problem is that it's either the data is going to force Powell's hand, and it might keep moving slow, or he could keep saying, I need more confidence. But then the other part of the coin is that there's an election. So in my mind, it makes a lot more sense for Powell to wait till after the election. Why? Because the Powell is literally the day after the election, or 2 days after. So, like, straight up, he can just, like, why even give yourself the political, logic when you could just wait, like, or why deal with the political flack when you could just wait? What was the Pepsi play? The Pepsi play was both ways, 2 standard deviations. And then if you need me to figure that out and tell you, then at that point, then you want me to get you baby wipes and do it for you? You know what I'm saying? So 2 standard deviations both ways on Pepsi. And hope we have a tutorial in the description and every watch list to figure out that. What expiration? The same one we would do on any 2 standard deviation play. So check it out. Check out the video. It'll save you a lot of time, especially next time we make a play. And if I answer as such, you'll be able to know exactly what is going on. Ecclesiastes 7:8. I don't even know what the verse is, but you're the worst. You know what I'm saying? Nothing worse than people hitting you with the Bible quotes without any context. Just say the Bible quote and then what you mean by it. That'll go a long way. Nike. We chilling, bro. Nasdaq still below 1%. I want to see Nike. Oh no, man. Nike, maybe it just needs to hit below 70 and call it a day. Redfin and Zillow. I like Redfin, but I bought it at $3. So I don't know if I'd buy it at the higher prices, but I think Redfin and Zillow will be around for a while. Valuation-wise, that's the concern. I like Rivian at like a really, really low price. I'm worried about them running out of cash, but I think at like if it was cheap enough, I would buy it for parts. I've been seeing them everywhere. At what level of Fed unemployment they deem a warning? I think above 4, no? Or above 6? Isn't that like the average? Someone asked that on the watch list, and we went over that. Like, what's a normal rate of unemployment? But I think around like 5 or 6, they'll start to panic. We're at 4.1 now. Yeah, 5 or 6, and then 7 is really bad. But at other times, I mean, we were historically around like 5.5 to 6. But also labor participation was different too. Nike's going in the toilet. Their shoes suck. Their apparel is horrible. Well, the number one thing to make money off of that is to short the stock. So feel free. I think you could get, if it goes to 0, that's like $72 a share. So if you're into that, that's the way to do it. Remote work, more people working. But did you guys hear about the new scam? That's what you're doing. So then you're pumping your play. So post your position. Thank you. But did you hear about the new scam that the recruiters are doing? They advertise the job as remote work. And then when you get there, they're like, yeah, it's only like 2 days of remote work. And then you have to be in there. I don't know if they offer like fully remote jobs the same way they were a couple years ago. What happened? Did you end up taking the job or no? YouTube won't let you post your question. It's too bad. Oh, well, hopefully there's a nice way to say it, or you could email me it. But then if it is like nonsense, I will block you from my email. Can you work fully remote for you? Maybe. I think we've already filled those positions. So we have people doing some calls, following up with leads. That's all remote. It would be nice if you could be in a local area and could go outside, because then you could do remote and then do a little bit of the door knocking and personal follow-ups. But I don't know if we have any available right now. I'll talk with Lending Tips today. I'm not playing WD-40. No, they report, though. Isn't that part of tomorrow morning? I don't think we went over that preview. You're local in San Diego. Is there any openings? That would be good. But like I said, let me talk to Lending Tips and see. But the phone call stuff, I mean, we had it. I think we got like 4 or 5 Chads who got on board, and they were doing it. We paid them hourly, and then they got a commission on any deals closed. I think someone got a deal within like 2 weeks. But I have to talk to Lending Tips if it's available. We do have co-real estate tonight. It is not going to be public, but it will be tonight for those of you who are already involved. 4 p.m. Oh, so I'm not going to have a watch list actually tonight. Damn. So I will be early for CPI tomorrow. But yeah, I don't think we're going to have a watch list tonight. I forgot. I will not have time to do both. Maybe I can make a video later. Bro, I love it, but like, I love that point of view. I love the point of view filming, but I never realized how much I move my head when I talk. It made me laugh. I feel like I'm a character. Y'all don't realize the amount of energy I exert after doing a point of view, bro. I never bro, my head is just bobbling. I'm a fucking bobblehead. And I'm just like, go watch. Did you see yesterday's watch list? You have to see it, bro. It's funny. But like literally all that movement is just me bobbling my head while I speak. I like the hands too. I'm a very expressive speaker. I'm just a bobblehead. I never really realized it. Could we get an uncle bobblehead? That'd be kind of dope. I never really thought about that. That'd be some good uncle merch. You get a bobblehead on your dashboard. Maybe TMI, but I listen to the watch list in the shower in the mornings. I thought I was gonna drown from laughing at the camera. That's good. That's good. You watch. Honestly, that's very productive. You know, I'm glad, man. I love content that you could consume while like pooping or showering. You know, take it all in and then be able to, you know, some personal hygiene. I'm down with it, bro. I'm down with it. Cause like, bro, if I could, like, it'd be weird if I could film the watch list while in the shower. I would. You know what I'm saying? But that's TMI. That'd be weird. I think some of you would probably pay for that for $19.99 a month. But at the end of the day, that would be convenient. Or if I could just like take a dump and film the watch list, man, I get 5 watch lists a day. You got a job for Abby via hiring fully junior remote account managers. Take it, man. Tell them pay you in stock. SPY 2 standard deviations is above the 20-day moving average. The thing that sucks about 2 standard deviations, you just made half of the expected move today. So we were pricing in 1.3 on the SPY. You're at 0.75 right now, and you still have the event right around the corner. So I think if you took the 2 standard deviation plays yesterday, they probably did really good. And we topping out. No, I mean, maybe for the day, I thought we were going to top out just, around this price. We went up a little higher, but at the end of the day, it's hard to say because tomorrow morning, everything can change. What goes up must come down, but we ain't in the video. Oh, for power hour? Yeah, 30 more minutes, we'll see. You'll get that final 10-minute move. I think there'll be a big downside candle, but then there'll also be some upside. Kind of like yesterday. I don't know if you guys remember how that played out. That was kind of wild. You're an S&P holder. How do you find the courage to choose your first single stock? Find the ones that you know about for your whole entire life and that are trading at a very, very big low. That's why some of the names out there right now. Starbucks, Nike, UPS, Pfizer. I think those are some of the easiest ones because you don't really need that much courage. You know what I'm saying? Yeah, the stocks can go lower, but like at the very least, I find it way easier to buy a stock that I've known about my whole life at a multi-decade low. Or year low. That's easier to do than buying something at all-time highs. For me personally. For some people, it's different, but I think that's the easiest way to find that courage. Even McDonald's, if you want to be in the middle there. I think even Home Depot, too. Finally, the question went through. I hope that helps. Yeah, I'm glad Nike, but there's still a little bit more of that downside. We'll see. Just like Intel, bro. We bought Intel, it did nothing for a month, and then you just wake up, and then it's up like 12, 15%. Even Disney to a degree, but it just sucks if it turns into like a PayPal. But I do think PayPal kind of had its own unique situation going on there. I'm stretching. We do reach the golden path and inflation comes down. Where do you see the SPY going? Well, we're doing it now. So we are on the golden path right now. It's been almost a year of growth expanding slowly while inflation has came down. So you're on the golden path. You're literally witnessing it now. The question is, when is inflation over? And then we'll probably be near those highs, you know, maybe a little bit higher from here, maybe a lot higher. But when it's all said and done, I mean, you're already in that golden path. It's just a matter now we're waiting to stick the landing. That's what it is right now. The flaps are out, the wheels are out, and we're gliding down, but everything's looking good. It just, you have to stick the landing, and then either the market comes down off of that or it'll confirm all of the movement we just had, and then the next realm of where the market goes, that'll just be dependent on the next driver of growth and how do these companies play out, or do these companies take all this profit that they've made, and then the lack of growth and lack of economic decline leads them to both buy back shares, reinvest, and have a way to return capital to shareholders, thereby increasing the value of the stocks. The landing is when inflation comes back to 2% without the economy crashing. That's it. That's our landing. So do you get it? We're slowly landing right now. Inflation's down to isn't it wild? Again, my mom gets mind blown. I had to explain it to her because she's like, what do you mean inflation at 3%? This is not, the price is not 3%. This is a lie. Because you got to think about it. You're still not at that goal. Even though 3% is happening and that seems pretty low, you're not at the 2% target, which would allow Powell and the Fed to say, okay, we've accomplished our mission. I saw that. My mom saw the video too. Did you see that guy? And Walmart got rid of the feature. You know that? So, like, there was a guy, he posted a video, and he saw his old order from Walmart that he ordered in, like, 2020 or something, 2019. And his whole groceries for the month was, like, $150. And there was an option to reorder the cart. And then he did it, and then the price of that same $150, like $400 and something dollars. It's crazy, bro. I don't know. I might have to, I might make a video on this, but, like, it's real, bro. Like, I even had a discussion the other day. It was actually with my sister because she was trying to be like, oh, this and that. She's like, oh, you don't understand. And I'm like, what the fuck do you mean I don't understand? You know, just because I have, you know, worked a certain amount of my life and chose to save and do other things. Yeah, I have money. Great. It does not mean I'm immune to not feeling the reality that everybody has to go through. And I'm like, bro, it's insane right now. I don't know how people are doing it. It was already bad in some areas, but like now after multiple years, savings depleted, and like it just keeps going up. Like I get sticker shock at everything I've ever purchased, even now to this day. If you don't think, it doesn't matter how much money I have or don't have, if you cannot recognize how bad the price increases are, it's wild. And again, I'm not here to say it's corporate greed. Do I think that's part of the problem? Yes. It is both. I think it's both the government and corporations and all of them working together that have created this situation. And it's awful, but it's like, dude, it's really tough out there right now. It's weird because everybody tells you how great it is, but I'm telling you, bro, the sticker shock, I get it. And and honestly, like, shame on you if you're like, oh, you have money, you can't have sticker shock. No, I can, because I've been frugal for most of my life. You know what I'm saying? Like, I do care about what I buy, and unfortunately, and it's just like every time, bro, I even myself, bro, I'm like, dude, I don't care what kind of car I drive or anything. It's like, dude, it's expensive to go get food. It's expensive to do absolutely anything right now. Even if you want to just go hang out somewhere and find a place to chill. Like, I think this sucks for the younger generations. It's massively expensive, regardless. And I don't know. I think everybody can feel it at this point. Just a matter of how it affects her behavior and decisions. But no, dude, it's bad. So everything. I mean, I'm getting sticker shock everywhere I go. And I tell you, even on holidays, on the 4th of July, it really hit me because I was like, dude, this is crazy. Like, it's funny you're saying I avoid delivery because, like, I DoorDash shit. But, dude, I'm telling you, what I saw on the holidays, I was like, I should have just DoorDashed. It would have been cheaper. And I'm like, I should have just ate something normal. You try to go out anywhere, bro, it's insane. Mm-hmm. Does that mean stocks? Yeah, stocks have benefited a little bit off of that inflation. But here's the thing, like, and I said this the other day, because guess what? I've been in a market and I made a lot of money off of melt up before anybody ever talked about inflation. So go look at the market from 2015 to 2019 and go look at that melt up. Made a lot of money. Guess what? Nobody ever said the words inflation. Market can do it without that. But I do think part of it, you do see some inflation in the stock prices as well. But it doesn't really, again, that's not the inflation that fucks with people. What fucks with people is when you have to go buy food and gasoline. When you have to go, and your rent now has been for 4 years, it's been up by 50% in 4 years. You know what I'm saying? Like, every day, the sticker shock is real. Because not everybody owns stocks. But it's every day is pretty tough, bro. And I see it a lot, and I don't know. And I've gone through many years of people, well, you can't see it. You have money. It's like, no, I can. I have a family, and I support a lot of people too. But it's like, dude, no, everywhere, everything is massively, massively expensive right now. So I feel you, and I don't use it as a justification or tell you to vote for anybody. But if anything, it's just more emphasis to what I do preach. You really got to save money. You really got to build a long term, and you really have to be mindful about what you're purchasing. And I've said that for many years, and I think it stands even more so now. It's greed. It's not. I mean, again, it's unfortunately, if you think it is only greed, you are very ignorant to the situation. It's not solely corporate greed. Is that part of the equation? Yes. But to ignore the government, that's insanity. Again, just today, they offered 39 or 29 billion of government bonds. Yesterday, they did $58 billion not just in the last 48 hours. Again, the amount of money that that has gone to certain policies and how the government has put out a lot, that in conjunction with corporations, that you then with corporate greed, then yes, I could agree with that. But that's the crazy part. That money gets spent. All of it gets spent. All of that money goes to pay for government employees. Again, go get ready for tomorrow, or go look at the last non-farms, go look at the last 4 years. More government jobs have been added than anything. How do you think we pay that? Imagine giving millions of people hundreds of $1,000s a year, health benefits, insurance, all of that. Who pays for that? You know what I'm saying? Doesn't matter if they're below the market. You just said the money doesn't get spent. It does every single day. The way you get that money into the system is by spending it. Otherwise, it doesn't get into the system. That's just how it works. And that's why I'm saying, is there corporate greed? Yes, there is. But to blame solely corporate greed and ignoring what these governments around the world, especially America, is doing, that is, it's. Are you trying to understand the problem, or do you just want to go against the corporations when the government is backdooring you pretty hard right now too? They're both doing it. And that's why I'm saying we need to work together, and it's everybody until we give and call for accountability and actually hold people accountable instead of getting in our feelings about ideological issues that get us to ignore the accountability, then it's going to be the same. But unfortunately, don't ever underestimate how impactful the demand of governments is. Again, we've been going over ISI and structural adjustment and how it led into neoliberalism. These have been my lessons on the watch list over the last 2 weeks now. And that's important because you could understand how it happened in the past. Even in the past, to go to a industrial substitution, governments did the same thing. They hired people, and they hired people massively, and then they got mad when they took away those jobs too. It doesn't explain why inflation was so high in countries where the government didn't increase spending. They all did the same thing. So Canada, they sold bonds as well too. They may have done it a little bit earlier, but it's everywhere. It's and this is what I'm saying. It's global competition, and it's all. Imagine what America is doing with all of the money. They're buying things, and then everybody else. And then if you now have the dollar, the value of the dollar again. This goes back to even the 50s, 60s, 70s, and ISI, and understanding how certain exchange rates or not, it made you either more competitive or not, and it changed how you engaged in business. All of this around the world, like I'm saying, are you correct that corporations are greedy? Yes. You guys aren't wrong. But to ignore the impact of government debt and spending it's insanity to think that that all of the money that we printed from all of these governments is not having an impact. It's just, it's absolutely like it's insanity, because it's not. It's so unfair to say that it's just corporations. And like I'm saying, if you don't understand the game, it's government blames the corporations blame the government. Meanwhile, they both fuck you. Like, this is what I'm like. You got to really, really think about it. And that's why it's like, corporations are bad. Well, what about government spending all around the world? And you got to really, really look at it. And then vice versa. It's not just the government. All the people who are saying that it's only government spending. It's only Ukraine. It's like, no, it's these corporations. Like, Jamie Dimon gets paid $150 million a year. Go look at all of them. And again, their margins may not have gone up because they bullshit spend to keep the margins artificially low. So then you could pretty much factor your growth rate for the next 20 years. Biden agrees to ship 500-pound bombs to Israel. Headline. You work in finance? I'm not surprised. Again, people have even said it. Until the finance world is even willing to call out the fuckery too, it doesn't matter, and that's why gold is going up. But I strongly believe that what I'm saying is not misguided, and I really encourage people to understand it's both things. You don't get one without the other. You don't get greed and corruption without something allowing that environment to thrive. Do you get what I'm saying? Where did it come from? Like, you got to, why weren't people this greedy in 2019? Why, like, where did this, think about all the money printing. And then again, all the fraud that people did. And then you see all these people doing this and that. It's like, and then again, nobody gets in trouble for it. Nobody is held accountable for it for years now. So you got to really think about it. What sparked it? And where did this come from? So what stops or slows it? I think both less government spending. I think, or corporates cutting back, but you're more likely, again, like I'm saying, just unfortunately, although it's both of them, I do give a little personal blame to the government, just because the governments of the world are so much bigger. Again, America, Canada, Mexico, the EU, they're massive. And how much money that they spend is like insane. Corporations paying none in taxes, screwing the working people. They are, but like, the one thing you guys got to think about, pandemic. You guys remember that PPP loan? You remember the payroll protection? The government gave Walmart, Amazon, Nike, all of these companies got billions of dollars. They got their money before you did. Even if they skirted their taxes, at least they were filing taxes for decades. Guess what? They got the money first. What do you think happened to small businesses and all that? They got it. Yeah, you could say corporate greed, but who gave them the fucking money? The government. The government's like, yeah, we need to help out the little guy, but first we're going to help out all of these behemoths. The government gave them money. All of them, whether they needed it or not, whether they had buffers, whether they were suffering or not, and nobody stopped the government. No one was like, oh, why don't we just give it to the people? Why don't we give it to select corporations? No, they gave a blanket blank check to everybody. And the biggest of the biggest are now your top leaders in the market. Don't debase our currency. Well, we're kind of getting it, but the weird part about it all is there's other countries. So right now, everybody else is they went through shit too, and they all love the dollar, sadly. Enphase rocketing right now, 107. We'll give rich folk money, but we won't pay for people's college. So messed up. It is, but like, here's another fucked up reality. You go and pay off everybody's student loan debt right now. Who wins? Think about it. It's fucked. Navient wins. It's the same thing. It's just, that's why I keep telling you, it's government and corporations. They're best friends and they love to blame each other, so you don't focus on it. The government doesn't own all the debt. No, unfortunately. But like, and I'm not trying to make a point. I'm just trying to show you guys, if you like, notice how corporations are benefiting off of the government spending, and then vice versa. The governments are getting to do whatever they want. And then again, if these big corporations, they're benefiting off of it, they're going to support it too. But these are the people. And then like the main point you guys are saying, the people are getting fucked. The people who can't afford it, the people who work every day, who pay the taxes, who buy from the corporations because they have all of our items that you have grown to need on a daily basis. And, you know, so the irony of all of it there, it's both of these things. It's like, what I'm trying to say is I don't see a greedy corporation without seeing a greedy government, and vice versa. And they're both working hand in hand with each other, benefiting while the consumer is getting murdered. There's no loss to anyone on loan forgiveness. The majority of students paid their loan and interest. That's how effed up the usury system is. I feel you, but what I am saying is a corporation wins. For the debt owned by the government, you're right. But there's a lot of money owned by certain banks, SoFi, Navient. They own these. They're going to win. And now you're once again giving billions of dollars unchecked to a corporation. And you're like, wow, these guys are greedy. Oh, wow, our prices are expensive. Because, again, where did that money come from, too? And then you're playing this game where they're both doing it, and then a smaller group of society is benefiting off. They're not, again, the aggregate gains are getting lower and lower and lower because it's not. And then, again, who's getting enriched? It's both the government and it's both bigger corporations. So I feel y'all, man. Like I'm saying, though, unfortunately, it just, I really hope you guys kind of understand, really, we're not pointing the finger just at one company or one group. It's like, the way they're going back and forth, it's kind of insane. He said, nope, I'm pointing at Boeing. I think we could all agree on that. One of your student loans, you've been $30K, you've been paying for 9 years, paid over $60K, and I still own $15K. Yeah, man, welcome to interest. And then again, I bet you a corporation bought it after a certain amount of time. And that's a corporation benefiting off of it. And I bet you that company probably got a tax write-off by giving you the loan 10 years ago. And then you're going to bail them out too on it. It's crazy. It's honestly insane. This is just sadly how it all works. And that's why it's like, I just think accountability, less ideological politics, everybody coming together and realizing we are the ones. Stop voting and empower people who support this and stop buying from company. That's why they don't want this to happen. They have to blame each other and get you to pick one side, because then you would just stop paying your taxes and you would stop buying from these corporations, and that could change shit real quick in a year. But until then, yeah, chill before YouTube claps me. I'm already been clapped many times. So, amen. Am I boycotting? I want to, but we need more unity together. That's it. Everybody wants to fight, and we're so involved in the Trump and Biden and left and right that we're not really realizing we're all getting fucked, no matter who we are, no matter what we believe, and everybody just talks some game to get support and to get more money. That's it. Everybody just talks. Oh, I support this. I support that. I don't support this. They all just do it so that they could be aligned to get more money and more money and more money. And they're going to charge you more, and they're going to tax you more. And they're going to get taxed more, and they're going to charge you more. And say, look, we're doing this. We got to do it for that. So, yeah. Praise God you found it, baby. Amen. If you found it, you're chosen. They won't let you find it. So, amen, baby. It was meant to be. Meant to be, baby. All right, bro. You're ripping that ES short, man. I took it at a good time, but no. Another, bro, that's crazy. Where are we at now? It has to be a 56.30. Yeah, you're right under there. So that'll be the next level, 56.30, and then maybe it chills out. But if tomorrow does do good, it'll probably keep running. And then we got 10-minute rigged. So here it is. You're very confused. Don't be. Because it's the same situation we've been in months. We're just riding the golden path. And then it's summertime and low liquidity and computers. That's it. It's just, again, it's just a weird game of 2K. And the level hasn't changed. I guess almost a year. No, because, again, remember October was pretty bad last year as well. And then you rocketed up. Yeah, MO dividend. I'm glad it didn't move too much. They gave us our shares high, though. And then Intel rocketing up to here. And ta-da. Oh, the Intel call still holding. Oh, my goodness. All right, I might hold that ES short till either. I'm going to try to close it before the data tomorrow. I'm not going to hold, though. Oh, that's crazy. So 56.30 is where I'd look to top out. But again, I thought we'd top at 56.17. So to give you an idea, it's fully been melt-up mode today. Nothing happened. I mean, that's it. Sadly, I wish I could give you a better answer. But I think it's just momentum. Either momentum was going to stop or is going to keep going. And then again, people are anticipating a favorable CPI tomorrow. Drop and pop. Maybe. That's it, bro. You just did the expected move today. So literally, you were expecting to move 1.3 on the SPY. You're up 1% right now with 10 minutes remaining. Hey, calm down. Calm down. Let's see. Is this short covering? I think some of it, and then also just continuing from the morning. But it's a big move. This is unexpected now. So now you're still pricing in another 1.3 for tomorrow, and then now this is going to be a 2.5% move on the week. It's massive. So again, this move was already crazy in the AM, but then this final one now, I think it's just a mix of both momentum and short covering. But I mean, it's not like the volume is big. You know, you know what I'm saying? So like, if you're really going to get a lot of short covering, I think you'd get more volume. And I mean, welcome to July. Powell did hint at, well, he said something about the labor market. He said that keeps him up. I don't think this is anything driven off of Powell, though. Bam, 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 bam. 632. All right, so this is going to be the other level, and then I think it goes to 43 or 48. But again, and I thought it worked at 17 for a couple of hours, and then you really held that, but then that's it. It went round two. Well, at least the bonds. It's crazy because bonds are still holding up, but that will probably be the play of the week here. If CPI confirms, the bonds are really, really lagging behind still. So that's the only thing here. That's why I'm like, bonds, I think, are really going to be the move. Who's buying it? The same 40 million who bought it yesterday. It's a computer. MO, bro, it's rocketing. Welcome, my friends, welcome. Mm, 56.33. I don't know how much time. Final 5 in 2 more minutes. All right, final 5. I say 2 minutes. I meant 2 more seconds. Yeah, the first weeks of July and July in general is very, very good. So I think that's part of it. And then we're on one of these streaks, but I don't think it's driven off of anything. I think momentum and summer, baby. Yeah, if Apple did round 2 again, even Intel, I mean, that was a name. Everything's up 1% now. Russell, Dow, SPY. Actually, SPY is the only one lagging. July in an election year is the 4th best month for gains. TLT, I mean, I think that's going to be a good play for tomorrow. Not saying it's going to go up, although I am positioned for the upside. It is, I do think the bonds are going to have the most risk reward tomorrow, especially after this move. I mean, that's it. Because if the market's going to keep rallying, or even if the market stays up, bonds are going to need to come back, or at least they don't have to, but ideally you would think that would be the case. I still do have that Apple call, the random one. But Chattadonia, God bless you all. Thank you all today for holding it down. You know what I'm saying? Thank you for being well-respected in the chat, showing love. And as my thank you to you, I'm here to give you a warning. When I say earmuffs, that is your moment to mute your speakers because it is going to get extremely loud in here. So when you hear me say earmuffs, that is your moment to mute your speakers. So be very, very careful here. I want to make sure you have a good day. You showed a lot of love to the chat. You know, you didn't get banned. You didn't get timeout. So it's amazing. But when I say earmuffs, that is your moment to mute your speakers, okay? It's going to get really loud. That's our safe word, earmuffs. Earmuffs, okay? Sounds good? Good. Okay, ready? Earmuffs. This is not a drill. Earmuffs. Earmuffs. Here it is. All right, ladies and gentlemen, we're making our final approach. As we make our final approach, you guys are holding on to any bags. Please throw them in the overhead bins above or firmly beneath their seats. We'll be coming through the aisles with the trash bag if you'd like to dispose of those bags. But as we make this final approach, we're going to be landing here into the second link terminal. Second link terminal description, that's going to be your nightly watch list and main channel layover around 4 p.m. But unfortunately, we will be skipping tonight. And then tomorrow, we will be taking on promptly around 6 a.m. out of sunny San Diego, California. As we make this final approach into San Diego International Airport, it's about 77 degrees and sunny. Looking like a beautiful day unless you shorted the market, depending on when you did it. But even then, you are getting squeezed a little bit now. But the good news is you got CPI tomorrow, and we are no longer under COVID guidelines until the election. So no masks are required, but we do ask that you exit one row at a time and drop a GG on your way out. As always, we appreciate you guys' business, and if you guys are interested in your Cole Rapid Awards program card, please flag down our flight attendant, and we'll get you that as soon as possible. As always, thank you for flying with the coat, and hopefully have a wonderful evening. Chattadonia, you only have 1 minute. Go, 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 go. Ladies and gentlemen, boys and girls, it's time to wrap it up. Bring it home. Finalize those plays. Speak now or forever hold your peace. Shares, options, futures. You have data 1 hour before the bell tomorrow. You literally just made a majority of the expected move today. So I don't know if that's cushion. If you add it up top, pay it on the back end, but you got to finalize it now. You have less than 5 seconds remaining. 3, 2, 1. Ding 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 ding. Horna, let's go. Oh, Chattadonia. We did it, we made it. 7 hours in the books. Another wild one with low volume, but a big move. I don't care if you just got here or not. I need a good game in the chat. Drop that GG. Let's go, baby. Don't matter if you made money or lost money. I know you learned something. Everybody that contributed brought something to the table. Plays, news, vibes, personality, info. Way to hold it down, baby. Good game. Yeah, drop that, GG. Listen, man, you got mutual respect for the chat. I appreciate you. You didn't get banned. You better drop that, GG. You showed love. You are a part of it, baby. That's what I'm talking about. Way to hold it down. Amen. That's what I'm talking about. I see you too, Twitch. Members, non-members, stream alerts. Way to hold it down. That's what I'm talking about. Amen, baby. Man, you threw in a dono. You didn't have to. You showed love. You didn't have to, baby. You were in the game. You didn't have to, but you did, baby. Good game. You liked the video. Amen. I see you, Twitch. Let's go, baby. GG. Good game, baby. That's it. That's it. God willing, I'll see you in the morning. We'll be live early. Good game. Good game, baby. GG. I need me to rock. You won't see me a lot. Monday through Friday, you need me. Let's talk. Huh. Yeah. Oh, this plays next? All right, let it ride, Chad. That's the day, though. Thank you for being here, baby. Thank you for your time. For real, man. You didn't get banned. You showed love, baby. You liked the video. Thank you, my friends. Amen. No watch list tonight.
That's me. You could just call me JB. I do not answer no questions. You could leave that to Shaki. Camilla riding with me. She'll lock you up for some weed.
There you go. I posted the long term too. Just in case. It's here, baby. Let's go. Watch list. It's the you watch yesterday's. I just want to see my bobblehead. 500 mil to Ukraine every day. Javelins keeping them safe. Fuck it. All right, ladies. Oh, that's not even the right one. All of my bros and they old. None of their borders is closed. All of us got comic. Look at this bobblehead. Straight together, strategically releasing the ore. They said that Putin won't fold. They in my cabinet no more. Fuck the squad, fuck the foe. Had a 9, fuck a roll. Now we going practical. Hunter my dog, that's for sure. We ain't gon' fight about shit, especially not 10%. We ain't gon' fight about hoes. Me and Nance get the votes. Lobby that shit on the low. I got Congress in control. I got your student low froze. I got your mortgages froze. I got Keystone on froze, but mention and cinema froze. I'm getting faded, I'm eating this ice cream. I don't like voters who ID. Questions from press, that's unlikely. Bring up Trump if they don't like me. They give me the Eddie, I wake up. Passing bills, that's a layup. I'm the big man, I got say so. They lock you down if I say so. Booster on booster on booster. Mandate on mandate on mandate. I just gave Evie a test rate. Fuck you, Elon, I won't even say your name. Came in the office already ballin'. Silent just change my name to Stalin. Right off the screen and I'm gone with the wind. Do nothing about something till they pass a bill. Pull up in a brand new Benz truck. Hop up fresh to the bread truck. How I got it, how to just, yeah. How I gotta make it one car. Station on your block, took off. Mixing up my words, I'm live. So I think they mad. My fault, talking about inflation. I caused dumping our oil, turned me to a savage. $1 saved on a gallon. Fuck OPEC and King Salmon. And fresh, I'm tired. This is Oval Office freestyle. I love the image, man. It's a good one too, bro. It's a classic. It's actually not even that old, but it's a classic. It's a classic, bro. It's a classic. Yeah. You know what I'm saying? Amen. So, Chattadonia, that is the day. I hope you enjoyed it. It was a very, very wild one. Very, very wild one. We're going to have way more tomorrow morning. I will be live an hour before the bell. I'm going to try. I'll see if I can do a watch list, but we have co-real estate tonight. It's not public. I don't know unless you reached out to co-real estate. They may let you in, but that's up to them. But at the same time, I will be here in the morning, and we'll see where it takes us. And after tomorrow and Friday, bro, it really starts to heat up. We really start to get some action, baby. You know what I'm saying? So, Chattadonia, I love you. God bless you. Thank you for being here. That is all I have for you. That's all I have, man. That's it. Go read the books, Richest Man in Babylon, Proverbs New Living Translation, and The Strangest Secret in the World. Fill out that prayer request wall. Check out the watch list and any of the other links. Some of you may need the stream alerts, but either way, I love and appreciate you all. Thank you for your time, and don't forget why we're here and why we keep going, why that faith, hope, and love ain't never going out of style, why we measure our life based off of the compass and not the clock, baby. Why, baby? Why? Finger to the sky, baby. To God be the glory, and through the grace of God alone. Amen. Amen. So, Chattadonia, I love you. Be at peace. Be blessed. Enjoy your day. I will see you tonight or tomorrow. We'll see either way. Either way, in the morning, 1 hour before the bell, we will be live an extra hour earlier. And that is all. And peace. Hey, stop it. Come on, let me get in there. Come here, let me get in. Come here. Can we listen to it again? I'm going to listen to it again. I like that song. It's a good one. It's funny. Yeah, I know. I don't know. Wait till I come out. I can't even vote in peace. They don't feel me. I know. Fake news media. They turned on me.
I mean it. Hey.
Goodbye, Chad. Goodbye.
4 p.m. At 4 p.m. is when I wake up, bitch. Hey. Shout out to Percy, that's me. You could just call me JB. I do not answer no questions. You could leave that to Shaki. Camilla riding with me. She'll lock you up for some weed. Say bad things about the vaccine. I'ma make sure you don't speak. Got a laptop you won't see. Hunter, I love her, but that shit was weird with his feet. I love my congressman trade. Shout out to Nancy, she paid. Double your gas in a day. Them must say Putin's to blame. Real politics in your face. 500 bill on the way. 500 mil to Ukraine. Every day. Javelins keeping them safe. Fuck it, just send them some planes. Tell them keep growing them grains. All of my bros and they old. None of their borders is closed. All of us got climate goals. All of us straight together. Strategically releasing the ore. They said that Putin won't fold. They ain't my cabinet no more. Fuck the squad, fuck the foe. Had a 9, fuck a roll. Now we going practical. Hunter, my dog, that's for sure. We ain't gon' fight about shit. Especially not 10%. We ain't gon' fight about hoes. Me and Nance get the votes. Lobby that shit on the low. I got Congress in control. I got your student low froze. I got your mortgages froze. I got Keystone on froze. But mention and cinema froze. I'm getting faded, I'm eating this ice cream. I don't like voters who whitey. Questions from press, that's unlikely. Bring up Trump if they don't like me. They give me the Eddie, I wake up. Passing bills, that's a layup. I'm the big man, I got say so. They lock you down if I say so. Booster on booster on booster. Mandate on mandate on mandate. I just gave Evie a test break. Fuck you, Elon, I won't even say your name. Came in the office already ballin'. Silent just change my name to Stalin. Right off the screen and I'm gone with the wind. Do nothing about something till they pass a bill. Pull up in a brand new Benz truck. How about fresh I did a red shirt. How I got it, how to just, yeah. How I gotta make it one car. Station on your block, took off. Mixing up my words, I'm live. So I think they mad, my fault. Talking about inflation, I caused. Dumping our oil turned me to a savage. $1 saved on a gallon. Fuck OPEC and King Salmon. And fresh, I'm tired.
Alright, turn it off. Exactly, turn it off. I'm going to file a decorum. They've never said the violation of decorum for Mr. Kennedy. But if you ask about Biden going a little cuckoo, they're going to ban you. Can you believe it? I can. Exactly. Have a wonderful evening. I reclaim my time. Goodbye. Strike that from the record. Now.